If you feeling like a pimp, nigga, go on, put your shoulders off. Ladies is pimps too, go on, put your shoulders off. Niggas is crazy, baby, don't forget that boy told you get that. Turn up your shoulders, I probably owe it to y'all. Probably be locked by the force, trying to hustle some things. That go with the Porsche, feeling no remorse, feeling like my hand was forced. Middle finger to the law, nigga, grip on the ball. Said the ladies, they love me, from the bleachers, they screaming. All the ballers is bouncing, they like the way I be leaning. All the ballers is bouncing, they like the way I be leaning. If you feeling like a pimp, nigga, go on, brush your shoulders off. Ladies is pimps too, go on, brush your shoulders off. Niggas is crazy, baby, don't forget that boy told you get that.
That my best friend, she a real bad bitch, got her own money. She don't need no nigga on the dance floor. She had 2-3 drinks, now she twerking. She throw it out and come back in. My best friend, she a real bad bitch, got her own car. She don't need no lift in a strip club. No, my girl gon' sit, now she twerking. She throw it out and come back in. Is that my bestie in a taxi? Fresh blowout, skin on town, she pretty. Bitch, you look good with a T at the end. I'm a hyper every time, now my motherfucking friend. She been on with a sweet like bitch, guess what? All the rich ass boys wanna fuck. I just ass sitting up, cause look, don't touch. And I'm bad, bustin' bands every time we make up. That my best friend, she a real bad bitch, got her own money. She don't need no nigga on the dance floor. She had 2-3 drinks, now she twerking. She throw it out and come back.
Call me when you need. Sicker than your average. Sicker than your average. Call me when you want. Call me when you need. Call me in the morning. I'll be alright. Sicker than your average. Sicker than your average. Call me when you need. Call me in the morning. I'll be on the way. Call me when you want. Call me when you need. Call me out by your name. I'll be on the way. You don't even have to try. You're cute enough to fuck with me tonight. The table all I see is sweet and white. You living the life, nigga, you ain't living right. Cocaine.
Good morning, traders. What is up and what's going on? Happy Money Tuesday. Yeah, I said it right, Nick Cummins. I said Monday earlier. I know it's Tuesday, right? But I'm fired up. I'm ready to go, and I'm ready to hit it hard today, team. So once again, good morning. Happy Money Tuesday. It is December 14th, 2021. We are getting very, very close to a brand new year full of brand new opportunities, baby. I cannot wait. 9 o'clock in the morning. How are we doing today, guys? Hit me with a big old good morning. How are we doing? Are you guys excited? Are you guys fired up? Are we motivated to crush it today in the stock market? Texas, what's up? Let's go for Big Money Tuesday. I'm ready, baby. I'm ready. Ron, good morning. Merlin, good morning. Real Lil Spaz, Nick, Cashman, Mexoids, Placid Puppy, Angel, J May. Woo! What's up, guys? Good morning and happy Tuesday. Everybody over on YouTube, what's up, traders? How we doing today? Hit me with a good morning. PXS, welcome back. Welcome back. Happy to have you here. Joey, Rebecca, what's up? And we got everybody over on TikTok as well. Good morning. Good morning, guys. Happy Tuesday. We're about to dive into everything, get all fired up, and see where that opportunity is for the day, team. And I think we pretty much landed on the opportunity. I think so. Jakey Lakey, my man. What's up, Jakey Lakey? If you don't like that, tell me, and I'll keep calling you Jakey Lakey. No, I'm kidding. I'll stop. Clara. Carla, good morning. Diego, what's up? Everybody over on TikTok, come on over to YouTube. See my charts. You get my face as well, and we're all set, ready to rock and roll. Joe, the art, Carby Corey. What's up, guys? All right. We got about 29 minutes till the market opens. If you guys were here around 8:15, we already pretty much broke everything down as far as where the best opportunity is, where our focus is for the day with penny stocks and with larger cap stocks as well for options. So we're not going to waste any time. It's all good, brother. Joshy Poo. You can call me Joshy Poo. Jakey Lakey. All right, guys, we're going to dive right into it, and we're going to talk about where the best of the best opportunity is for today. And if we have some time, I'll definitely review some of your guys' stocks, tickers as well, to get you prepared for the day. So let's go ahead and break this down one by one by one. Number one, the number one stock we're watching today is GRTX. Now, why are we watching GRTX as our number one stock? Well, the news is awesome, right? The news is really, really good. The technicals on the daily chart look great. High relative volume, low float stock. It doesn't get any nicer than this. GRTX is up 119%. It's trading 31 million shares today, guys. On average, it trades 3 million. So we have high relative volume. It's a low float stock. 10% of the float is short. So nothing substantial, nothing crazy. But at least we know that 10% of the float is short. That means 1 million shares are possibly currently short on GRTX. Again, this is prior day data here with Trade Idea. So we at least know yesterday at the close, 9.79% of the float was short, which is roughly 1 million shares. Now, why is GRTX up almost 120% on the day? One of the best press releases we can see with a stock. So they announced primary endpoint met statistical significance in top-line data for their phase 3 trial. So not only do we have phase 3 trial keyword in this press release, that's a 3-star keyword. We have meeting their primary endpoints. This is one of the best press releases that you can see in a stock. So GRTX, guys, it's meeting all of the criteria. It's exceeding our expectations for what we look for in a watch list worthy stock. Absolutely beautiful. And then when we look at the daily chart, it's even better. It's even better. Look at this big gap that we have to fill. The stock was around 722, gap down to 255. Left this massive gap here on the daily chart. We broke above the gap down, spiking high right around 255. So old resistance at 255 will now turn into new support. So at the lowest, we could see GRTX back down at 250. But how much room does it have to the upside, right? Well, we have to look at the daily chart. Yes, we know that it has potential to fill the gap up towards around 722, and that's right around where the 200-day moving average is at as well. But there is going to be a few other areas of resistance along this move higher if we actually indeed get this nice big move to the upside. We have this low on the daily chart around 561. That's going to be a level. We have this low at $6. That's going to be a light level of resistance. We have these lows around 650 and 690, $7, right? Right around these lows. And then the main target is the gap fill level right around the 200-day moving average as well. So right now, guys, it's safe to say that pretty much 80 to 90% of our focus, right, should be right now on GRTX until we possibly see traders leave GRTX and maybe shift to another stock. But right now, guys, the press release is amazing. The volume is fantastic. The flow is very, very low. Overall, this is a great stock to keep on watch. And then when we do our due diligence and we look at the technicals, it gets even better. There is so much room to the upside. GRTX, for now, is going to be the #1 stock we watch right out of the gate, guys. Okay? Moving on, number 2, we have XCUR. This is a simple dead cat bounce, right? So this stock has been beaten down pretty well for a very long time. It just hit a new low of 27 cents. Why are we seeing the stock bounce up? It's called a dead cat bounce, right? It's a dead cat bounce, right? Every now and then when we hit new 52-week lows or new lows, every now and then we see the stock bounce. That's exactly what we're seeing here on XCUR, is a simple dead cat bounce. If this stock can re-break 40 cents, right, we have room back up to 50 cents. Now that's 20%, okay? So what we need to do is just look to see if XCUR sets up, possibly re-breaks 40 for the nice leg up towards around 50 cents off a simple dead cat bounce opportunity, all right? So we'll be watching XCUR as well. CSCW, right? CSCW signs a cooperative agreement with BABA, Alibaba. During the World Expo 2020 in Dubai, December 25th and the 26th, they're going to join hands in this multicultural event and explore potential in-depth cooperation, okay? So we have some news here with CSCW, right? Not the best news, but there's news. And look at how traders are reacting, right? Nice little pop to the upside, and then just giving absolutely everything back. But we should still keep it on watch because there is some news and there is some volume here with CSCW, all right? We have yet to trade more than the average. We're trading 4.6 million shares. On average, it's 6.3 million. And it's a very large float stock as well. It's 124 million in float. But it being a sub-dollar stock, the float is kind of irrelevant, I guess, because it doesn't take as much to get a 50-cent stock moving compared to like a $50 stock, right? A $50 stock with a large float takes a lot more capital to really get it moving. A cheap stock like this at 50 cents, even though it's a high float, it doesn't take that much capital and that many shares to really start seeing the stock move, okay? So we do want to watch CSCW above 45 cents. In a perfect world, 47, but I'm looking at 45 to 47. And hold that level on up. We could see a decent little bounce here on CSCW, right? We could see it back up towards around 57, and who knows, maybe back up towards around 69 cents to retest that pre-market high. But here's the thing, guys. Right now, we know where the focus is. We know where 90% of traders are currently at. And 90% of traders are currently on GRTX. So what we have just listed, right? We listed XCUR. We just talked about CSCW. These are some back burner stocks, all right? These are back burner stocks that could see that shift of focus from GRTX to one of these. So again, right now, we're watching GRTX out of the gate, right? That is our focus. As long as GRTX is holding on up, that's where we want to be. Now, the second we start to see GRTX lose that steam, lose that momentum, lose the focus, That's when we're going to be looking at maybe XCUR to see if that one starts moving. CSCW, see if this one starts getting some attention and some focus. Maybe it's NES, right? Could also be NES, guys. So NES was one of our big movers yesterday from around 150, 160, all the way to 340, just to give everything back right in power hour. That last 2 hours of the day, giving everything back and closing at 181. We are gapping up a little bit here in pre-market, though. We are right around 211 here in pre-market. We have this really big downtrend off yesterday's highs that we're looking to break above on NES. Not only would that be a break of a downtrend, it would be a break over the VWAP, and then it could also be a break over 250, which was a lot of support yesterday here on NES. So I'm looking for a break of the downtrend, a break and hold over VWAP, and a break and hold over 250 as well. Now, if we can see that take place, we have room back up to 3 and then 330 to 340 on NES. Once again, on the back burner, we need to watch GRTX. When we start to see GRTX fade and fall, if that happens, that's when we could see some activity here on NES. But at least we know NES has potential. These are the technicals. We're at least doing our due diligence to get prepared just in case we start to see volume move in to NES, okay? And then last but not least for penny stocks today is going to be MIND, M-I-N-D. So MIND, Cooperative Research and Development Agreement with the United States Navy. So anytime we have any kind of agreements, anything like that, right, with the United States government, with the United States military, these stocks typically do very, very well. This was news from last night on MIND, and we can see the stock ripped from 140 to 224. Now, yes, it has not done anything here in pre-market. It is slowly fading on back down, but I do like the news on MIND. It has high relative volume. On average, it trades less than 200,000 shares. They were trading almost 5 million. So high relative volume. It's a low float stock. It could definitely move, but right now it doesn't have focus. It doesn't have the attention. We are trying to hold above some of this daily support, right? We had some support around 165. We had some resistance around 165, and we have our 50-day moving average right around 165 as well. So I'd really like to see if... What's up, kiddo? You gonna give me a hug? Come here. One sec, guys. One sec. I love you. Give me a kiss. Have fun at day. Feel better? Oh, it's a music. No, because I like chill music. Your feast. I have a good day, okay? Make me a picture. Yeah? Thank you. I love you. All right, sorry about that, guy. Actually, I'm not sorry. But let's get back to it, all right? Let's get back to it. So I do like MIND. They do have that development agreement contract with the United States Navy. We had some initial hype with MIND. And, I'm curious to see if the stock can stay above that 165, 167 level. I mean, on the daily chart, that's a pretty decent level for us to stay above. And if we can, we could easily see this bounce back up towards around 196, the $2, and then possibly start retesting some of these prior highs around 212 and 224. All right, guys, so I do want to add MIND to the back burner watch list as well, just to see if we can stay above that 165. And if so, this one has some good opportunity. We could see a break of this downtrend as well. And if we see that take place, maybe we have some opportunity here as well. But we all know where our focus should be to start the day. Our focus should be here on GRTX. All right, let's talk about options for the day. All right, so options for the day. Well, first and foremost, I mean, we just absolutely destroyed NVIDIA yesterday. I just want to throw that out there. We absolutely destroyed NVIDIA off the crack of 300 right on down to our 289 target. This thing dropped even lower than I was expecting. I was expecting, that $10, $12 drop. We got it. But then it dropped another 8 points to the downside on NVIDIA for a whopping $20 move to the downside yesterday. Absolutely amazing. Saw that coming, and we took advantage of it. So today, I'm watching NVIDIA above 267. 267 is this gap fill. It's right around that 50-day as well. We could see this stock gap down like we are, see it come down to 267, fill the gap, start to bounce, and we could see the stock close above the 50. And if that takes place and we see that play out, we could definitely see a short-term reversal and a little bit of a bounce coming into the end of the week here on NVIDIA. So NVIDIA, I'm watching this down towards around that gap fill level, around 267 for a possible bounce opportunity, back up over 270. I'm watching AMC today for a bounce off 20 bucks. So here's what I'm looking at on AMC. Couple things, right? Number one, resistance. Number two, our massive breakout point over $20 over that prior high of 2034. I'm looking for a solid bounce today on AMC right off 2034. I think we have room to grab maybe $2 to $3 out of AMC today off this bounce. I mean, this stock is getting absolutely beaten to the downside, right into a key level of new support, and it's an imbalance area, right? There's a lot of order imbalance. I mean, we just had a lot of volume really just shoot through this level, and it's $20 natural support as well. So I would definitely like to try and catch a bounce down towards around 20 to $20.34 here on AMC today, or maybe a 1 or 2 day bounce back to the upside. All right, Roku. I do like Roku. Last week it gapped up off very good news, and since then it's been pulling back. But what has the stock been doing since it's been pulling back? Decreasing volume pullback, number one. That's telling me that sellers are being depleted from Roku as the stock is falling. We could see buyers start to move back in. And why would we have buyers potentially starting to move back in? Well, we have this massive gap that we are currently filling. When we fill gaps, sometimes we bounce, and it could be a multi-day bounce to the upside. So today, I'm looking for a gap fill reversal here on Roku. All right, we could come as low as this other little gap right there, right? That other teeny little gap right around 210, right? We could see that, but I am watching it somewhere around that 210 up towards around that 216 level. So somewhere in this level, I expect to see a nice bounce. I expect to see some market structure intraday, and I think we could get a nice multi-day bounce here out of Roku off a simple gap fill bounce reversal strategy here on the daily chart for a possible day trade and maybe even a multi-day swing trade here on Roku. So watching Roku today. Walmart. Let's go ahead and call it what it is. We crushed this one yesterday as well, from over the 200-day moving average right up to the 50. We're looking to crush it again today on Walmart. Over 144, right? So same approach as yesterday, breaking over those key technical levels. Look to go long up to our target. We hit target to the penny. Today, over 144, we can expect to take this long up towards around 146.51. So a break over 144, we have about $2.50 to the upside. I do think we have enough juice left in us, right? Looking at the volume increasing over the last 3 days, very strong closes. Those candle closures telling me that this move may not be done yet because we closed at the top end. Overall, I think we have enough juice left in Walmart, get to that 146.50 before we actually start to see that much needed pullback that we're going to need to see here on Walmart. The only thing that can be a little concerning is the downtrend here, right? That's the only thing that's slightly concerning is, yes, we have room to 146.50, but we also have this downtrend that's falling right around 144.50. So if we see this break 144 and it's struggling to break this downtrend, we may need to go ahead and get out of that trade for a small profit or maybe a break even if we're seeing the struggle to break the downtrend after it breaks 144. So just be mindful that we have a massive daily downtrend that could be an issue for Walmart to get above. But if it's no issue and we see it break, boom, we have room to 146.50 there on Walmart. And again, we're just looking for the stock to be above the 50-day moving average, and it looks like we still have some juice left in it. Proud, CRWD, Same approach as Roku. We're looking at a gap fill bounce play with a possible reversal. Now, I do like crowd better. And the reason I like CRWD better is we put in a doji yesterday once we filled the gap. We came down to the penny, right? Filled the gap, bounced, and we put in a very nice doji on an increase volume day. When we see dojis like this, right? Those are spinning top dojis. Those are signs for possible reversals. With volume and oversold conditions, this is a great setup to see a possible multi-day bounce here on CRWD, right? So not only is this a gap fill bounce approach, we also have a reversal signal, which is the doji, on a nice increase volume day here on CRWD, all right? So I do want to definitely keep CRWD on watch. I expect to see this back up towards around 204, 205, and then up towards around 210 here on CRWD. These are all long, right? AMC long, Roku possible long, Walmart and crowd long. Now I got a short for you guys. I got a possible short. That's on the lows, right? I want you guys to tell me what you see. What are the two things that you see here on lows that signal a possible reversal to where this could be a great short today and moving into the next week or two? What do you guys see here on lows? I want to make sure that you're catching on, being inside a chat every single day. What are you noticing here on lows? Corey, RSI divergence on the daily. Number one, there are two things that I see. We have divergence. RSI is making lower highs while the stock is making higher highs, right? So number one, we have divergence on the daily. That is a reversal signal. And we have a massive bearish engulfing candle, right? And it was on a higher volume day than the previous day. So we have a larger spread on heavier volume compared to the prior day. And that red day yesterday completely ate up the prior day. So pair the bearish engulfing candle on a decent increase in selling volume and pair that with your RSI divergence and then pair it with the stock is freaking overextended, right? This stock is overextended. This stock needs to pull back a little bit, right? So I do like lows to the short side based on those reasons, okay? So I would look to start getting involved with lows, I mean, right when the market probably opens. As long as this stock is staying below 256.28, yesterday's lows, and that spiking high from November 22nd, I'm looking to get short on lows. And I do believe we have some room down towards around 253.39, and then possibly down towards around that 20 EMA right around 250. Hey, it may take a couple days for that to happen, right? It may not happen all today, but at least down to that 253, 254, I think that's realistic today. And who knows, maybe we see another big red day like yesterday where we could actually see the stock falling down towards around that 250 level. I do like lows. I think this one has a lot of great potential to the short side. And right now, this is the only stock that I see that I want to possibly short for options, right? AMC, I definitely want to try and catch this one long at support. I want to try and catch Roku at support for the gap fill. I want to try and catch Walmart for another day of momentum to the upside. Crowd for a nice little reversal off the gap fill as well. But lows, looking to be a possible good short today here on LOW, right? So just to recap, AMC, Roku, Walmart, Crowd, and lows. Those are going to be the 5 stocks I'm watching for options today. Not really focused on Pfizer. Not really focused on Pfizer today. Just those 5 stocks I listed. To recap, GRTX at this point in time is our number one penny stock. This is where 95% of my focus is going to be the first 10 to 15 minutes. I'm just going to sit here and watch GRTX. I'm going to watch lows off to the side and maybe some of these other stocks off to the side for options. But here on the live stream, this is where our focus is going to be, okay? Back burners today, right? Back burners that could see volume and traders move in, especially if we see GRTX start to fade and fall. Be watching Mind, MIND, back burner, right? NES, another one, back burner, and CSCW, back burner. But to start our day, it's GRTX. Team, we have about 4 minutes and 50 seconds to go. Do you have any other tickers you want me to review? Yes, I do trade on live. I do trade live. I show my P&L, call out trades, enter trades, all that good stuff with you guys live. So that's Alpha Day Trading here on YouTube. Go to YouTube, Alpha Day Trading. Today is going to be our free of the week. All right. So that's what we got, what we're looking at today, guys. All right. Are we prepared? Are we fired up? Are we ready to go? Are we on the same page? All right. If you guys have any other stocks that you're like, hey, what about this one? What about that? Please let me know. Roblox. Let's look at I was looking at Roblox this morning, and I didn't see enough to put it on my watch list. Right? So I didn't see enough to really feel like I wanted to put this on my watch list. The one thing that we do have is that big downtrend that we are still getting rejected off of. But we do have support on Roblox right around that 110, right? We had some support, got back above. We tried the hold yesterday, but we are actually gapping down here quite a bit on Roblox. So right now, I can see Roblox having some room down to 104 in, right around 104, before we maybe see a bounce, right? Off of the low from December 6th, off the low from November 16th, the low from November 15th, and then the high from November 10th. So look at how many times we've hit this 104.10 level, and we've either been rejected as resistance or we've held on up as support. So the simple fact that we're down below that 110.50 on Roblox, we're down below 110, I think we see this come down to 104 before seeing another bounce, right? So right now, out of the gate, I wouldn't really touch Roblox. I mean, it's right in the middle of resistance and support. It could pop right up to resistance, get rejected. You could short this down to 104. It could open up and drop to 104, and you could go long up to resistance. But right now, since you're right in the middle of support and resistance, I wouldn't touch it. I would look to see if we get a nice bounce off 104. If so, you can take it long back to 110, or see if it opens, pushes the 110, and we see that resistance setting in, and you can look to short this back down to that 104. All right. Right now, you do have a nice little downtrend on Roblox from yesterday. So from yesterday's highs, downtrend, yesterday's close, downtrend here in pre-market, downtrend. So right now, it looks bearish. Right now, I do think it has high odds of coming down to 104 before seeing a bounce. Okay. ARNA for a mid candle. We got 2 minutes to go. ARNA mid candle. I do not see anything on ARNA mid candle. On the daily chart, I just see the stock gapping up yesterday. It looks like it was acquisition news. ARNA. I don't know if that's the wrong ticker. SEAC. SEAC. This would be a good candidate for a mid candle tomorrow. SEAC would be a great candidate for a mid-candle breakout tomorrow, the way that it's currently gapping down right into the middle. So yeah, Sam, good eye on this. Definitely a big mover into day yesterday. I think this one has great potential to not really do too much today and set up for a possible mid-candle breakout. But if we have potential today, Sam, you're looking for a break of this downtrend for the next leg up into the 180s. But I do like this one a lot for a mid-candle breakout. So I'm kind of rooting that no one's in it, so I can root to see the stock set up for a mid-candle and do nothing today. And then Apple, got about a minute to go. AAPL. You know, I wasn't really looking at Apple either, right? Because Apple's very overextended. Nice rejection yesterday around 182. That was one of our Fibonacci extension levels, right? We got rejected right at the 138 Fibonacci extension, and we just got absolutely beaten to the downside. We do have support here right around 174 though. I mean, with such a massive day to the downside yesterday on Apple, you're talking $7, right? That's a big move for Apple. We could see a little bit of a bounce, all right? So as long as we're above 174.70-ish here on Apple, I think we could see a nice little bounce back up towards around those lows from yesterday right around 177. But if we crack below this low of 174.70, you're looking to come back down towards around 170.69. We got 5 seconds to go, team. Get fired up. Get motivated because we're crushing it today, team, and we're going to hit it hard. So once again, Apple above 174.70. You have room to 177. If we crack below that pre-market low, I would expect to see Apple fall down to 170.69 on Apple. All right, so GRTX, guys, like I said, out of the gate, I'm watching GRTX. Off to the side, I am going to be watching some of these other stocks for options, right? So I'm going to be just kind of scanning through, like, AMC, which already bounced at my 2034. I missed the bounce. Roku, around that 210, could be a great bounce. Walmart, looking like it's going to try and break. We got Crowd as well, and Lowe's. Right now, I'm watching GRTX. This is my number one stock that I'm watching right now at this point in time, team. And honestly, this double bottom is very tempting to get long on. That double bottom is very tempting to get long on. If we break above 3, I'm going to start building a small position. I think GRTX has a lot of great potential to the upside to possibly fill that gap. To possibly fill that gap there on GRTX. So right now, I'm gonna work with GRTX, and I'm gonna see if we can build a nice position, maybe a scale in, scale out approach here on GRTX, just because of everything we talked about with the news, the float, the volume, technicals on the daily. I mean, this stock to me has a lot of great potential. 50-day moving average is at 295. I got to start a position, guys. I got to start a small position. I'm not going 1,000 shares, 2,000 shares as a starter. I'm going 250. And I'm going to work with this one throughout the day. I think this one has a lot of potential. It's not going to go right to $6 in the first 30 minutes. It could take a few hours. But I think, based on where support's at 250 and what we look like in pre-market, looking at the news and everything else, I think there's a lot of great potential on GRTX to apply a scale in, scale out approach. So I scaled in with about 250 shares of GRTX, and I will continue to scale in when I see the opportunity to do so. Is low spreads pretty bad? Yeah, they're not the best. 50 cents? Yeah, 50 cents spreads on lows. Keep in mind, today, team, we have a Fed meeting today. Look at the AMC bounce right off my 2034. That's unfortunate. That's unfortunate that I missed this one. That was a really good trade, guys. I was really liking AMC, but hey, it happens, right? Keep in mind, we do have the Fed meeting today. Okay, we do have a Fed meeting. We could see the markets react in a violent way. I mean, the Qs are gapping down today 1%. The SPY's gapping down 0.6. So right now, the markets are down over the last 2 days this week. And we do have the Fed meeting today. All right, so we could see the markets react abruptly, whether that's in a positive way or a negative way. So we should be prepared and mindful of the Fed meeting, especially if we're in any other position, right? If you're long on NVIDIA and the SPY starts dumping, maybe you shouldn't be long on NVIDIA, right? If the SPY's dumping and the markets are dumping, right? So just be mindful of the Fed meeting. I'm long GRTX right now. I'm going to scale in, scale out, little by little by little. Right? I think we have room to like $5.60, $7. The low float stock, it has really good news and really good volume. Let's see if traders can really start to push this bad boy to the upside. Daniel, absolutely. Thank you for all you do to help all of us. 100%, Daniel. That's why I'm here, to help you guys out. So absolutely, my man. Absolutely. We don't have anything yet. The only thing that's coming up right now is Walmart. That's the only thing that could be setting up for us over yesterday's resistance of 143.74. So keep your eyes on Walmart, as it does have some good room up into the 147s today. I think it still has some juice left in it. Roku's bouncing a little bit. We got Roku bouncing here a little bit. Back above 216. I like Roku. Back above 216. VIX is up a little bit today. The Qs and the SPY again are down. So right now, you know, Lowe's is a pretty hard one to get into because, again, the spreads are a little out of whack, right? So right now, the spreads are a little wacky on Lowe's. Crowd, not really holding on up. Walmart's getting there, guys. Walmart and Roku. Right now, those are your top two out of our watch list. Walmart number 1, followed by Roku for possible entries coming on up. All right, so I'm watching Walmart for a possible entry. Need to make sure that we can actually stay above that 143.74. That's the key level from yesterday. As long as we're trading above that 143.74, look okay. So we actually broke above the VWAP on GRTX. That's good. We actually had a nice little pop in volume. We actually had a solid candle close above VWAP. We may have that 9 EMA starting to cross the VWAP as well. So I think that may be a good time to maybe add to my position. So I'm going to add to my position here on GRTX. We are slightly above that 305 level as well. So if you look at that 305 level, it was a pretty decent level, right? So we had a lot of support, actually a lot of resistance here, right around 305, 307 in pre-market. We bounced, we lost it, and then it turned into resistance, and a lot of resistance right here out of the gate, right? Now that we're back above resistance, that may turn into new support here on GRTX. Not only that, but we have our VWAP right around that 307 as well. So I do like this level, and that's why I went ahead and added to it, because we had a lot of prior support and resistance. We just broke above that level, and we are above our VWAP as well. Now, like I said, this is something that I'll probably work with for a good majority of the day. I could expect myself to be in this trade for a couple hours. If you guys are watching NES over 250 is where we want to see this go. We want to see NES over 250 and holding above $2.50. If we can see that here on NES, we do have room back up towards around 305, right? 304, 305, and back up towards around 330 there on NES, all right? Other than that, at this point in time, I don't see anything else with our larger cap watch list besides Roku, which I feel like I kind of already missed that. Nothing with Walmart. CRWD, most likely, guys. CRWD dropped below that 194.70 momentarily. We got right back above that level very quickly. So I am looking for a CRWD trade coming on up. CRWD. Above 194.70, I do like CRWD. In CRWD, I can see this bouncing back up towards around 204. Maybe right around like that 202 to 204 level here on CRWD. So right now, if you guys are looking, go for like a 205 strike, right? If you're looking here, go with a weekly expiration on CRWD, weekly expiration. We have a room target to like 210, so I mean, look for like a 30 delta. We add the delta in here. I would be looking for maybe this one right there. You like a 205 strike, but oh, the spreads are bad, guys. The spreads are very bad. Never mind, scratch that. You're not getting into CRWD. There's no way you guys are able to get into options on CRWD. Those spreads are horrendous. Those spreads are horrendous. Even if you go out 9 days, the spreads are very bad on CRWD. So CRWD is not tradable for options. Those spreads are really bad. And like I said, GRTX, I don't think it's going to be an all-in, all-out. It's not an all-in, all-out approach for me. This is something that I see the news, I see the potential on the daily chart. This thing may start firing to the upside at like 11 o'clock. But right now, I do want to build a little bit of a position here on GRTX because I do think GRTX has a lot of great potential, guys. I really do. Just looking at the daily chart, the news, the volume, I mean, hey, I could be wrong. But I think throughout the duration of today, I think GRTX has really good potential. And I think it's a stock that I need to be very, very patient with and work with this stock and give it time to actually work on out. So that was kind of my thought process before I even entered the trade. Is this is going to be something that I scale in, scale out of throughout the day. Just no real movement yet, but anything can happen. And right now we're starting to see some great action here, guys. Right, all the way back up towards around a new high a day of 320. So I only have 500 shares of GRTX. But I mean, on a $2 to $3 move, 500 shares is okay. I'll take it. I'll take it. I'm seeing a divergence on CRWD. And a little bit of a squeeze forming here as well. So we definitely want to be watching CRWD. But the only bad thing, guys, is those options are pretty much not tradable. Let's be honest. Those options are not tradable on CRWD. I mean, those spreads are just terrible. Terrible. So right now I have two positions. I have CRWD and I have GRTX. So I have CRWD looking for the break over the open here above 196. And then I have that position on GRTX down towards around that 308 level. And like I said, this is going to be something that I can see myself holding pretty much all day here. For a good majority of the day. Good chunk of the day. I can see myself holding them. Looking for a crowd over 197. You guys are taking equities. We're looking for the break here over 197 to get that next leg up. I'm running it very, very tight here on crowd because the spreads are about 50 cents. So if I start to see this falling back below 196, I am going to get out and look for a better entry because the spreads aren't the best. Right now, we're starting to see bids up over 197 now, which is great. We're up about $100 here on CRWD. Stops are still below 196 on this trade. Giving it about $1.30 of breathing room here. CRWD. About $1.30 of breathing room. Right now, again, GRTX is still holding on up. It's still grinding. Nice uptrend, pulling back into the prior high, trying to bounce here a little bit. Guys, this is a scale in, scale out trade. It really is. You don't have to jump in with 1 billion shares. You can jump in with 1 million and then add 1 million and add another million and then get to 1 billion, right? But you don't have to jump in all at once, guys. Okay, you do not have to jump in all at once. I'm not jumping in all at once. I'm scaling in. I'm scaling out on GRTX. At $200 on crowd, CRWD, at 200, I am going to lock up half my profit, put a hard stop at break even, and leave a runner. My cost basis right now on CRWD is 196.75. So my cost basis right now, which is my stop loss, is 196.75. I'm still in at 308 here on GRTX, guys. And this is going to be something you got to be really patient with, right? Really patient. Now, let's go ahead and maybe take our attention to something else that's moving. CPSH. All right, CPSH is slowly grinding on up here as well. ISSC halted. HUSN is halted. What's up with HUSN? Hudson Share Capital to merge with Freight App. So Hudson Capital to merge with Freight App. The stock is now live on HUSN. We are now live on HUSN. This stock has room to 445. Looks like I've charted the stock before. So HUSN has room up towards around 445, and there is a credible reason for the stock to be moving. It is a low float stock that has some pretty decent volume right now over on HUSN. But I'm still on GRTX. I think this is a simple trade. It's an easy trade. It's something that's going to develop little by little by little by little over the course of the day. You got your break of the downtrend on XCUR and a beautiful retest right out of the gate. Guys, we're watching XCUR. That was a decent little trade. Across the board, guys, there's not a lot really happening right now. There's really not. If you look across the board at all of our top gainers, you got HUSN with a quick little pump, a big old drop back down. CPSH. And this is a slow little grind to the upside here on CPSH. Reports a recent contract win resulting in 2021 orders to date, 37 million. So, I mean, right now, there's just not a lot of action with pennies. And honestly, it could be because of the Fed meeting today. I would honestly say that it's because of the Fed meeting is why we're not seeing a lot of action across the board right now. Right? So right now, GRTX, big old crack, big old fall. So again, anything can happen, but I'm still looking at the news being very good on GRTX. And overall, I think GRTX has some decent potential to the upside as long as it's above 250. But right now, there's it's pretty slow. You know, the only thing is we had AMC out of pre-market. I missed that during commentary. Roku, that one was right out of the gate on the first candle. That was a challenging one to grab. Walmart hasn't confirmed an entry yet. CRWD is starting to pull back pretty nice on me now. And Lowe's, the spread on Lowe's is still about 50 cents to $1. So right now, guys, we're only about 18 minutes in. But in the first 18 minutes, we're not seeing a lot of action, right? That's for sure. We're not seeing a lot of action the first, almost 20 minutes into the market. We have to be very patient, guys. Just wait for the best opportunity. Again, like I said, GRTX was not an all-in, all-out. It's not like I took 5,000 shares right out of the gate. I only have a 500 share position of this $3 stock. That's not a big investment. So I have 500 shares because I can let it breathe, right? 50 cents to $1 and be okay with losing, $200, $300, $400, right? Because I do think this is something that could take almost all day to develop. And I want to build a nice position. I want to scale in. If I get stopped out, I get stopped out, right? It's a part of the game. If I'm able to scale in little by little by little and really get a nice cost basis, if we can see traders really move in the GRTX, because once again, really good news, high relative volume. Overall, GRTX looked very solid, and I'm still okay with it. Yeah, right now it's down a little bit at 299. I'm not scared out of this trade yet, right? How many times have you seen a stock chop around the first hour of the day? right? And then boom, it starts blowing up at 11 o'clock. Starts blowing up at 10, right? How many times? Right? We're only 20 minutes in. Right? We're only 20 minutes in. This thing could come all the way down to 250 before it rips. Okay? Guess what? I can scale in even more down towards around that 250 level. I think it's 2 o'clock, if I'm not mistaken. Let's confirm that real quick. What time is the Fed meeting today? I thought the Fed meeting today was right around 2:30. I thought it was like 2:30. So again, I'm looking at the big picture on GRTX. And the big picture is looking at the daily chart, applying the news, applying the volume. Yes, out of the gate, it could be a little choppy. But how many times at 11 o'clock have we seen a stock just start ripping and running and it rip another 100% on the day? It happens. Anything could happen. I'm not saying this stock is going to rip today. This stock could close red. Anything can happen, right? It's never a guarantee. But when we do our research and we do our due diligence and we see the really good news, the high relative volume, the low flow, we take everything into consideration, right? And what we did this morning. I have like 80% odds in my favor, I think, that this stock could be a nice big runner today. It may take an hour to get it going. That's okay. It's okay. I'm patient. If I get stopped out, it's okay. It's a part of the game because there's going to be another opportunity out there that we can take advantage of to make that small loss back and put ourselves in the green. It's all about being patient. Right now, with a stock like GRTX, it really is a game of patience here and really letting this trade develop until it just looks like crap. When it's like, yeah, this doesn't really look like it's going to happen, walk away. But for now, we're only 21 minutes into the market, guys. My stops are under 250. Like I said, I'm going to scale in so I can really let it breathe, right? Not jumping in with 5,000 shares, jumping in with 250, another 250, just so I can really let this breathe. Like, technically speaking, I could let it breathe a full dollar to the downside and be okay with that stop loss. I think a stop loss under 250 is great. I would go as low as $2 just to really be patient and really give the stock some time. But again, that's my plan. Right? I built my plan with my position sizing based on my account and my confidence level and my conviction. That's why you guys have to build your plans as well, right? Your account's different. Your risk tolerance is different. Your conviction may be different as well. So everybody's going to have a different plan, different position, different stops. But overall, we still have the same idea behind GRTX. So across the board, market's slow. Market's very slow. Again, why is the market slow? Because we have a Fed meeting today. I mean, not just large caps, but small caps get affected as well. AMC is the only one that bounced right off our level. Beautiful to the penny, and it bounced $2. We said it had room to 23.24, right almost at $24 right now on AMC. So congrats if anybody got that in pre-market during that commentary session. We can see the markets are pretty calm right now. Pretty calm at the time. Pretty calm. So it's a game of patience right now in this market, guys. It really is. Today's it's a very calm, slow day. But yesterday was it was a good day. We had some action, but it was still a scale in, scale out approach. I scaled out of a lot of my trades yesterday, and that was a good approach with these market conditions. Today, definitely applying a scale in, scale out approach because I know a lot of you guys wanted to learn how to scale in and scale out of your day trades, not just go all in and all out, right? But kind of building a position little by little and then scaling out little by little as the trade develops. It's easier for me to give you guys live examples, how to do that. Real time, real market, right? Not just a PowerPoint. but actually working with this little by little by little on a real trade. All right. So right now, this is kind of what we're going to be talking about on Thursday. How to let stocks run, how to scale in and scale out of your day trades. And that's exactly what we're doing right now is we're scaling in, building positions, and I'm explaining why I'm scaling in when I'm scaling in, explaining why my stops are my stops and my mindset behind this approach. So in my opinion, this is the best way to learn, just like this. The ISIG is up about $2. Getting a nice little bounce here, right around that 1660-ish level. So getting a little bit of a bounce here on ISIG. Let's keep this one on watch. You're coming right into $20 resistance, though. You're coming right into $20 resistance on ISIG. So be mindful that $20 is very strong resistance on ISIG. Other than that, all of our other prior day movers are currently down. Right? Prior day mover list, we got about 20 stocks on that list. 4 of those 20 currently slightly in the green, and the one that's leading the board is ISIG. Just like that, we're back into the green here on GRTX. Again, being very patient with this stock, letting it work for us. $308. So my entry price is $308 on GRTX. I'm currently red on crowd. Still being patient with it, but I may have to start cutting a trade here coming on up on CRWD if it doesn't bounce back above 197. So right now we can see here, I'm up $60 on GRTX. Again, I only have 500 shares. I haven't added yet. And I'm down about $48 on CRWD at this point in time. So still being patient with it. Still looking at the chart, you know, and just working with the trade here, working with it. AMC, oh man, what a beautiful trade. Roku's getting a nice little bounce off the gap fill level, beautiful. Walmart hasn't set up yet. CRWD is still trying to get that bounce, guys. CRWD is still trying to get that bounce and fill that gap off a really nice little reversal formation from yesterday, that doji. So overall, I do think $200 is a great target. I'm in at 196. Then I think a 204 target would be next. So I am still holding CRWD. I haven't seen a reason to get out yet. Right now, for now, I'm still long CRWD at 196.75. And I am still long on GRTX at 308. 2 open positions, both slightly in the green. Very small positions on both. And the reason, again, I'm taking smaller positions as well today is because of that Fed meeting, right? The markets could be just random, not consistent, and really not make sense from a technical analysis standpoint. So I'm taking smaller position sizing, and I'm trying to scale in, scale out, and work with my trades today. So a break over 325 is we're going to see that next big pop of volume move in here on GRTX. So once we're breaking over that 325, we have a lot of potential to start really taking on off back up to those pre-market highs. Right now, we got about $200 on crowd, CRWD, still holding that position. Never a reason to get stopped out or to walk away. So we're still looking okay on crowd. Again, I do have a first target at $200. That's where I'm looking to take half my position. And still holding GRTX for now. I still have not added any more to this, but I may be doing so here momentarily. Again, ISIG has a lot of resistance at $20. Right, so this stock is moving on up. It's a prior day mover. Right now, you do have a lot of that resistance at 20. Now, if it breaks and holds over 20, guys, yeah, you could see another 250 move to the upside out of ISIG. But it's moving today on little to no volume. It's trading 700,000 shares on ISIG. 700,000 shares, guys, okay? Not really trading a lot of volume. It's just getting a light bounce off of yesterday's lows. That's all that's happening right now on ISIG. There's a new high a day on GRTX, 330. We're up about 30 cents a share right now on GRTX. Yep, new high a day, 335, 336. Today is a patient day, guys. Today is a different day, isn't it? You're like, whoa, Josh, what are you doing, bro? This is not like you. You're way too patient. You're way too patient. Come on, scalp the market, dude. Scalp it. Jump in with your 10,000 share. No. Patience today, baby. Patience. Let's see how high GRTX is going to go. I have a lot of, I wouldn't say hope, but I do believe that GRTX has a lot of great potential. My stop loss on crowd. Okay, my stop loss on CRWD is below 195. New high a day on GRTX, 141, 142. Hey, Wade, I like it. Dude, that's 10% return. Wade, in at 304, out at 332. Green is green, and green is good. Good job, Wade. Way to lock in that quick 10%, buddy. It's like the Dos Equis commercial. I don't always make 10%, but when I do, it feels good. So right now, we're still okay on GRTX. I expect to see it, obviously push up, pull back, push up, pull back. But on some of these healthy pullbacks, depending on how nice the pullback is, that's when I start building more of a position. That's when I start scaling in, is along these pullbacks, if they're nice, healthy pullbacks. Right now, we may have a slight ascending triangle formation here on CRWD. That's why I'm risking below the VWAP, risking below this trend line. I'd like to see if we can hold on up these higher lows and get that nice break over our intraday high up to 200 and then up towards around, I'm saying 204, 203.90, 204. Stops right now, or if we drop back below VWAP and if we crack the slide uptrend, that's where I look to get out of CRWD. I love that. Base hitters are in the Hall of Fame as well. You're absolutely right. What is a person's job when they're up to the plate? They're not going up there trying to hit home runs. They're not. Because if they go up there with the mindset, I got to hit a home run. I got to hit this home run. What are they going to do? They're going to put too much force into their swing, and they're just not even going to hit the ball. They're not even going to make contact with the ball. Their job is to get on base, right? Get on base. Get on base. Get on base. And if you do that consistently, guess what's going to happen? Every now and then, out of the park, home run. But their goal when they get up to the plate is to make contact with the ball to get on base. That is your job as a trader, is to make contact to get on base consistently. Every now and then, you hit a good trade out of the park, it's a home run. But you're not aiming for home runs all the time, because if you are, have just the wrong approach, the wrong mindset. And you're going to strike out more than you actually hit. Tick charts. I don't think tick charts for like day trading equities, but tick charts for Forex. I know a lot of people do tick charts for Forex and futures, but not necessarily for like day trading. Joey, thanks, Josh, for what you do here on YouTube. Absolutely, it's all about base hits, guys. Not a lot of people talk about this. They want to hype up home runs, and don't get me wrong, home runs are awesome, guys. We want home runs, but if you have the mindset of home run trading, you're going to strike out more. You are. You're going to be a break-even or a losing trader. If you have the mindset of base hits add up, right, and every now and then the market may reward you with a home run, you're going to be consistent, and it's going to make your job 10 times easier, right? Imagine having $2,000-$3,000 swings on trades, right? Imagine having $200 to $300 loss swings on trades. What's more manageable? $2 to $3 grand looking for home runs, or $200 to $300 looking for base hits, right? It allows you to suppress your emotions a lot better. It allows you to remain focused because you don't have negative $1,500, negative $300, only negative $200. You're able to work with the trade a little bit more. You're able to be patient and really looking for those base hits. Base hits add up, guys, right? $1,000 a day is $250,000 a year. $500 a day is $120,000 a year. If you're making around $400 a day consistently, in the moment, it doesn't seem like a lot, right? There's other people out there posting $10,000 days, $20,000 days. But what you don't see is when they have their $10,000 losses, right? With base hits, $300, $400, $500 days with occasional losses that are much more manageable, right? You're able to really control your emotions a lot better with just looking for those base hit trades, guys, versus home runs. And it's sad because people say like 10 grand a day, $20,000 day, right? Well, what about your losses? You're not making 20 grand a day consistently. We know that's not possible. What are your losses, right? If you're making 20 grand a day, you have to be taking on some risk. So your risk could be 10 grand, right? 10 grand. Why are you not showing the $10,000 losers? What's going on here? Right? Base hits are much more manageable, guys. Consistent. It's better this way. It really is. It's better. And then occasionally you get the market to bless you with a home run, and it's like icing on the cake. And it makes your month. Base hits all day, every day. All about those base hits, baby. Your job is to get on base. And no one talks about this, which is really sad, right? For, being thousands and thousands of, creators out there, like no one talks about this stuff. Like, why not? Why are we not talking about this? Why are we not setting those expectations? Why are we not really breaking it down this way? I don't get it. It's very unfortunate. Very unfortunate. I may be adding to my crowd position here, guys. Slick, someone on TikTok said, I just came across your page and you're the only person that makes sense. Well, I appreciate it. Thank you for the support and thank you for the kind words. I try. It all comes from me. Like everything that I talk about is because I've gone through this as a new trader, guys. That's it. Everything is because I've gone through this as a new trader. Look at that quick break. Look at that quick pump and dump over 20 on ISIG. Big old pump and dump on ISIG. Like I said, guys, I think your focus needs to be GRTX. Slow, steady, consistent. Slow, steady, consistent, right? For being a low float stock, this is not moving like it's a low float stock. This stock, very slow, steady, and consistent, which I like it. It's easier to manage. It's easier to build your positions. It's easier to scale out. I think if we just focus on this stock today, it's going to provide us with a lot of great consistent opportunity versus having your head on a swivel looking at 30 other stocks. Let's just focus on GRTX until it's done. And right now, it's not done in my opinion. We're still moving on up, hitting new highs of the day. We still have a lot of focus here. We just have to be patient. We have to be patient. And that's fine. Market maker moves, guess what? We buy more. Right? Drop, base, rally. Right? We get a nice big drop. All right, cool. Let's wait for a base and let's get in for a rally, guys. We're good. We're crushing it right now. We're doing just fine. Frog's up 11 cents on the day. But always go look at your daily chart, guys. Right? Before, getting excited on a stock, always go look at your daily chart, right? You got a lot of resistance at 275. Right? The stock just went from 240, 260, has a resistance at 275 with no news, right? So is it really that exciting? Not really. Not till it really starts breaking some of these key levels on PROG. But again, there's a lot of resistance overhead here. Still being patient here on GRTX. So again, guys, we're doing a giveaway today, all right? Remember, we did 2 giveaways this morning on TikTok. We're doing giveaways for viewers here on YouTube, and we're doing giveaways for members inside of chat. For those of you that are on TikTok, if you want to be entered into the giveaway today and you want to participate in this, definitely come over to Alpha Day Trading on YouTube. I'm giving away free courses, free chat room passes, free mentorship sessions. have to be on YouTube around 11 o'clock, 11:30 for the giveaway, right? So Alpha Day Trading on YouTube. Come on over, and we'll have some fun with giveaways. So it does look like we may start cracking down here a little bit on GRTX, but that's okay, because guess what? We can buy more. We can buy some more. We can get another entry. Still holding my crowd. Still holding CRWD. We are still holding these higher lows. We are getting very tight right up against this level of resistance and our higher low support. So I'm still holding this with a stop below the trend line and VWAP. That's right around my cost basis, which is nice. So at this point in time, I'm able to bring my stop loss up to take pretty much little to no heat, right? A little heat, but it's not as big of a stop as what it was when I first initially got into the trade. So I'm scaling my stop loss up underneath all of these prior lows, as well as the VWAP and this trend line. So right now I'm still long on CRWD. I still have my 200 share position at 196.75. No reason to get on out yet. And no reason for me at this point in time to get on out yet. I'm trying to be very, very patient here with CRWD. So it depends on how much you scaled in, right? If you bought 200 shares here at 288, 1,000 shares at 340, you bought more here than here, so it's going to bring your cost basis up much higher. So I scale in equally. When I scale in, it's all equal. Let's say I want 1,000 shares. I'll go 250, 250, 250, 250. So my cost basis adjusts accordingly to the share size. Instead of going like 200, 1,200, 200, that really fluctuates your cost basis quite a bit versus doing it in equal amounts. XCUR was another one, guys, that we were watching. XCUR was another one that we had on watch. Over 40, room to 50, guys. It was also a break of this downtrend, right? It was a break of the downtrend. If you missed it, it is a break and hold over 40 for the pop to 50 over on XCUR. David saying this is way better than the stock alert services. 100%, David. 100%. That's why members are here and they're staying, because it's like, yeah, this is much better than alerts, right? I get some alerts with education, but I get education, and that's what's the most important, guys, is your education. We're allergic to alerts. Yeah, everybody inside the chat, we're allergic to alerts. We don't like them. Make me sneeze too much. Yo, guys, if you do like the stream, tap it. Like it, right? Like it. Get like 10,000 likes, 20,000. That helps put it on the For You page. When you share it, when you like it, it takes you guys, about a minute. If you just sit there and tap away until your fingers are hurting a little bit, share the stream. It does help push it out there on the For You page. I do appreciate it. We had 2 winners this morning on the giveaway. We had 2 winners on the giveaway. We had a Cody, and I forgot the other guy's name. I do apologize. But we had 2 winners for the giveaway, and we're doing more giveaways. Exclusive giveaways for individuals inside a chat, and then giveaways for some members here on YouTube for our free stream today. So again, ISIG, guys, not looking all that great right now. BFRI is trying to pop up here a little bit also. NES is a little chop fest right now. STRN, LGVN, a lot of light volume movers, guys. A lot of these stocks are moving light volume, but they are moving here a little bit. All right. So, looking at SGMA, SGMA doesn't look terrible. It is picking up better volume than some of these other stocks are at this point in time here on SGMA. So if we look at SGMA, we now have support right around yesterday's close of 13.96. Now, SGMA has room back up towards around $15. So I guess as long as you hold above 13.96, you could see a quick spike to 15, and it's already happening. Look at that. Breaking over that 13.96, pulling back, and then just squeezing. So right now, we should watch SGMA as well. This one's getting some decent volume. It seems to be fairly consistent. HUSN is not doing anything. CSCW, nothing. NES, maybe. MIND, nothing. So right now, we've been able to clean up our watch list pretty well, guys. All right, we've been able to clean that up. We're watching SGMA. GRTX is still that slow, steady, consistent stock. And, you know, CRWD is still working, you know. It's still trying to figure itself out if we're going to get that break over that 198.37 up to 200. So right now, if we put in a lower low at 195.50, I do have to cut my trade there on CRWD. Being very patient with it, though. Some of the most patience I've expressed in a very long time with stocks. So if we look at GRTX, we have a slight uptrend. We could actually see it all the way back down towards around that 310 level, right? We could actually see GRTX all the way back down towards around 310 to hold above this trend line. So still not too concerned. Still holding GRTX and still looking for a good addition to my position here. At what price are you taking profit for GRTX? Well, my first profit target is pre-market highs. My second target is going to be up between 5 and 561. That's our starting gap fill level, right? That's where we start to fill that gap a little bit here on the daily chart. And then my main target is $7.20. We got 3 targets. I have pre-market highs. I have 5 to 560. And then I have a 720 target here on GRTX. Again, I expected to hold this for a few hours today. Right now, this is a live lesson, a live learning experience on how to scale in and scale out of your positions. So, shit, we may have to just snip this out of the live stream today and just stream this for our lesson on Thursday, because this is much better than the lesson I have prepared. I'm going to be honest with you. A scale in, scale out is challenging to teach through a like a PowerPoint, but it's super easy doing it in real time. And so yeah, we're doing it in real time today. So here's your Thursday lesson on Tuesday, guys. here's your Thursday lesson today on Tuesday. So CRWD, still holding this, and we've been in a squeeze for a long time on that 1 minute chart, guys. We've been squeezing since about 950 on crowd on the 1 minute chart. So we definitely are ready to fire here on CRWD. Let's just root for the fire to the long side, right? But we're squeezing tight, hard, and heavy. Below 196, I have to get out of this stock. Yes, I do like building position at dips. I like building positions when we have multiple reasons to get involved in a trade. So, for example, if this stock would have came down to the trend line, as well as the VWAP, right? That would have been a level that I would have scaled in at, because that's a level that I look at as a good, strong level of support. VWAP and the trend line. Here, I didn't scale in off this dip. So I'm still only holding a 500 share position. I have yet to find another area that I want to scale in at. So I'm always looking for 2 separate points in price to average in, right? It could be an uptrend with the VWAP. It could be the VWAP and the 9 EMA. It's got to be 2 separate forms of technical analysis that line up at the same price, 2 or more, for me to be confident to add to my position. So that's why I haven't added again on GRTX, because we don't have 2 points, right? This was one reason. Is a pullback to the prior high, right? We didn't have really 2 separate reasons to add here. So I have not added yet. Still holding CRWD. It has to break here, guys. If you're in CRWD with me, we need to start breaking over this intraday resistance up to 200. Stops are underneath the VWAP and the trend line. So my stop right now is in the low 196s. I'm in at 196.75. So you see how I got my position here, right? I had my stop. And as the trade's developing, right? As the trade is developing and doing its thing, what am I doing? I'm bringing stops up underneath lows, underneath lows, underneath lows. Now we have a trend line. That's a great place to put a stop. Now we have the VWAP right here. That's a great place to put the stop. So my initial stop was like 195. Now it's at 196.25. That's a 50-cent loss on this trade. That is going to be about $100 on CRWD. From something that could have been a $300 loss is turning into a $100 loss because I'm scaling my stop underneath these key levels. VWAP, trend line, prior low. Right? So 196.25 is my stop. So I'm going to put a hard stop in here. 196. Let's go 15. 196.15, 200 shares, sell. All right, cool. So I do have a hard stop in the system now. So I can just let this thing do its thing. Back over the GRTX. Right now, no reason to scale in. Go look at ISIG, big pump and dump. NES, not doing a lot. BFRI, it's creeping, but it really doesn't have a crap ton of volume today compared to the average. STRN, light volume day. SGMA, quick little pump, followed by a big old sell-off there. PPSI, not doing too much. I mean, it is bouncing off the 20-day. Someone was asking me about PPSI this morning, if I like this, and I said, if it bounces above that 780, which is your 20 EMA, I could see myself building a position for a possible swing trade on PPSI. So if you're thinking of swing trades, PPSI may not be a bad area to start scaling in a position because you had a very quick, aggressive pullback on PPSI. Very quick, very aggressive here, right? We're bouncing right off the 20 EMA. Look at the last time we bounced off the 20 EMA. We shot up, and then boom, big rip. Bouncing off the 20 EMA. We could definitely see a nice big bounce here on PPSI. So keep PPSI on watch for a possible swing trade, guys. GRTX is taking forever. It's messing with me because you guys know me. I'm an all-in, all-out kind of trader. Right? But after yesterday, seeing the market conditions, saying, you know what, let me scale in and scale out. And I'm like, you know what? If we have market conditions the same on Tuesday, let's do the scale in, scale out approach and break this down on live trades to the team so they could learn how to do this. I'm like, man, that sounds fun. But this is hard for me, guys, because this is not my approach. Like, I am not a hold for an hour trader. Like, both of these trades I've been in for almost an hour. I'm not like a minute trader. I see the entry, big position, I get in, get out, right? In and out. So right now, it is different for me, but I like it. I like it a lot. Realist, hey, quick 270 on AMC. What? Nice. Going to enjoy last day in Florida until traveling back to Ohio tomorrow. Like always, stay disciplined, trade safe, and trade smart. Spaz, I live in Florida. You didn't tell me, dude. I live in Florida. Where are you at? We could have traded together live one day, man. Could have came on over. Maybe we rented a space and we just trade live with the team. That would have been fun, man. Come on, crowd. I know you want it. You look like you want it here, CRWD. Just go ahead and break over 198.37. Just go ahead and break. Let's get our first target here. Possible ascending triangle breakout on GRTX. If this breaks over high a day off this higher low, we're going for our next leg up, guys. Next leg up. Florida, I'm in the Tampa Bay area. So I say Tampa Bay area because everybody knows the Tampa Bay area. If I said Trinity or Lutz, you'd be like, what? What's that? It's kind of like saying Terre Haute, Indiana. Where's that? You say Indianapolis. Oh, yeah. So the Tampa Bay area, I am 30 minutes north of Tampa. Good job. We got some traders on TikTok making a couple bucks. We got some traders in chat locking in some profits. What? Do we got any profits over on YouTube, guys? We got some profits? Looks like we just need some volume. Yeah, that's it. We just need the volume, man. I mean, we have volume, though. Here's the thing. We're trading 141 million shares. Right? We're trading 141 million shares. We have volume, but it's not ripping like a 12 million in float stock rips. It's not moving like a low float stock yet. That's why he said, oh, I didn't see the lull. Class said, I didn't see the LOL. You're right, yeah. We just need volume. Right? It's got volume. It's acting like it's a 500 million in float stock. It really is. That's how it's moving. But that just tells me that there's a lot of people buying and selling, and it's really hard to get this thing going. So it's 50-50 right now, man. It's like buyers and sellers are just a big tug of war. I want to see buyers really just take control of the stock and start ripping it to the upside. So if we see this break into a new high a day off this higher low, that's a possible cup and handle, maybe a little ascending triangle breakout formation. It's a continuation formation. We could definitely continue up to those pre-market highs. 390 is our first target. Still holding crowd, guys. It's getting there. It's getting there. CRWD, guys. It's got to break right here. I have to switch to a market order. I need to switch to 100 shares, half my position, and get ready to start closing this. If we don't start breaking right here and we start cracking this trend line, I have to get out. I have to get out, and I could probably get out at break even. If we start cracking this trend line and not looking like we're going to get that break, I can actually get out of this at break even. But right now, a break over 198.50, that's when we see the next big pop in volume move in. So right now, I'm canceling my stop loss, and I'm manually running this trade right now. So right now, finger on the trigger, looking to take half my profit if we have a quick spike up to 200. It's kind of tempting to lock in some profit right now, though, because it's not getting that break, but it is forming an ascending triangle formation. There's 198.14. All right, back below 198 from the buyers, I lock in half, guys. If the buyers drop back below 198, I am locking in half my position. Right at this level of resistance. We want to see it pop right to 200. We're at 198.39. 198.60 on the bid, and I have to take half there. I took half. I got filled at 198.16. It dipped back below there momentarily on the buy side. I may be locking this up for a small little basic, guys. We don't really start to see that break. I'm going to take my $2 a share. Still holding 100 shares, though, right now. Looking to see if we can get that little rip and run. And I think I'm going to take it here, guys. I think I'm just going to go ahead and lock this up. Been an hour trade. It's not getting that explosive break over that level of resistance. I'm not really seeing that, that time in sales ramping up any. Not really seeing any kind of momentum. I'm not really seeing what I want to see right now. So I may be closing this position up completely here on crowd. For, $1.25, $1.50 per share profit. Yeah, I'm going to lock it up. I'm out. I'm out of crowd. If it rips, it rips. But hey, being very patient with it, expecting to see the break right then and there, not getting it. Don't want to risk a big flush there. I don't want to risk it dropping another $1, $1.50 and putting me back at break even. So, not bad. Not bad. 269. And this is why I prefer the all-in, all-out approach and why I prefer scalping. I could have made more than that in a lot less time. Like if I would have just jumped in with the 500 shares, right? Been a quick $1,000. Instead, I took 200 shares and I worked with it. Over an hour, make $300, right? I could have made that in 10 seconds on the same trade, just increasing my position size, getting all in, and then getting all out. And that's how I like the trade, because I've realized that over the years, is I don't have to scale in, scale out of my trades, make good profit. I've learned how to scalp the market, and I do really, really well with scalping the market. But today is a live lesson on how to scale in, scale out. I hope you guys enjoy. So now we need to break high a day GRTX 342 off a higher low. This is a continuation pattern, and we could see this continue to the upside up to our pre-market high here on GRTX. We do have a slight uptrend right here on GRTX, and we can see that we are still forming a bit of an ascending triangle formation. And you guys, you're up like 12%, 10% right now. We were buying at 3, right? It's up to like 330. I mean, that's 10%, guys. 10%. I think we may see it move lower. I really do think we may see a little bit of a crack here on GRTX, back down towards around this trend line. All the way back down around 310-ish. So right now, let's readjust. right? I know I said I would let it breathe all the way to 250. But since this stock is in a nice, solid uptrend, it is technically moving higher, hitting consistent new highs of day. We need to put our stops under the low of day, right? Why put our stops all the way below 250? We can go ahead and start scaling our stop losses up, right? We can start scaling our stop losses up. Give me 1 second. I had to plug my phone in. So with that being said, initially out of the gate, letting it breathe all the way down to 250. But as we can see, the stock is in a nice solid uptrend. Why would we want to let it breathe all the way down to 250? So we want to just try and scale this properly. So we have a low, a higher high, higher low, higher high, higher lows. We don't have the higher high yet, right? To confirm this being the higher low, right? So our stops right now need to be under the last confirmed low. The last confirmed low right there. What do I mean by the last confirmed low? Well, the only time you confirm, right, a higher low is when you get the following higher high. You have a low, a high, a higher low, and this higher low right here was not confirmed until the stock put in a higher high. You have a higher high, you have the higher low. This higher low is not confirmed until we put in a higher high. So stops right now should be at that red line. That's 285, right? That's 20 cents of risk or $100. I think that's a great place to put that stop. It's still giving the stock ample breathing room. Honestly, if it comes all the way back down below $3 into that level, it's not looking really good, right? So for now, I think that red line is a great place. Go ahead and put those stop losses. Can you run a Fibonacci extension off that? You could run a Fib extension SCARB, but we really want to stick to using Fibonacci extensions when we're in like new all-time highs. So when we're in a new all-time high and we don't have those overhead levels, that's when we want to use Fibonacci extensions. But when we have clear levels of resistance, right, from like pre-market and looking at the daily chart, those are going to supersede, right, the extensions, right? Those are going to be more honored and more valid than extensions. The only time we really want to use extensions to gauge targets is when the stock is in a new all-time high or there's no overhead resistance. Sorry, guys, the stream dropped. My bad. We back, though. Crowd broke right to 200, guys. Crowd got the squeeze. Crowd fired, and it went to 200. But hey, it's still a profitable trade. Still a profitable trade. Slow morning here in penny stock land. Honestly, the entire market is pretty slow right now. Very slow. How's XCUR doing? Never broke 40. NES, how's that boy doing? Nothing. Mind? Anything going on with Mind? No. Not, guys. It's slow. But here's what's cool is crypto stocks are up. That means crypto's up, right? We have crypto stocks up. Crypto's up. So all these crypto stocks are currently slightly green on the day. Still, you can kind of see the market just chilling, right? You can see the market just chilling right now. As the Fed meeting is coming on up. So NVIDIA bounced off the 50-day moving average. AMC was a beautiful bounce off that level. Roku had a nice bounce off the gap level as well. Nothing with Walmart. Crowd was a great trade. I just went ahead and took my profits. And Lowe's really hasn't given us any kind of confirmation yet. So today is a slow day. We may have an adding level right here. We may be looking to add here on GRTX. Maybe looking to add here another possibly 250 shares of GRTX off the VWAP and the trend line. Remember, I want to find at least 2 points that meet, especially when scaling in. So this would be an okay level to possibly scale in, but I have to think before I scale in. What do you have to think? Before you add to your position, what do you have to do, guys? Right? This is an area that I would like to add. Before I do that, what do I have to do before clicking buy? And what I'm going to go ahead and do for you, SCarB, is I'm going to run an extension just to do it for you, to show you how. Not wait for confirmation. Well, that is one. You need to wait for confirmation, but there's something else that you have to do before adding to a position. If you're scaling in and scaling out of trades, before you add, there's something that you must do. Not see if the trend is holding up. I mean, obviously, yes, you want to wait for confirmation. You want to make sure the trend's holding up. But I'm looking for a specific. It has to do with your position sizing and your stop loss, right? If you're to add to your position, average cost basis goes up and you have more size. Your stop loss is still the same, so you have to recalculate what your stop is to 3/8. So if I add 250 shares here, my cost basis would be approximately 312 on now 750 shares. So now I have to say, okay, 312, 750 shares with a 285 stop. What's that stop going to be, right? What's that percentage on my account? If it's going to exceed your initial dollar amount stop, right? That you said, hey, $500 or 3% of my account, you will not be able to add to your position. So before you add to your position, if you're scaling into stocks, you still have to get an idea of what your new price is going to be, your cost basis, with your new position amount and where your stop loss is. And you have to see how that lines up with your account. The 3% rule, making sure you're not exceeding the dollar amount loss that you said you would take, all of those variables. You can't just click buy randomly. You still have to be logical and you still have to make sure it lines up your goals and how your risk tolerance is and what your account is. You have to reassess your risk. You have to be reassessing your risk. Tweak it, not rework it. Yeah, rework it, but tweak the plan, right? You still need to make sure you're in line because here's the thing. Let's say, based on this example, right now, I'm risking 15, 20, I'm risking 25 cents. So I have 500 shares times 0.25, $125. So let's say I came into this with the mindset of I'm not going to risk more than 150, right? I'm not risking more than 150. 150 is, say, 3% of my account. That's my max risk. Well, right now, based on your current plan, 500 shares, 308 cost basis with a stop at 285, you're risking 125. That's in line. But let's say we now add 250 shares to this position. We will now have 750 shares at a cost basis maybe right around, let's say, 315. So now what are we risking? Risking 30 cents on 750 shares. So 750 shares times 0.30, you're now risking 225. See? I can't risk 225. Remember, I said 150, right? I said 150. 150 is 3% of my account. If I risk 225, I'm risking an extra $75, right? An extra $75, which is 4% of my account. You wouldn't be able to scale in right here, right now with 250 shares, right? You may not be able to do that. You have to retweak your plan, reconfigure it to make sure you're still in line with the risk that you accepted and make sure it's in line with your account. So you have to rework that if you're scaling in and scaling out. It's not as easy. It's easy, but it takes more time, right? It's not as simple as just going all in, all out with a single plan. You're scaling in and scaling out. And when you scale in, scale out, you have to go back to your plan and make sure it's still in line with everything. Chris on YouTube said you have to pray to the rug pull gods that they won't pull the rug on you. I like that one. I like that. Yes, yes. Before you scale in, you have to pray to the rug pull gods that they won't pull the rug on you. That's funny, man. So I'm going to run a Fibonacci extension on this for you, SCarby. So remember, before you run Fibonacci extensions, you first have to run a Fibonacci retracement and see if the retracement's honored. So here we have low to high. We can see that we're bouncing right around that 50% fib. So that's a pretty valid Fibonacci retracement. We can now grab a Fibonacci extension from the same low, the same high to the retracement low. If that is the retracement low, this is going to give you price targets to the upside, right? All of these levels are going to be levels that the stock could run to based on the Fibonacci extension. But remember, if we have data, if we have levels off the chart, okay, pre-market levels, daily levels, you want to use those levels. Those levels supersede extension. The only time we really want to be using extensions, okay, is when the stock is in a new all-time high. So I just averaged into my position here on GRTX, and here's the reason why. Double bottom, right? Double bottom signaling market structure off the trend line, off the VWAP, and on this bounce here, a pop in volume. So 3 separate reasons to get involved. I've already calculated the extra 250 shares that I took my cost basis to 312, not 315, and I know that's still in line with my maximum risk on this trade. I am now risking 30 cents on 750 shares. I'm risking less than $300, and I said from the get-go, I would risk up to $500 on this trade, scale in, to scale out. So I went ahead and added my position. It took my cost basis from 308 to 312. I now have 750 shares, and that was the reason why I added. I wasn't adding here, not here, not here, not here. Here, in this gray box. Why the gray box? Well, we had 2 separate forms of technical analysis lining up at the same spot, same price. You have the VWAP, you have the trend line. And what I really like about this as well, again, waiting for confirmation, is the confirmation here was the double bottom. And when we actually formed that double bottom, we had a big pop in volume, right? So that was the confirmation. Volume confirmation, market structure confirmation off the VWAP and off the uptrend. 2 separate forms of technical analysis that make me feel confident to go ahead and add to my position here. And I rework my plan that my cost basis would go up approximately 5 cents on an extra 750 or on an extra 250 shares. So I take 250 shares, right, times that extra 5 cents of risk, and I add that to what my risk initially was, and I know I'm still underneath $300 of risk with this current plan. Jesus, we are not doing a lesson Thursday, because if I do a lesson on this Thursday, you're gonna be like, dude, why'd you do that? You just completely ruined everything you did on Tuesday. It's not as good. I might have to revise the lesson from Thursday. This is the best lesson. I'm gonna have to rework and see what a better lesson is for Thursday. Maybe we just do a free-for-all. Just do a Wimit lesson, a free-for-all. Guys just say, hey, teach me about this today, and we'll do it. Those stops are still underneath the prior low at this time. Hey, you could get stopped out. You could get stopped out. But here's one thing that I want to point out as well, right? Right now, we're scaling in. That's all we've really been doing, all I've been doing. A lot of you guys bought and sold. Some of you have scaled in and scaled out so far, right? You have your own plans. You're taking profit. One of the main reasons I haven't scaled out is because I want to show you the outcome, whether good or bad, and how to manage it throughout the entire duration, right? So I have a target of pre-market high. I'm either A, going to hit target and scale out, or B, get stopped out. I want to show you from the scaling in, and then I want to show you the scale out and whether it's a good outcome or a bad outcome, right? But one thing that we need to talk about is scaling out of positions, okay? There's never a wrong time, in my opinion, to scale out of a position. If you would have bought at 3, right, say 500 shares, and when it went up to 340, if you would have taken half, that's okay. That's okay, right? Lock in half. Stock comes down to this trend line. Let's say you want to add again, right, and increase your position back to 500. You can do that. So there's so many different ways to scale in, scale out. You could be the type of trader to do what I'm doing. Building a little position, little by little by little, looking for a big target, okay? Or we can be the one to jump all in. Thumbs up, you take profit, and you have 250 shares left. See an area you want to re-add, you could re-add, and you still have your cost basis down here. You've already locked in some initial profits. So there's multiple ways that you can, scale out of trades, right? You can scale in like I'm doing, and then scale out like I will do, or you can go all in, scale out, and then start scaling back in. Does that make sense, guys? I hope that really makes sense on the different approaches that you can have with, leaving size on the table, letting stocks run and develop. Lissy over on TikTok said, that's too much work. I agree. I think it's overcomplicating things. I think you're doing too much. That's why I don't do this. This is not my edge. This is not my style. But this is the foundation of trading. This is a solid foundation of education, of knowledge. Without this, you would never know if this is your edge. So I have to do this. I want to do this. I want you guys to be comfortable and confident with this type of trading approach, because this may be your edge. Your edge could be like mine, scalping the market, all in, all out. But you may be really, really good at this. And if you're not getting the education, you don't know if you're good at this to apply this. So we have to do this, and I want to do this. But again, yes, I agree. It's a lot. It's more work, right? You're managing your trade for a very long time, right? Again, looking at this trade in hindsight, I could have scalped this trade 3 times, right? 3 times I could have scalped this and locked in $200 here, $200 there, $200 there, right? In hindsight, it's always 20/20. But knowing how I trade and looking at the technicals, I probably could have scaled up my size substantially and scalped 10-cent moves on a couple thousand shares, right? And be more green than what I am right now. I'm up $50, right? But again, this may be your approach. This may be your edge. So let's do this. Let's look at the broader market real quick, and let's see if there's anything worth getting involved with. Do you guys see anything right now? Again, I expected this coming into the market today was a slow, more sideways market, because people are sitting on the sidelines, right? People are sitting on the sidelines. The market makers aren't as active today. Market makers are probably programmed to sit on the sidelines during big economic days, which is a Fed meeting. And then they will react based on what's talked about in this meeting. So we already expected today to be a little bit on the slower side, and it definitely is. So what are our top gainers on the day? So here's what I do want to point out. Our top gainer on the day is Beyond Meats, up $4. But look at how choppy it is. Next, we have Coin, up $4. We have Baba, up 4. JP Morgan, up 2. So, and then we're done. And then we jump into all of our losers, right? So we do have a lot of stocks red on the day. And we could even look at our heat map and see that, a lot of the bigger name stocks are currently red. A lot of big name stocks are currently red. Microsoft, Google, Amazon, Tesla, right? We have some green out there, but not a lot of green. More red than green, and really just a lot of sideways movement. So now I am currently down on GRTX. Nice crack of the trend line. Stop loss is still 285. So do you guys see why I prefer to go all in and all out quickly versus the scale in, scale out approach, or the all in, scale out approach? Do you guys kind of see why I like my scalping approach better? Again, Larry, I don't know. I don't know. You know, the reason why I applied this approach today to this stock is for multiple reasons. The daily chart showing a lot of potential. Okay. The news being phenomenal. High relative volume. Low float stock. Here's the thing. This stock is not moving like a low float stock. This stock is not really getting that attention. All right. So today was applying this approach to teach you guys the right way to scale in, scale out. Right. You guys know how I trade. You've seen me trade for a year, right? A year. You know my approach to trading, and you can apply that to this and see why I personally prefer, you know, scalping the markets with larger position sizing for 20, 30 cents. Every now and then get a nice home run versus this hour and a half long approach where now I'm currently down a couple bucks when I could have probably scalped this a few times for a couple decent base hits. So this is how you scale in, scale out, right? This is how you scale in, scale out, right? Get in, you scale in at your levels. You have reasons to get in, but that's the thing is the stock's going to do what the stock wants to do. No matter how confident you are in a stock, no matter how convinced you are, the market's going to do what the market wants to do, right? Regardless of anything else, market's going to do what it wants. So knowing that the market's going to do whatever it wants, regardless of how good the news is, regardless of how much volume there is, regardless of how low the float is, regardless of anything, the market's going to do what the market wants to do. So with that being said, I like to spend the least amount of time in the market. You do know that when you're in a trade, you're exposed to risk, right? When you have an open position, you are exposed to risk. We are professionals at managing our risk. So if you apply those two things, we're professionals at managing risk. Risk management is everything. When you're in a trade, you're exposed to risk. When you're not in a trade, you're not exposed to risk. So how do you manage that? Spend the least amount of time in the market, right? If you spend the least amount of time in the market, you have less exposure to risk. And if we're professionals at managing risk, that means we should spend the least amount of time in the market, right? That's another reason why I like to get in and get out on my 1-minute trades, because I'm spending a little bit of time in the market, just a little bit of time to capitalize and to get out versus being exposed to risk and being exposed to unforeseen variables. What could happen right now, guys? I will, SCarby. I'm going to change my approach back to scalping. Right? But this was something that I wanted to do for you guys today because I've had a lot of traders lately ask about, you know, how do I scale in? How do I scale out? And what's the right approach? Right? And there's a lot to talk about, right? Reconfiguring your trade plan, having a few separate reasons to add, scaling out, jumping back in, right? There's a lot to talk about. And I'm glad that we were able to do this on the live trade over the last hour and a half. But I'm definitely coming into this afternoon and this evening, hour. Oh, I'm going to go back to my trading approach, but the market's slow. So right now, I'm waiting for the Fed meeting personally to see how the markets react. And then absolutely, I'm going to get back to my scalping, baby. And you can see on the same day, this approach versus my approach. And then determine which one you like better based on what you see, right? Like, man, I really like the scalping. I think I'm going to really hone in on my scalping ability. Or you know what? I actually kind of like the scale in, scale out approach, right? So I'm going to hone in on this. We'll actually have a good comparison on what strategy and what you like to do most in the market. But I'm personally waiting for the Fed meeting. I lost my train of thought. I thought I was going somewhere with that. There was something important that was on the tip of my tongue that I wanted to talk about. Oh yeah. What could happen right now on GRTX? Right? When we talk about risk, right? When you're in a trade, you're exposed to risk. You're exposed to a lot of these unforeseen variables in the market. We can't predict the market. We put probabilities in our favor, right? Gives us an edge, and we're right 70, 80% of the time, but we really cannot predict the market. There are too many unforeseen variables that could throw it off. You can't predict it. What's an unforeseen variable that could happen right now on GRTX to really expose you to a lot of risk? What's something that could happen right now that's an unforeseen variable that could expose you to a lot of risk? Think back to SESN 3 months ago. You have to 800 shares at 285. You know, right now, Larry, I would put a stop loss at break even on GRTX. If you're in at 285, I would put a stop at break even on GRTX and not risk anything. So, to answer that question, what's something that could happen right now in the market that's an unforeseen variable that exposes you to a lot of risk? That's one. If it drops below your stop loss, maybe skipping your stop, tripping your stop to where you're not filled, that's one. But what did we see on SESN, right? An offering could take place, a midday offering. You know, the SEC could step in and halt this stock pending news. And when it goes live in, say, 5 hours, an hour, 30 minutes, who knows, right? It could gap down. Remember SESN? SESN was a good stock when we were looking at it that day. SESN was a good gaining stock. It was set up. It was looking good. The technicals were clean. SESN, that day, was not a bad looking stock. The stock halted randomly. $6 it was halted. Just halted. 3 hours later, it goes live. Guess where it opens up at? Guess where it opened up at? 70 cents, right? If you were in SESN at $6 and you had a stop at 550, right? And that stock got halted and opened up at 70. Guess what? You're not getting out at 550. You're not getting out at 5, 4, 3, 2, or 1. You're getting out at 70 cents. That's an unforeseen variable in the market. You cannot predict that. You do not know that's going to happen. So, as professional risk managers, what do we want to do? Spend the least amount of time in the market as possible to avoid these unforeseen variables that could happen. So again, another reason, guys, why I like to spend the least amount of time in the market and just get in, get out. Yo, Beyond Charts, what's up, my man? Welcome to the stream. Yeah, you got UVXY. UVXY is the inverse ETF. As the markets drop, inverse ETFs go up. But right now, we're not really, you know, the market's, it's dropping, yeah, but it's not dropping in a violent manner to where I really want to get into UVXY. And here's another reason why I don't really want to touch the broader market right now, is the Fed meeting's right around the corner, right? Depending on what's said in the Fed meeting, these algos could be triggered in a good way or a bad way. We do not know until the market reacts to the Fed meeting. So why would we be in any positions around the Fed meeting? Professional traders exit their positions before major economic events, right? Job numbers, stuff like that, inflation reports. Traders are out of positions around professionals, or out of their positions around economic reports, news, big things that could impact the market. The Fed meeting is a big thing that could impact the market in a good way or a bad way. Professionals are not in open positions during those times. That's something I learned during the Top Step program. I took the Top Step program for futures, and they were very strict, right? You could not be in a position 15 minutes prior to the jobs report. Stuff like that. And if you were in a position, you're done. Reset. So again, you have to be mindful about everything in the market. You know, the Fed meeting is something to be very mindful of. Want to make sure you're not in any position. If you're in a position, guys, and the market reacts violently, you're gambling. You are gambling. Right now, I don't think of anything, long or short. Right now, I mean, if I see an opportunity for a quick scalp, let's go. Right before the Fed meeting, but right now I'm not seeing a lot of opportunity in the market. Which again, we knew this coming into the day. We knew that today was going to be a little bit slower. So right now it is 11 o'clock. Right now it's 11 o'clock, baby. Shall we dive into a little bit of an afternoon lesson, team? What you guys thinking? What do you guys want to do right now? I mean, we had pretty much the last hour and a half was lesson, right? I mean, everything that came out of my mouth was something of value, was educational, and I'm sure you guys learned a shit ton. So what do you guys want to do? You want to keep diving into education and lessons? Or do you guys want to dive into some giveaways? What do you guys want to do? Chat, YouTube, TikTok. Nice little 30-minute lesson where you're like, dude, I've got enough education for the day. You're overwhelming me right now. Let me digest this a little bit before we put more out there. And that's what I'm thinking, right? I don't want to give you too much all at once. I want you to be able to digest this a little bit. So if that's the case, we can definitely dive into some afternoon giveaways, baby. GRTX looks poopy. GRTX looks poopy right now. It doesn't look good at all. GRTX looks like doo-doo. What time is the Fed speaking today? Angel says, make someone's day today. Do a giveaway. Where are we at? I have another 5 cents of risk, and 5 cents, $50 or less. Like, I can still risk more than 285. I may try and get my stop loss below pre-market lows. Like, I may try and do that. What's my risk here at 266? Right, because I said $500. I mean, if I don't have to lose $500, I won't, but I don't want to get prematurely stopped out. So right now I'm in at 312 minus 266. What? $3.12 minus $2.60 equal 0. Okay, I'll just do it. I'll do it manually then. That's 35 cents plus 10. 50 cents of loss on 750 shares. 750 times 0.50 is 375. I mean, I'm okay with a $300 loss. I mean, I'm fine with it. It's not like it's the end of the world. And that gives me ample breathing room underneath pre-market lows. And if it cracks pre-market lows, this thing's done for. I'll consider that. I'll consider, adjusting here a little bit. Just to stay in the trade, but not to exceed that dollar amount that I said I was okay with, just to continue to work with the stock. The Fed meeting right around the corner. Great things could be said. I mean, I don't know. That could bring volume back in the market, and over lunch we could see GRTX rip. So I'm gonna try and get my stops underneath 266. And what I may do is I had a 285 stop. At 285, I may just take some size off the table. I may take 250 shares off the table so my loss isn't as much on the other 500 shares. Be about $75 less. Steve said, we already had the lesson, dude. Just do a giveaway. All right. What time's the Fed announcement? Is it 4:15? I thought it was 2:30 p.m. Eastern time. I thought it was 2:30. All right, guys, you got 76 viewers on YouTube, all right? So here in the next couple minutes, we need to have 76 likes. For the amount of viewers on YouTube, we need to have the same amount of likes, all right? So start liking YouTube. If you want to share it, share it. Hit the notification button, all that good stuff. Subscribe to the channel, all right? So let's do a giveaway for someone inside the chat, all right? For someone inside the chat. Woo! Man. So, Ed, Mr. Ed Nevis, the man, the myth, the legend. Are you in chat today? Ladies and gentlemen, I want to shout out Ed. Ed, such an awesome guy. I mean, everybody's awesome in chat. But Ed reaches out to me a couple months ago and says, hey, I love Alpha Day Trading. I love what you're doing. I want to make you some alpha gear. Right? I want to make you some Alpha Day Trading gear. Some shirts, some sweaters, all kinds of cool stuff. And what we can do is we can give that away to people in chat. Right? People in chat that have been here that want some alpha gear, right? Let's do some giveaways. So Ed was kind enough to reach out to somebody that he knows and have created, a lot of this alpha gear. So some shirts, some hoodies, all kinds of stuff, guys. They're not done yet. They're not in, but we're going to do some giveaways for some Alpha gear around the holidays. Hopefully I get this in before the holidays. I can ship it out to you, and it'll be a nice little Christmas present. Okay, guys? Nice little Christmas present for you. So we'll do some Jason 415 lessons. Yeah, let's do it. Alpha Day Trading number 1. So let's do, Jason, I'm a 2X, man. Let's make it happen. Is Walmart going for it? We don't want to miss Walmart if it's going for it. You don't want to miss Walmart if it's going for it. So let's see if Walmart, man, that's a straight shot up. Let's keep Walmart on watch. So how do we do this for traders in chat? It's a riddle. Let's do a riddle-based giveaway for everybody in chat. While we're doing this riddle-based giveaway for people in chat for gear, everybody on YouTube, max out the likes. We have 77 viewers. I want to see 77 likes. All right. So next, we got to get a riddle. A little bit of riddle. No, Texas, there's not your chance. I know all of us are kind of sick in the mind in our own way. I typed in raunchy riddles. So let's make it fun. A raunchy riddle. So at least we can have some fun with it and laugh. So I typed in raunchy riddles, and I guarantee all you guys are going to go type in raunchy riddles. You're going to see the riddle, and you're going to say it. So no, I got to go to a different link. 1 second. I got to go to a different link. This is a tough one, guys. So here we go. I'm going to say it, and I'm going to post it in chat. Once again, guys, this is for everybody inside of chat. We're going to do a couple giveaways for members in chat for some Alpha gear. Then we're going to do some giveaways over here on YouTube, right? Give away some courses, some sessions with me, all kinds of good stuff. So if you guys are on TikTok and you want to have some fun and get some free stuff, some free goodies, come on over to YouTube Alpha Day Trading. So here we go. The Kids King. The horse's name was Friday. You are absolutely right, Kids King. Congratulations. First winner. No. All right, so I'm going to post it in chat. I'm going to type it in chat. And the first person to get it is going to get a free piece of Alpha gear. Okay? So I'm going to say it, and then I'm going to post it at the same time. All right? I'm going to say it and then post it because there may be a delay for certain different people. So 3, 2, 1. What word begins and ends with an E, but only has one letter? So what word begins with an... What word begins... Ah, shit, Angel. Look at that. That wasn't hard. That wasn't hard at all. It was envelope. What word begins and ends with an E, but only has one letter? An envelope. Well, technically, you can put more letters in an envelope, but yes, it's envelope. Good job, Angel. Good job. Big Angel coming in clutch. All right, Angel, we're going to add you to the list as soon as we get that Alpha gear. I'm going to mail that out to you, and you could represent and have some Alpha gear when you're trading in the mornings. I love it. I love it. Good job. Good job. So, all right, let's do another one. Let's try and find another one. These aren't good. Here's a good one, guys. Here's a good one. All right, next one for people in chat. Next one. Absolutely. Here we go. 3, 2, 1. Boom. I have seas without water. I have forest without wood. I have deserts without sand. I have houses with no brick. What am I? Nick Cummins! we got someone else with it. Nick, a map. 100%. Yep, it's a map. Nick was the first person to come in. A map. That's good, yeah. So as I have seas without water, a forest without wood. I have deserts without sand. I have houses with no brick. What am I? A map. It was confusing. That was the point. That was the point. So again, I have seas without water. I have forests without wood. I have deserts without sand. I have houses with no brick. What am I? You're a map, right? You have all those things, but you don't have those elements. You have water, wood, nothing, brick. Cool. Good job, Nick. So Angel and Mr. Nick. Catherine saying, can I just buy the gear? Guys, like I planned on like making sure everybody gets free gear. Like I'm trying to have fun with it. Like I'm not going to make you guys buy it if you're in chat. Like I hook you guys up. Come on now. I just want to make it fun as I'm hooking you guys up with some giveaways. And I don't have all the gear right now. So if I give everybody gear, I got like 200 people to send gear to and I don't have anything. So let me get the gear first. But at least I know I can get some gear in the meantime to send out to our lucky giveaway winners today. We got Mr. Nick and we got Mr. Angel. But yes, Catherine, I will have more gear very, very soon. And I do plan on doing some more fun little giveaways over the next couple of weeks around the holidays. And just to make sure that everybody's getting some gear. All right. I suck at riddles. Well, hey, next giveaway won't be riddles. It'll be trading related questions. What goes up? What goes down on less volume? All right. What goes up? And what comes down on little volume? What is that? What do we call that? When something goes up and right back down on no volume. Very quick, very fast. What do we call that? What is that? I'm looking for a set word. I'm looking for a set word. What goes up and comes straight back down on little to no volume very, very quickly? What do we call that? Come on, guys. Come on. See, this is what I'm going to do next. We got the maps, right? We got map, and we got a bad Friday night, my account. Oh, Jay Rich, don't say that. Jay Rich said my account. No. We call that a pump and dump, guys. A pump and dump. What goes up and comes right back down on little to no volume very, very fast? What do we call that? A pump and dump. Come on, guys. It's a pump and dump. See, we're going to do more trading related ones because I stumped all of you. That means I'm not doing my job. Damn it. You guys didn't get pump and dump. Either I'm not doing my job or I really suck. I didn't say it was one word or two words. I just said, what is it? It is pump and dump. Pump and dump. So it could be two words. You're just putting it in. It's two words in a letter. Pump and dump. Pump and dump. All right, guys. Let's go over to YouTube. YouTube giveaway city. Oh, did I really? I didn't say it was one word. Did I say it was one word, guys? That's my bad. See, I wasn't prepared. That was on the spot. That was on the fly. I wasn't prepared, guys. Don't judge me. Everybody's getting alpha gear anyway. Everybody's getting alpha gear. Quit giving me a hard time, guys. Deal with it. I'm kidding. All right, guys, let's go ahead and do a little giveaway here on YouTube. Right, roll the tape back. No, I'm shutting off on demand. Hold on. I got to shut the screen down real quick. And down. Yeah, you can't roll it back now, motherfucker. All right, so first giveaway, guys. First giveaway. We gave away 2 courses today. Right, so we already gave away courses. What do we do? Let's give away some chat. Cancel Josh. The cancel culture. Cancel Josh. Yes, cancel Josh. Oh, man. So let's do a free chat room pass. All right. And what's really cool about this is this free pass will bring you over to the new platform as well. So not only will you be able to come in for the next week or two here inside the current chat room and have some fun around the holidays and make some money and learn, but you'll also get a nice little sneak peek a couple weeks inside of the new platform that we just developed. So the next giveaway that I would like to do, guys, is I would like to give away a free month of chats. Went to schedule a one-on-one and noticed that you have no available spots over the next 3 months. Yeah. We waiting? No, I'm booked. I'm booked. I mean, there's like 100 and some people in chat, guys, and I'm booked for like the next 3 months. Like 2 months ago, when I showed you guys where the one-on-ones were at, that day just maxed out. Just, dude, for 3 months, like all my Fridays are totally maxed out for one-on-ones. So, yes, what I want to try and do with the new platform, well, it has nothing to do with the platform. It maybe, if I can find another person that I like just as much as me, that, you know, is good, that you like, right? Someone that you like to commentate, that'll free up more of my time to where I can do more one-on-ones, right? If I can get someone to host Wednesday commentary, I can do Wednesday afternoon sessions, right? If I can get individuals that I trust to help support the community and you guys like them and they're good, then that gives me a lot more time to do these one-on-ones. So right now, guys, I'm just booked for the next 2-3 months. So every day you got to come back in and look. Every day you have to come back in and look and make sure when you see the spot, you book it because they're going fast. I know they have to have my energy and there's not a lot of people that have my energy. So we're going to do a giveaway for a free pass. All right, over on YouTube. A free pass to our current platform and to the new platform as well. A 1-month trial free pass to Alpha Day Trading. Come in, work with the team, get access to the video lessons library, live stream, have some fun, learn, and make some profits in the market, guys. All right? So, I think the easiest way to do this is the way that we normally do it. The way that we normally do it is you guys go leave a review. It's just so easy for you guys to go type a review. And then we spin the wheel and get a letter. If the letter's S, we go and find the people that their first name starts with S. We add those people to the wheel and spin for a winner. So here's what we're going to do. We're going to do just that. That is the easiest way to do giveaways, guys. So here. You guys already gave like a shit ton of reviews, but I can't think of an easier way to do this. I really can't. So here's what you guys are going to do, all right? It's very simple. Here's a direct, I can't post the link. So hold up. Uno momento, por favor. All right, this is what you guys have to do. I can't post the link. You guys just go to Google, right? Go to Google, all right? Type in Alpha Day Trading, Alpha Day Trading, and this is what you're going to see pop up, right? You're going to see our business page or whatever this is. So Alpha Day Trading, website, reviews. So you're just going to click reviews. You're going to come here and you're going to just type a review. An honest review, guys. I hate Josh. He sucks. You're in the giveaway. I hope someone doesn't post that for shits and giggles, but you're in the giveaway. Honest reviews, right? Honest reviews. You go leave a review. We're going to pick, or actually we're going to spin the wheel. So we go here to the wheel of destiny, right? And I'm going to go from A to Z on the wheel, and we're going to spin the wheel. If it lands on an S, what we're going to do is we're going to go by and find everybody that starts with an S, right? That starts with an S. We're going to grab all of the first names that start with an S, and you guys are going back to the wheel to spin for a free month of chat. All right, so easy process. You guys have to do one thing. I got to do a lot. You guys are going to go to Google, type in Alpha Day Trading. You're going to leave a review. All right, I'm going to come here to go to newest. All right, I'm going to go to newest. And right there, look at Rebecca. She's on top of it. Rebecca's already on top of it. Boom. She's already entered into the giveaway. I'll give you guys 20 minutes. 10 to 20 minutes tops. Right? It's that simple. Rebecca's done it. Follow Rebecca's lead. Go ahead and leave that review. We're going to add you to the wheel, right? The letter, and then pick a name, and then put you on. You guys know the process, all right? And we're going to spin for a couple winners, guys, all right? So right now we have 64, and Rebecca was the first. Right, so Rebecca was number 1. So right now we have Rebecca, Jason, Arla, and Steve. Right, so it all starts with Rebecca and above. While you guys are doing that, I'm going to get our wheel ready. All right, so A, B, C, D, F, G, HIJKLMOP. W, X, Y, and Z. And apply the wheel changes. So here in about 10 minutes, we're going to spin the wheel. It's going to give us a letter. We're going to go by and find all the names that start with that letter. If we have one, you're the lucky winner of the giveaway. If we got multiple ones, we're going to add your name to the wheel, spin it for the winner. For the winner, guys. Make it easy. Elvis, how many years have I been trading? So I've been trading for almost 8 years. Like seriously, 6, right? So I started dabbling with crypto back in like 2015, 2016, right? Like 2015. But I started taking it very serious in end of 2016, 2017. I started taking it really, really serious. That's when I progressed into actually like stocks, right? So like the amount of time I've been in the market, 8 years, taking it serious, probably 6. Oh, next time, won't you sing with me? Catherine's like, oh, my ears are bleeding. Stop singing, Josh. I believe I can fly. I believe I can touch the sky. Catherine's like, dude, stop. My ears hurt. I know you guys are all here for my singing, all right? I know you guys are all here for my singing, so I'm gonna do it again. How about I rap for you guys? You want me to rap for you? I can rap a little bit for you guys. Wiener, wiener, chicken dinner. Yeah, Colin, let's get a beat going. Can't do it, guys. No, I'm gonna literally have to like take my webcam off, and I'll rap for you. No, I'm kidding. I wouldn't do it. I can't rap, guys. I can't rap, guys. We're stock traders making money. Fuck the haters. I don't know. Like, I'm done. I'm done. I'll just go back to my singing. I'll go back to my singing. All right, guys, you got another 8 minutes. 8 minutes. Google Alpha Day Trading. Review. All right, 8 minutes. Right around 11:30, we are going to spin for a giveaway. And then one other thing that I'm going to do as well, guys. I know I always go against my word. Not in a bad way. I never go against my word in a bad way. It's normally going against my word in a good way. So, the holidays are coming up. It's Christmas. People love savings. People love gifting things. Like, I don't know, guys. If you've wanted to take that step and to actually join a legitimate team, take your trading to the next level, just to have fun and to learn. Screw the alert services, but to actually learn how to trade stocks and identify what your edge is in the market. And just take your trading to the next level. 2022 could be your year, right? I know 2022 is everybody's year inside the chat. We're working for it. We're getting disciplined right now. We're carrying this momentum into 2022. I guarantee everybody in chat is making money in 2022 and finally getting to that level in their career that they want to be at. 2022 is your guys' year. Maybe 2022 is your year as well. And if you've been hesitant, you haven't been on enough live streams, whatever the case is, right? Whatever the case is, I want to try and help offset that. If you've wanted to join, you've just been hesitant. Maybe you've been on the fence. Maybe being on the fence around the holidays. Maybe money's tight as you're buying presents. Maybe being on the fence that this is your second or third stream. You haven't really seen us enough in action to see what we do and how we teach and how we go about our day-to-day trading, all right? So if you've been on the fence, but you're now more leaning towards, yeah, I want to, right? I want to, but I'm still on the fence. I'm going to be dropping a holiday promo for you guys today. This is only for you guys on YouTube, right? This is a one-time thing on YouTube today for you guys that have been here for the past 4 hours, okay? So I'm going to drop that here around 12 o'clock. If you want it, take advantage of it. If not, There's no pressure. There's no sales tactic. There's nothing. It's just me trying to be of value and try to help you guys, make a good decision, an educated decision if you've been wanting to join a legitimate team and if you think this is the team that's best for you. I'll be dropping something here at about 12 o'clock. And if you want to take advantage of it, feel free to do so. We'd love to have you a part of the team. And if you're not ready, keep joining our free streams. Keep coming in. Comment on our TikToks, our free streams on YouTube. The new platform will have some free stuff for you guys as well. Keep getting your feet wet until you're ready. But if you are ready, and it's just a cost thing around the holidays, I understand, guys, and that's why I want to do something. I know I'm going against my word, but I understand that the holidays can be tight and tough for some because we're spending buku money on presents for kids. I mean, I get it. I got like $500 worth of presents up there for my kid. I get it. We're spending a lot of money during the holidays. Money can be tight, but you may still want to invest in yourself, your education. So I'm going to make that possible today, guys, okay? So what happens if two people have the same letter? So if two people have the same letter, I'm going to take those individual names and I'm going to put you on the wheel and I'm going to spin you. Catherine, don't do that to me. Wait until she's a teen. No. When she's a teen, I'm screwed. When she's a teen, I'm going to have to buy a gun when she's a teenager. I don't own a gun right now. I don't really think I need a gun in the house. I mean, she's just going to find it and probably shoot me or something. But when she's a teen, I'm going to have to get a gun. And, man, I'm going to have a really good lawyer in advance and have good connections with law enforcement because if someone, I'm going to shoot. I will definitely need a gun as she gets older. Absolutely. A bondsman. Yeah, bondsman, a good lawyer, have good connections with the police department. So if something ever goes down, we're good. We're good. We're just, he was an intruder, right? No, no, I'm kidding. I would never do that to somebody. But don't mess with my daughter because I'll punch you in the face, little kid. I'll go to jail for punching you in the face if you mess with my daughter. I'll just punch you in the nose and break it. I'm not going to shoot you. I'm just going to punch you. Yeah, I'm not looking forward to her being a teen. I'm really not. My little girl, you better not screw with her. Matthew, that's what we currently have. It's a reoccurring subscription model. So the monthly, it comes out monthly. The yearly, it's all up front for the yearly, but you get a bigger discount and some additional savings and course and stuff like that. So there's a few different membership options. The monthly is a monthly reoccurring. And the goal for a lot of traders is, okay, I'm paying this per month. The goal is to come in, get all of this education to at least make $120 to break even. If you can come in over 30 days, right, and make $150, you're paying for your membership, but you're getting all of this value and all of this education for free in the beginning as you learn. Your goal as a brand new trader shouldn't be to make 10 grand your first month. Your goal should be to soak up all of this education, all of this value, and be able to apply this and build confidence and make just enough, $120 in 20 trading days. Make just enough to cover your monthly subscription so you're getting everything for free. And that's what traders in chat are doing. And that's got to be your mindset until you build more confidence and until you actually master this skill set. And there's normally 20 trading days in a month. That means you need to come into the market and try and make $6 a day, right? We could help you easily make $6 a day to cover your membership, to get all of this education, this value for free. That's the way I look at it. And that's what was able to help me find a mentor when I was new as well. Having that mindset of I'm not here to make $1 million yet. But in time, if I learn the right way to trade, and I learn risk management, discipline, all of these things that no one talks about, if I learn these things and I mastered these things, I can make my $1 million. Not the first year, maybe not in the first 2, but it's possible if I keep educating myself, right? Success is just right around the corner. Yeah, so I like it. First time the boyfriend comes over, sit down with him, have a talk while I'm cleaning my guns. Put the fear into him. Oh, yeah. Oh, yeah. That's actually a good idea. Wow. Angel, look at how nice the team is, guys. So Angel inside the chat. I refreshed my review, but if I win, I would like to give it to someone who hasn't won yet, if I win. Angel is the real deal, guys. Angel, what a nice, kind person. He's been a member inside of chat for months. Freaking awesome. Absolutely love it. He's saying, hey, if I win, I want to give my giveaway to somebody else. I love it. So let's go ahead and dive back in here. And let's see, guys. You got a minute to go. And here's who I have so far. I have Justin C. I have Daniel. Dennis. Angel. Barbie. Love the name. Barbie Martin. PXS. Steven. Steve Carby. Pete. Rodrigo. Keith. Natalie. Cajun Realtor. Phil. Todd. P. Joey. Name. Travis. My goodness, there's a lot. Chris. Ralph. Steve. Carla. Jason. Rebecca. Woo! You guys want some free stuff today, don't you? All right, did I miss anybody? If I miss somebody, I'll do one more refresh. It's 11:30. 11:30, we spin the wheel, baby. We got like 20, 25 people currently entered into the giveaway. Yo, no, stop lying to us. Stop lying, Catherine. Josh, I just wrote a $7,000 tuition check for December 1st. That was straight alpha profits. Get out of here, Catherine. Quit bullshitting me right now. Quit bullshitting me. If that's the case, that is freaking awesome. That is so awesome. Good job. Good work. I love it. Coming in, just making some profits to help pay for it. I love it. That is so freaking awesome. Good job, Catherine. Keep up the awesome work. You have been crushing it lately. I mean, you've been crushing it since day one, but you come in. I love your mindset. You come in, you observe the market, it seems like, and if you don't like the market, you're gone. You come in and you like the market, you identify your opportunity, you take it, and you're done. You're not trading all day, every day. You come in, identify the opportunity, and if you have it, you take it, you make your profit, and you're done. I love that approach. I love that mindset. That's what you guys have to do. Come in, lock in your profits, walk away, guys. Good job. Green is good. Good is green. All right, so one last refresh. It was 84. I'm going to refresh one more time. It's 84. I'm going to do one better. I'm going to go here to my settings. I'm going to clear my cache. All right, I'm going to clear my cache. I'm going to refresh one more time just to make sure we're not missing anybody. It actually went down to 83. That doesn't make any sense. How did it go down to 83 from 84? Okay, now it's back at 84. Woof. Woo. All right, I was like, what happened? All right, here we go. It starts with Chris C. Just now, Chris, Justin, Daniel. All right, we got everybody in here, and we're going to go all the way down until Rebecca. So Rebecca was the one that started it. Rebecca 14 minutes ago. Before that, it was Nick 2 hours ago. All right, so let's go ahead and spin the wheel of destiny hold on. Back up, Josh, back up. What do we have to do? How many clicks, baby? How many clicks? Yeah, it did just bomb it. How many clicks? We're going to do 1 click of the wheel, 3 clicks, 5 clicks. Someone, how many clicks of the wheel? Catherine says 5. We're going to do 5. That was the first one I saw. John missed me. I didn't see anything in there, John. I want to make sure it's very fair. Jason, Carla, Steve, Ralph, Chris, Travis, Name, Joey, Todd. I don't see John in here. And this is just what I see, guys, right? This is just what I see. So if you guys see something else, right? If you guys see something else, I'm on your end, let me know. But I see 84 reviews. And it starts with Rebecca. All right? Here's what I'll do, guys. Here's what I'll do. Maybe I'm having issues. Maybe it's not refreshing in real time. Whatever the case is, I believe you. Now, if it comes to find out you didn't leave one, right? Like, I can go through and look at them tomorrow when it refreshes. And if it was mischievous, right? If you're being that type of way, right, I will simply cancel your membership and give it to somebody else. But as long as you're being honest, right, and you left one, you're entered into the giveaway. Let's go ahead and spin the wheel of destiny. We had 5 clicks, ladies and gentlemen. So let's do 5 clicks in 3, in 2, in 1. 1, 2, 3, 4, 5. It's an F. We got ourselves an F. All right, so let's go find the Fs. All right, and then we got to put them on the wheel. So what we have to do here is modify the wheel, right? We need to go ahead and clear these choices. It's an F. I know we got some Fs, and we got to add the Fs to the wheel. All right, so let's go look at our Fs. Let's do another refreshment. Got 85. Go to the newest. All right. We have any Fs? We're looking for Fs. Looking for Fs, Fs, Fs. Got to start with an F. We have any Franks? We have any Franks? Oh, dude, we don't have any Fs yet. Where are the Fs? Where are the Fs? Where are the Fs? We have no Fs? Come on, there's no Fs? What? That is crazy. There's no Fs here. There's no Fs. We got Florida Mike and Frank over on YouTube. Do we have anybody with F here in chat that may not be on this list either? I want to make sure it's fair. So anybody in chat with your first initial starting with F, let me know. Right? It says I did it 16 minutes ago. John. That is so crazy I don't see it. Yeah. Well, we have Frank over on YouTube. We have Florida Mike. Right? We got Florida Mike over on YouTube as well. I trust you guys. I do. What I'm going to do over the next week, right? I'm still going to look and see if these are up. And if we don't see one, you know, don't be shady with me, guys. Don't be shady. Don't do that. No, I'm kidding. I'm looking to see maybe what happened is if you posted a review in the past. If you posted a review in the past, right, it wouldn't put you up in the news section. All it would do is update your review. So I'm going to scroll through the whole thing. Looking for Frank. And we're looking for Florida Mike. There is Frank. There is Frank right there. It says 3 months ago, but sometimes they don't update if you've already left a review. So Frank has left one. All right. Frank has. Florida Mike. What's your first name? Florida Mike. Oh, okay, Mike. But it's Mike. I know it's Florida Mike, but is it Florida Mike here on the review section? Fuck it. I tell you what. Okay, so this was new. So Flint Lockwood 3 hours ago. That was this morning. Here's what I'm going to do. Screw it. You're both getting a free month of chat. Fuck it. How about that? How about I just give you both a free month of chat? Florida Mike and Frank. There you guys go. We're not even going to go an extra step with it. I can't find the reviews. I trust you guys. I really hope that you're being honest and that you left a review. If not, you have to live with it, right? You have to live with it. You know, have integrity, but I believe you guys. I trust you guys, all right? So, Frank and Mr. Florida Mike, congratulations, guys. You are the Fs. So congrats. You guys are getting a free month of chat, baby. There are some that posted on the actual website. What do you mean on the actual website? I don't have a review section on the actual website. Better go there. I could go to Trustpilot. Maybe it's on Trustpilot. That could be it. If you went to the Alpha Day Trading website, the review would take you to Trustpilot. So that could be it. Yeah, see? Yeah, we have some 16 minutes ago. We have some 17s, 18s. All right, 3 hours ago. Okay, so it looks like some of them went over to Trustpilot. That would make sense. All right, but anyway, guys, just to make it clean, make it easy. Again, I trust you guys. All right, I trust you guys. If not, you got to live with it. Karma's a bitch. No, I'm messing with you guys. Congratulations, Mr. Frank and Mr. Florida Mike. The two people that starts with an F. Congratulations. You are getting a free month of chat. And you get to check out the new platform when we migrate to it in the next week, the 2 weeks as well. So congratulations, everybody. Give them a round of applause. Thank you guys so much. Again, we're always doing giveaways, guys. We're always doing giveaways. I know the last couple of months, no, because I've been so tied up with this development process. But moving forward, guys, back to back giveaways. I love doing this for you guys. I love doing giveaways in chat over on YouTube on free stream days to have some fun with you guys. Search for Florida Mike and see what comes up. Can you search for Florida Mike? Oh, you can. Florida. Nothing. I don't see anything. No mics. Go back to YouTube. I'll tell you what, to make it easier too, right? To make it easier, you left a review, you see it, take a screenshot when you email me, because you have to email me, josh@alphadaytrading.com. That's how I'm going to be able to get you guys set up for free chat room access. So I tell you what, I saw Frank's in there. Florida Mike, I didn't see it. I do trust you, but if you want to throw a screenshot in there of the review that was posted, you can do that as well. But I do trust you. You guys are getting a free month of chat. All right, guys. So congratulations, everybody over on YouTube and everybody that entered into the giveaway. So have fun with this chat access. A lot of value, guys. And you're going to be in the new platform as well in the next couple of weeks. So you guys are getting a little spoiled here. Just a little spoiled. All right. So I'll be sure to respond to you guys over lunch to get everything set up. And just be aware that come next week, you'll probably see a new platform, right? New platform. So just log in the same way you do now, and you'll get used to it. It's going to be something that we all have to get familiar with because it's a little bit different. All right. All right, guys. So what I said I was also going to do around 12 o'clock. All right. What I also said I was going to do around 12 o'clock, and this goes for everybody, right? This goes for everybody inside of chat as well. Okay. So what I normally have done in the past is, right now on the yearly plan, the yearly membership, giving it an additional discount as well as a free course. I'm still going to do that. What I'm going to do as well is for those of you that are like, I'm not ready for the year commitment. I'm just not ready to make that decision. What I am going to do to help is what we're going to do is we're going to discount the monthly a little bit for your first month, right? And give you a little bit of savings. And we're also going to hook you up with 60% off our course. So on the yearly membership, it's billed yearly, but it breaks down to being like $70 a month, which is almost half off the monthly plan. So you basically get 6 months of the year for free and a free copy of the course. If you want to go that route, that's obviously the best of the best savings, and that gets you in chat for the next year and gives you a free copy of the course, all right? But if you're not ready for that commitment or that investment at this point in time, what you can do is sign up for the monthly, right? I'm going to throw a discount code out there to save you a little bit on your monthly to offset 60% off the course. So now you can get access to chat for a month, a little bit of savings your first month, and you're going to get 60% off the course. This goes for anybody inside of the chat as well. If you're in chat on a monthly and you're like, you know what? I've just been waiting for a course offer. This is going to be the last time we do a course offer, right? First of the year, I can't do them anymore. It doesn't make sense from an expense standpoint. I have a lot of overhead hosting the course. So what I'm going to do around the holidays is everybody in chat as well. If you're on a monthly and you're like, dude, I want the course. I've just been waiting. I will offer the 60% off as well. I'd actually make it 70% off for you guys inside of chat, right? I'll make it 70% off for those of you in chat. You already have an active membership. I'm going to discount the monthly 10% for everybody on YouTube. So what I'll do is give you an extra 10% on the course. So you guys can get the course for 70% off if you want it. Everybody on YouTube, again, 10% off the monthly plus 60% off the course. Or if you sign up for the yearly, I'm going to give you an additional 20% off the plan that's already discounted 30. So you get 50% off the yearly. And I'm going to throw you a free course as well. All right, just for the holidays, right before the new platform's launched and before things really start changing behind the scenes. All right, guys, so that's it. I'm done talking about it. I don't want to sit here and seem like salesy or anything like that. That is not my intention whatsoever. It's just trying to provide some extra value and savings for you guys that may have been on the fence over the past couple of months and you're ready, but you want to save a couple bucks. Well, today, guys, you can save a couple bucks. All right, want to work with you, want to help you become successful and see you making money like everybody else in chat as well. And most importantly, learning how to manage your risk, right? Not just locking in profits, but learning how to not lose a lot in your trades because losing is inevitable. But you need to be trained on how to manage your risk, right? Not just making money, but preserving your capital as well. That's the most important, all right? So we have a massive downtrend on GRTX, massive downtrend on GRTX right now. All right, so I'll go ahead and just, I'll post the link now. A couple minutes early, 15 minutes early, I'll go ahead and post the link now, guys. All right? And again, if you want, you can. I mean, there's no pressure or anything like that. It's just if you're on the fence and if you want, you can, right? You can join. And you just get some extra savings and stuff like that. If not, hey, listen, you're not ready yet. I get it. It took me a while to be ready to join a team as well, but I realized after I joined a team, that's what I was missing. Even Mark Douglas and some of the most successful mentors in the world say you have to be a part of a team, right? That's like the one piece to success. That's one of the pieces is being a part of the team. Be able to exchange ideas with, collaborate, get trainings, get education, get guidance, right? Be pointed in the right direction. So again, it took me a while to actually make that decision, but when I did, I promise you guys, that's what took my trading from shitty to good. Was when I had someone to talk to get trainings from. I learned every day, and it really just a big 180 in my trading. And it wasn't until I actually did that, until I was actually seeing consistent profits in the market. But I get it. It takes time, right? It takes time. So let's do this. Let's go ahead and drop everything that you guys need right now to make a good decision. So I will post the coupon in 10 seconds. Bear with me. Bear with me. Let me go figure out what that coupon code was. Here it is. I'm going to use the one that we had for Black Friday, all right? I'm going to use the one we had for Black Friday, okay? So it's Black Friday 2021. I'm not going to update it, but you guys are all set, ready to rock and roll. Ready to rock and roll. So boom and boom. So when you check out, you have to say, I have a coupon, right? I have a coupon. You got to put that coupon code in, and it's going to discount it, do everything like that, and then I'll send you a free copy of your course, all right? If you want to sign up for the monthly, right? If you want to sign up for the monthly, right? And again, the monthly was 10% off, as well as 60% off the course. You can do that as well. What I'll go ahead and do is I'll grab this coupon, and this coupon is going to be for the monthly option. So I'll even put that right here, MONTHLYOPTION, and boom. There you guys go. So I hope that helps. Again, it's been a while since we've done anything like this. I know around Black Friday, we did it for Black Friday. But again, coming into the holidays, I think it's important to do it around the holidays, especially with all the spending that we're doing with presents. Maybe save a couple bucks and invest in yourself now before next year, right? Gotta get the ball rolling, build up some momentum, get some education, build some confidence. So come January 2022, you can start rocking out of the gate and actually getting where you want to be in your trading career, right? It all starts with a decision. Decision is to take the initiative to learn, right? And that's it. You just have to be willing to learn. And if you're willing to learn, the whole team is here to help you out. Catherine says, I probably wouldn't be trading now without the team. It's boring, and I need some idea. Yeah, exactly. Like, trading is boring. Trading's supposed to be boring. But we can make trading fun in the process. Like, when we're in trades, yes, they're boring, right? But we can have fun in the meantime, right? Positivity, and just everything that we do in chat. I love it. It's definitely boring. That's one of the biggest things. We can make it fun, and again, like you said, bouncing those ideas off one another as well. It revalidates your thesis. It revalidates your TA. It revalidates everything. Sometimes it doesn't validate it. Sometimes you see something that you didn't see, like, oh, wow, yeah, I see that now. That's a good point. Maybe I should not take this trade now. You know, and there's been a lot of times that we're like, yeah, you should take profit here. And it's like, hey, thank you, I took profit, because literally a second later it dumped. Or, hey, I was going to enter this short, but then we reviewed it, and it actually wasn't a good short, and I'm glad I didn't get in because I would have lost my ass, right? That's the power, and that's the beauty of being a part of an educational team. Not an alert service team, educational team. Rebecca is asking, what exactly is the course? That is a great question. The course is, I mean, by far one of the best things I've ever put together. So the course, give me 1 second. I'll actually pull up the page. for the course. All right. So, I mean, the course, I started on this end of last year. It took me maybe 6 months, 4 to 6 months to actually put together. It's a course that I built intended for new traders because I realized as a new trader, there was a lot of intimidation with courses for me because a lot of courses out there, people charge $2,000, $3,000, $4,000 for courses. I'm like, dude, like I don't have $2,000, $3,000, $4,000 for a course. Like I was intimidated. I didn't want to dump that kind of money into a course. The other reason courses were that expensive is because people kept charging more and more and more until they hit $4,000 a course. I'm like, this has got to change. Because if I would, back when I was a new trader, if there was a course under $1,000, I would have considered buying it and educating myself. But they were like too much money. So what I did is I put this course together, built for brand new traders. Built for brand new traders with cost in mind, right? Most trading courses on the market today cost $1,800 plus, but not the course I put together. This starter kit features over $2,000 worth of coursework, including 50 guided lessons, right? There's over 52 guided chapters and over 20 hours of on-demand video lessons. I structured this in a way that's easy to digest. Everything's one by one by one. You cannot get to the next lesson until you complete the first lesson, right? It keeps everything structured and guided, and it gives you time to digest the information, right? It's not $3,000, it's not $2,000, it's not $1,000. It's $449. It's under $500 for a course that other people charge $2,000, $3,000, $4,000 for. And you can go out there and look. Go look at Tim's course. Go look at Ross Cameron's course. Go look at this course. Go look at that course. Thousands and thousands and thousands of dollars. There's a big intimidation factor there. Huge. Huge, right? So now you get the same value, if not more, because it's very structured. A lot of these other courses are just kind of thrown together, not structured. This is guided and structured, step by step by step, allowing you to digest this information, and you're not paying more than $500. So that's the course. It's the ultimate day trading starter kit. Ross can trade. Yeah, I mean, hey, I'm pointing out, I like Ross. Ross is a good trader. I like Tim. He's a good person, right? But their courses are damn expensive. I'm calling it how it is. Their courses are expensive. He is a great trader, right? I like Ross. I support Ross. But his course is expensive. It is. I mean, that's just reality. Does it go into things such as like how to navigate, think, or swim? It doesn't. It doesn't. This is the fun. I mean, I'll show you the modules too. I'll show you the modules. So module 1, you have welcome to the kit. It's introduction to day trading, brokers inside your brokerage account, candlesticks, how to place orders, why we paper trade, manage your risk like a pro, separate reasons to take a trade, locking in profits, the basics, the fundamentals. All right. Then you get into module 2, which is an introduction to technical analysis, volume, support, resistance, SMAs, EMAs, trend lines, VWAP, RSI, an introduction to basic TA. Then you get into module 3. That's advanced technical analysis, the EMA short strategy, fibs, SMA pullbacks, breakouts, halt strategies, mid-candle breakouts, head and shoulder, cup and handle downtrend, RSI divergence, the pullback versus bounce place, 5-minute reversals, wedges, ascending triangles, red to green moves, bull flags, the 3 A's, risk management, goes on and on and on. And then you have bonus content. You have 15 lessons in the bonus module, stock selection, float, hot keywords to look for in press releases, how to be a chameleon and how to adapt to market conditions. The level 2, shorting stocks, how to grow a small account, offerings, options 1 and 2, futures 1, 2, and 3. And there's a lot of stuff in here. Not only are you getting a foundation of knowledge for trading stocks, right? But you're also learning about options and futures and swing trading and day trading and all of these strategies and techniques to where you can kind of just pull things from this and apply it to your trading to determine what your edge is. So again, there's over 52 chapters. There's 20 hours of video content. I mean, it took me 6 months to put that together, guys, like 6 months. So nothing but good reviews as well out of the course. So that's what the course is, guys. Yeah, so it's in your email. So our hosting provider is Thinkific. So we use Thinkific to host our course. So you would have received an email from Thinkific saying, hey, you've been enrolled for the course. Go ahead and create a password. You go ahead and create your password, and that gives you access. Yeah. So like I said, I put my stops underneath the pre-market low. Remember when I said, hey, I think 285 is not letting it breathe enough, right? I'm like, you know what? I want to kind of give it some breathing room, see if we can get through lunch, see if we can get up into the Fed meeting, and see if we can hold that level throughout the duration of the day, right? And see if we can have some volume move back into the day. But right now, guys, it doesn't look good on GRTX. It really doesn't, right? It really doesn't. And so one thing that you can take away from GRTX is, again, this is not my style of trading. This was more for a learning example, a learning lesson, teaching you guys, you know, the difference between scalping and kind of my style, how you see me trade, and, you know, how to scale in and scale out, that type of approach. Market conditions have a lot to do with, you know, your approach as well. Market conditions have a lot. And this morning, market conditions looked fine for penny stocks. Market conditions looked great. And then out of nowhere, market conditions went to crap. And it's crazy. Market conditions shift like the weather, right? Literally. 1 minute, it could be hot, and then you get a cold front, and it's cold, right? Market conditions shift like weather shifts, right? Every day is a brand new day with brand new market conditions. Those conditions can shift intraday as well. Market conditions have a lot to do with the strategy that you apply. Remember that example I gave you a couple weeks ago, right? Where you have great market conditions, neutral, and then bad, and how you have all of these strategies that work well in different market conditions, right? This approach works great in a hot market, right? When the market is on fire and you're seeing stocks rip and run, this approach works great. So why did I apply this approach today? Because this morning, the market was hot and on fire. This was up 120% on phenomenal news. We even see the attempt here today to really get that action. But out of nowhere, market conditions shifted, and now it's slowly fading and falling on off, which is very, very unfortunate, right? It's very unfortunate. But that's trading, right? That's a part of the game. Losses take place. Losses happen, right? Again, not every day you're going to master your trade. Not every day you're going to make $1 million. There might be days where you break even or lose $100. There may be a day like today where you're like, you know what? Market's hot, like the news. Let's apply this approach, and it doesn't work out. But you know what's really cool, guys? It's only 12 o'clock. We have 4 hours until the market closes. 4 hours, right? The day's not done yet. It's still early in the day. The day is still young. We have so much time to still take advantage of the opportunities that present themselves in the market, right? You know, this right here is the reality of trading no one talks about. You know, from really looking great to not looking great. Look at just how immediately the conditions shifted, right? Nice uptrend and then just getting hammered to the downside. That's how fast market can switch up on you. And this is, again, another great learning example on why I do not like the buy and hold approach. That's why at heart, I'm a scalper, guys. And believe it or not, a lot of people come to find out that they like scalping as well. They're spending the least amount of time in the market. They learn how to scale up their size on these trades, not make $100, make $1,000 in the same amount of time. That's why I see a lot of members leaning more towards the scalping, quick in and outs versus the longer term holds. But you have to know how to scale in and scale out. You have to know this approach and learn this strategy to even determine if it's a part of your edge or not. Let me check, guys. JL Rupee, same here. J Rich. I remember setting you guys up. Let's go check this out real quick. Thinkific. Let's go check this out real quick. If not, you'll get enrolled. But you may have missed the email. It could have been sent to spam. I'm not sure. Let's go check this out real quick. All right. So let's do. I think J Rich was first. I don't see the course. I got the J Rich. All right. J. Okay. Rich. 4th Black Friday. So we'll go here and type in. Users, and you're in there. You're in there, but let me resend it to you. Let me go ahead and resend it to you, all right? So I see it's in there. It may have just went to your like your spam folder, or maybe you missed it, but I'm going to go ahead and try to resend it. All right, so here we go. So you're going to set your own password. You're enrolled for the course. Save. You should receive another email with credentials. You were in there. It showed that you were in active enrollment. So it shows active enrollment, but it never showed completed enrollment. The enrollment was active, but it was never complete. So that means that maybe you just missed the email. So let's go look at AL Rupee. Yeah. Go check. All right. Yay! Jamie, check your email. Let me know if this comes through, all right? So you both should have received emails. It may take a couple minutes, but you both should have received emails. Don. You're in there too. I wonder if their server was down that day. Weird. I'm gonna resend all of these. I'm just gonna resend all of them. Even if you're not asking, I have to resend them all because I mean everybody shows active enrollment, but it doesn't show completed enrollment. So let's see if they go out today. So Don, you should be receiving an email right now. Jay, you should be receiving one as well. You got your, okay, fantastic. Okay, cool. So we got you guys. We got you. And then again, anybody else that comes in today, I'll do the same thing, guys. If you come in for a yearly, you're going to get a free course, right? If you come in for a monthly and you use the coupon, I will manually send you an email with the coupon for the 60% off. And then, boop, all you do is go on over to the link, enter the code, and you're all set, ready to rock and roll. And today is a very slow day in the market. Fed meeting, guys. That's it. That's it. It's a slow day in the market today. Matt, I'm sending you an email right now, boss. All right, Matt, I'm sending you an email right now. It's going to be a very simple email. All right, very simple email. It's going to have a link to the course and it's going to have the coupon. All right, I just want to make sure I get that out to you real quick if you want that 60%. So let me do this. Go here. Let's name off 60. Products, code here. Now we'll change it up because I said it out loud. I'll send you a unique code. There we go. I said it out loud, so now I gotta change it. So, 6 done. So here we go. It's a very generic email, man. It just has the coupon. Then kind of need a link, I would think. Let's see how I get my button. Oh, that is a share button. All right, cool. Here you go. So boom, boom, and boom. Yeah, I got to put a subject. And boom, there we go. There we go. All right, Matt, you're all set, man. Should be getting that email here very, very shortly. Classic gap up. Sure, it had higher than the volume due to low price. Could see from CPSH. I'll do it for the day, Chris. I'll run it for like the day. You send me an email and you're like, hey, wait until like Friday. I'll just send you something unique. And you could do it on Friday, but I put it on a timer for like 12 hours. CPSH. Not looking all that bad. Coming right into a level of resistance right around like 450 to 460. You have that 50-day moving average at 455 and prior daily support right there at 454. So yeah, it doesn't look all that bad, but just be mindful that 454 is a pretty decent level of resistance here. Got ESSC halted, it looked like. No, that was ESSCU, but ESSC is hitting our breakout scanner right now. Maybe we have some opportunity for some lunchtime trading, guys, right? No more buy and hold for Joshy Poo over here. You know how to buy and hold and scale in, scale out. You know how to make it happen, right? You know how to make it happen, right? We did an hour and a half of this today. So now we back to scalping, baby. We back to what we do best. Let's see what we have here, possibly on ESSC. Have a slight uptrend here, back down around like 2150. You're holding that prior high of 2214. Let's see how the stock looks off the prior high. All right, if we crack that prior high of 2214, back down towards around, I would say 2150 to 2170 for a possible entry on ESSC. Yeah, 2150 is a great entry. I mean, 2150 is a phenomenal entry. What a move. What a move there. That was good stuff. Yeah, possibly. Possibly, yeah. Downtrend break on GRTX. I see it, Wade. I see it. Good eye, buddy. Good eye. Definitely looking for a possible downtrend break reversal. And again, once the market sees a little bit more volume move in, maybe in power hour, again, this stock, I mean, met your typical criteria to be a good rate. You look at the daily chart, a lot of upside potential, the news. I mean, everything about the stock was just, why would I want to short against this? You know what I mean? Why would I want to short against it? And out of the gate, you wouldn't really want to short against it out of the gate because it ran from like 280 to 340. It's getting hit hard right now. But from my experience in the market, you know, you find a stock like that with the news, the catalyst, I mean, everything. I mean, I would not want to short against it. But again, market conditions playing a big factor here today. Yeah, I like your eye there, Wade. Definitely looking like a little bit of a downtrend break. I love it. Yeah, got the core set up. Now I'll be hitting those hard. Definitely hit them hard. It's good stuff, man. It's good stuff. So as soon as I get the merch, right, like I was saying, the man, the myth, the legend, Mr. Ed Nevis, such a kind guy, went out of his way to get some merch for us. So as soon as I receive the product, I will definitely get that sent out to you guys. New high a day on ESSC. Great little pullback off the prior high. It lost it there momentarily. I was thinking we can get down a little bit lower to that trend line. I never made an entry. But this stock is doing really well right now. Not doing all that bad. Got ESSC. SGMA has been dead all day. NES has been dead pretty much all day. How did Walmart do? You can see Walmart above our key level of 144. And, we can kind of see it struggling a little bit around that massive daily downtrend, but we are holding above that level. So I do like Walmart up towards around 146.50. I mean, you have about $2 to the upside here out of Walmart. Lowe's was a perfect rejection. Lowe's is actually making its way down to our 250 target. Never got back above the that 256.20 level, so not bad on Lowe's to the short side. Walmart was a great long. Roku still showing a little bit of potential. On Roku for that reversal. AMC, that was a tough one for me to grab. Right out of the gate, I completely missed it. VIX is moving up a little bit today, back up towards around 22. Q's kind of flat, and the SPY is just kind of chilling right now. Yo, Mango, good afternoon. What's up, buddy? Welcome to chat. I wonder how the new platform's coming along. Like, is he done yet? Is he done? Like, come on now. What's going on? Is he watching and listening? Are we there? Are we making progress? What's going on? What's going on? We're kind of getting somewhere. So I made the chart bigger for you guys, right? You said the chart wasn't big enough. So I made the chart bigger, and I added a new feature too. So when you hover over a ticker, you get a quick view of a chart. You can hover over any ticker, get a quick view, and if you right-click it, it'll pull up the interactive chart. And we made it bigger so you can actually sit here and chart right on the website if you want. So we're trying to work on the partnership for free, not delayed data here. So I think that'd be cool. But, we made the chart bigger. We added the hover quick view chart. And everything else that you said too, guys. We came in here and we pretty much tidied everything up. We did a search on FinViz for you guys and your search on Yahoo. So now you have a search on FinViz for you guys. You guys wanted that, so we added that for you. And then we tweaked some of the interactive ticker stuff. Yeah, global partnership with Workplace from Meta. Collab with Meta's Workplace platform. Okay, I can dig it. I can dig it on HLBZ. Not a bad little press release right there. Halts to the upside. 2 halts. Halt, gap up, breaking over the high of 850, halted at 9. We have room to 986, $10 here on HLBZ. This stock was halted at 1209.58. We'll be live at 12:14.59. So we should be live here in the next couple of seconds. Let's see if we got a halt strategy on HLBZ. Do a little bit of a halt strategy here on HLBZ to get something going here. We'll be live if it's a 5-minute halt right at 12:14:59. We got about 20 seconds to go here on HLBZ. I now have bids at 970 bids. $10 bids. Get out of here. Get out of here. We don't want to see that big of a gap up. We want to see the gap up, and we want to see those possible entries at 9 off the halt level. Should be live in 3, 2, 1. Live. Definitely didn't want to see it below the halt level, guys. Definitely didn't want to see it below that halt level. That's unfortunate. Not the halt strategy that you really want to see here. Not the halt strategy that you want to see. So, got my fill at 9. The halt strategy just did not bounce. So, I'm going to have to cut that one and move on to another one. Move on to another setup, another approach. I'm still giving a little bit of breathing room. But I got my fill at 9 off the halt level, and it just didn't bounce. Right, had the proper gap up, came down to 9, got my entry on my limit, and just didn't bounce. So I have to probably cut it here if it doesn't re-break above 9. Doesn't look like it's going to happen. Halt level to the downside's at 809. So, unfortunate, right? I really like the halt strategies, especially on the second halt to the upside with the proper gap up like that. Wasn't looking bad at all, but I'm still holding this. See if we bounce here off 850 and VWAP. If not, I have to cut it. I have to cut it. So still being patient here. Yeah, below 850, I've got to walk away. See if buyers start moving back in off a little bit of a VWAP bounce here. Yeah, I don't think it's going to happen. I don't think it's going to happen. So, yeah, I'm not thinking, yeah, I'm going to have to get away. I'm going to have to walk away from this. Well, that's unfortunate. On a decent little press release like that, I was like, hey, I mean, I definitely think that'd be a good halt strategy. But again, that's the market. Not any strategy works 100% of the time. But it was the right gap up. It came right down the 9 and just boop. It's like, we're not going to bounce off 9 for that pop to 10. But I'm still long on this one. For now, I don't even know why I'm still holding it. Like, normally I cut these once it drops below that halt level, but it came down so fast that I'm pretty much right where it came down to. So I'm like, you know, I'll give it a little bit of breathing room here. Just to see if we do have that bounce off VWAP. Came down very, very sharply. And I added to my position here off VWAP just to see if it bounces, but I'm gonna have to cut it and walk away. Definitely going to have to cut it here and walk away, guys. Not looking great. Halt level right now is like 793. The downside. AMD has the descending triangle. We'll have to go definitely take a look at AMD. Yeah, I had to walk away. I'll make it back. Small little loss. I'll make it back. It will make you back. Oh. All right, we got a couple more minutes, guys. About 10 more minutes, and then we're gonna dive into lunch. About 10 more minutes, and we'll dive into lunch, guys. What was the other? It was ESSC. This thing just absolutely took on off. Let's see if I can locate some shares on ESSC. See if I can locate any shares here on ESSC. I mean, the stock just went right from 23 to 25. Got to pull back a little bit, but how much is it going to pull back? You said AMD, a little bit of a descending triangle. I like me some descending triangle. Oh, yeah, it's already cracking right now, too. It's already starting to crack. Big head and shoulders. It looks like a huge head and shoulders. Then a little bit of a descending triangle in there as well. Good eye, Corey. ESSC, halt level to the upside's 2670. This thing is just straight up. When it starts to pull back, guys, ESSC is going to pull back. There are shares locatable, and they're not expensive. So there are shares to short, and they're not expensive. Oh, I mean, again, I'm a big fan of shorting high a day, but with this much momentum to it, straight up, I don't know if I want to be risky like that. Oh, crap out of me. Hold on, guys. One second. All right, guys, I'm getting ready to head to lunch. I promised my beautiful wife I would help her with her website today, so I'm going to help her get all set up. So right now, guys, it's lunch, slowest time of the day. We are waiting for the Fed meeting, 2:30, according to Angel. Angel said right about 2:30. When that Fed meeting will take place. So we're definitely looking to see how the markets react to that and see if we have any great opportunity come end of the day. The day is still young, super young. And today wasn't really a big trading day on my part. Definitely not. I've only had, 2 trades, 2 positions. Not my typical approach, but hey, it was definitely a good day to apply this and to learn. So right now, the only thing that I'm looking at is ESSC. I located some shares to short just to have them on the back burner. It only cost me like $50. It wasn't all that much. So let's see if we have anything in the next couple of seconds. If so, maybe get a couple doll hairs. The stock is very, very oversold. Let's go look at this one over on 15. 15 looks good. Let's see, let's try and pop into a new high a day real quick. Could be a quick little double top, but I want to see a false breakout over maybe like 26 here. If we get a quick little false breakout or like 26, I mean, it's very overextended. She needs to pull back. Right? When she gets overextended, it pulls back. We're very overextended here. That was a slight pullback, and it's a momentum stock. It's really grinding that 9 EMA. It's really grinding that 9 EMA here. But again, my approach in this market has been shorting a high a day. I know it's a risky approach, but that's what's been working for me is shorting high a day. See how far if this is going to pull back aggressively. We are into lunch. Things do typically start to slow down. With that being said, let's see if we can get a nice little pullback off that false high a day there. 2627 is not a high a day number, so I expect at some point for it to re-break into a new high a day because it just doesn't seem like 2627 is a high a day number, but I'm currently up like $300 on the short. I'm just looking for that big pullback that, I would expect that we should see after, that overextension move to the upside. Again, that's just what's been working for me lately in this market is shorting high a day. Right now, I'm going to lock in half. I'm going to scale out a little bit more. Still holding short. Where's the halt level to the downside? Can we get a halt to the downside here? Still dropping though. Heck yes. Let's lock in a little bit. Nope, we're still holding. We're still holding. 24.50 crack. 24.50 crack. Come on, crack 24.50, baby. Can you do it? There we go. Keep coming down for us. Keep coming down. 24.40. There we go. That's a $700 trade right there. There we go. See? It only takes one good trade and one good opportunity to get a nice little profit. Still have 250 shares here. Glad I went ahead and paid for those shorts. Keep coming down. You have room down below 24. Let's lock in a little bit more. I got 125 shares left. Looking to see if we crack below 24 here. Halt level to the downside is way under 23, so we don't have anything to worry about for a halt to the downside. I'll take a break-even day. I'm break-even right now. I mean, I'm all about break-even days. I'm not all about break-even days, but, with a choppy day. Okay, I'm out. I'm going to go ahead and take that. Little quick high a day, false break over high day. Again, that's something that's been working for me lately, especially when the move's overextended and it looks like it's going to break into a new high a day, which it did. I short that high a day and look for that nice pullback, especially when we're overextended. So I was able to get in where? Where did I get in at? I was able to get my entry at 25.84, out at 24.80, 24.33, and 24.33. I didn't get a full position. I still have 500 shares on the back burner on standby. But I mean, it was a $600 trade. Made up for the HLBZ loss. I had a small little win on crowd. And I'm currently down a little bit on GRTX. So right now I'm down $17 on the day. Can't expect to be right every single day. You can't expect to be, have green days every single day. But I really like to limit my losses, right? I'd rather have a break-even day than a red day, of course, right? I would rather be able to, take my red days and turn them into break-even days to where I don't have holes to, dig myself out of. So that being said, at this pace with the market and kind of seeing how things are moving and, the consistency and everything like that, I'm probably going to wrap it up, right? I'm going to just take my break-even day and call it a day, guys. Why sit here and give, another $500 back, another $1,000 back after I just dug myself out of a little $700 hole? I would rather just close my day up down $17.55 and not give anything back and put myself into a little bit of a hole. I don't want to give my monthly profits back. All right, guys. So that's kind of where I'm at right now. Again, I still have my hard stop on GRTX. And right now I'm just looking to see if this one gets any kind of action coming to the end of the day. If not, I'll get my stop out. It'll be a small $100 loss of a day. And we come back tomorrow and hit it hard once again, guys. All right, so, woo, what a long day, guys. 12:30 in the market. We have been nonstop since 8 o'clock this morning. We jumped on the mic, so what a fun day. What an awesome day, guys. You learned a lot in a real life trade, in a real market, of how, you scale in, scale out, how market conditions play a huge factor, and how market conditions can shift at any point throughout the day, right? So, again, hopefully this was a great learning lesson on, scaling in, scaling out, leaving runners, things of that nature. Yesterday was more of a leave a runner approach with my short on, what was it? BLU, right? That was when I entered in 100% and I scaled out periodically throughout the course of over 30 minutes, as far as just simply scaling out, or how you scale in to build a position and scale out on a stock that you think has good potential. And GRTX did, right? It's just market conditions really didn't assist us today on GRTX. But overall, it met that criteria and market conditions were healthy this morning to go ahead and apply that kind of approach. But you see how I enjoy getting in and out quick with larger position sizing, right? Getting in and out quick versus buy, hold, buy more, hold, buy more, hold. But again, maybe that's your edge. Maybe that's a strategy that works for you, or maybe it's a strategy that you can back test in different types of market conditions to see where it works best, to see if something that you want to add to your playbook, right? That's what it's all about. is trying to break every approach down in a way that makes sense, a way that you can learn it and apply it to see if it's even something in the first place you want to continue to apply in the markets. And most importantly, again, the market conditions that you're in as well. All right, team? So with that being said, awesome job and awesome work today. Ow! You guys crushed it. Super fired up, super excited, super proud of each and every one of you. It was definitely a fun day. It was definitely a value-packed day, guys. And once again, over on YouTube, wait for bag holders. Yeah, we'll see. Where did you look at? Light speed? Are you still long on GRTX? Yes. Absolutely. Sent you the email. Don't forget it. I got you. Great lesson. Thank you. 100%. Quick little entries. I like it. I like scalping, guys. Live stream is up throughout the remainder of the day. I may be back here this afternoon, just kind of with the Fed meeting at 2:30, seeing how the markets react. I want to make sure I'm here and see if we have any opportunity. All right, guys, so I'll be back maybe around 2:30, 3 o'clock during the Fed meeting, but I'm definitely going to be tuned in and listening to the Fed meeting, and I'll definitely get TD Ameritrade CNBC up as well. I'll go ahead and do that now over lunch so you guys can listen to Mr. Powell talk as well. So live stream is up till 7. You guys have access to the scanners via the live stream until 7 o'clock. I'll be back here a little bit later this afternoon. Talk about what we have after the Fed meeting and see if we have any other opportunity. But right now, I'm pretty much break even, guys. I'm up $12. Right? I'm up $12. One of those days. It's all good. You can't expect every single day to be a green day, right? And today's a break even day. I'll take it. I'd rather have a break even day than a red day, guys. All right, so with that being said, let's go ahead and put up CNBC US. Go ahead and open up the desktop audio. You guys can listen in, tune in, enjoy your lunch, and I'll see you guys back here a little bit later this afternoon in 3, in 2, in 1. Woo! Once again, great job and great work, traders. Keep up the good work. Keep crushing those goals for the month of December. Keep working on that discipline, guys, and nothing's going to stop you in 2022. Have an awesome lunch, team, and I'll see you guys back here a little bit later this afternoon. Take care, guys.
I think the Fed is 2-3 months behind where it ought to be right now. It ought to have probably begun the taper September. Instead, it started November. Now it's going to accelerate it pretty much up for where it should be. And then it'll bring those rate hikes forward. So we could be okay here, Scott, in a decent atmosphere. But I think Wilson has a good point that watch the multiples. What is the multiple with a Fed that returns more to normal?
And let me be clear in the way that I was paraphrasing James Gorman and my question to you. He was more suggesting that the Fed start early with its increases rather than suggesting that they're incredibly late, as I may have incorrectly paraphrased. So I just want to make sure we're 100% clear on that. So I just don't want to misrepresent what he exactly said.
It's just that there's this prevailing idea that the Fed is very, very late. I just think, the Fed can't, in response to a $1.9 trillion stimulus bill, right away increase rates in response to that. That's not the way things work. You need to see what happens, how long it takes, and everything like that, and see how people respond. And I think the other aspect, which is that, who was betting that all of these supply chain things would not go away, that there'd be ships and we wouldn't be able to get them unloaded? That's a pretty unusual occurrence. And I think they're going to get these ships unloaded. I think Josh has a bit of this right, and I think Steph as well, that they're going to solve that part of the problem. Where I'm more concerned is the wage side of things. I think you have two supply issues. One is the ships, the other is people. And I'm not sure what's going to happen getting people back into the workforce.
Sure, which the people side is probably why the transitory being retired comment was made more than anything else.
Right.
Steve, we'll talk to you, I'm sure. We'll see you again tomorrow. That's Steve Leisman,
thanks.
Senior Economics Reporter. Up next, betting on the consumer. Goldman Sachs has its favorite restaurant stocks for next year. I also see on my list today, Pete Nigerian is buying more. Ooh, can't tell you yet. We'll do it next.
Welcome back. I'm Rahel Solomon, and here is our CNBC News update at this hour. The death toll from tornadoes in Kentucky remains unchanged at 74. Governor Andy Beshear says that more than 100 people are still missing. Beshear also said that the owners of that candle factory where 8 people died believe they have located all of their other workers. The Washington, D.C. Attorney General is suing the Proud Boys and Oath Keepers over their involvement in the January 6th riot on Capitol Hill. He accuses them of planning an attack and seeking to prevent members of Congress from declaring Joe Biden the winner of the 2020 presidential election. And the COVID vaccination rate in Africa may not hit 70% until late 2024. It's currently below 8%. This all according to the World Health Organization. Some developed countries, but not the U.S., have already hit that 70% level. The WHO also reporting that Africa is seeing its fastest surge in COVID cases this year. New infections, Scott, are up 83% over the last week. I'll send it back to you.
All right, Rahel, appreciate that very much, Rahel Solomon. All right, let's talk about some moves. Pete Najarian, I teased what you were doing before the break, and now it is time. Because your brother yesterday mentioned that he was seeing an enormous amount of call buying in Apple. You obviously see the same thing, considering you guys have the same firm.
I do.
And make some of the same moves. So you bought more Apple calls?
Yeah.
Sometimes. It's important sometimes.
Yes.
You don't always like him. I'm not trying to suggest that you always like him. I mean, you're brothers after all.
I do not always like him.
Sometimes stuff happens. I mean, I have a brother, I understand.
Right.
But you bought more Apple calls.
You get it. Yeah, absolutely. And Scott, it's just amazing how every single day, it seems like, of the week, we continue to see Apple calls, including today. Just as we're sitting here and I was listening to Steve Leisman, a buyer of Apple calls came in again, 15,000 of these December 23rd, 177.5 calls. It's just a daily thing that we are seeing with Apple, and they continue to come. Now, I'm okay with the fact that the stock has pulled back. Obviously, yesterday with that big run up to 182, it pulled back, and today it's nearly 172 or wherever it is trading. But they have been so right so consistently that I, of course, am going to try to follow along with that as well. So it gives me the opportunity at least to look and see, and maybe if the stock does pull back, I can jump in. I have not grabbed these particular strikes yet, but it's something I'm definitely looking at. I've got multiple different positions right now in Apple that go all the way out to January. So I just, as long as they continue to buy and they continue to be right, Scott, I'm going to be riding along with them. So I've already got the stock, and I've been adding all these calls.
Yeah, it's interesting. I mean, it also just speaks to, as I was discussing with Mike Wilson, the ability of Apple, maybe more than anything else, to be so incredibly resilient, Pete, in the face of some turmoil, to just be able to march towards new record highs, even when there's no legitimate fundamental reason at stake at the particular time.
Yeah, there's no doubt about that. I remember a lot of people were getting very nervous when the stock was just pausing, Scott. You know, a couple of months ago it was pausing, and that, you know, everybody said, Apple's not participating, participating at all. There are other names that are pulling the market up. That is what Apple has been doing now for the last decades, is it makes big runs to the upside. We see it plateau for a while, and then the next leg starts to move to the upside. And that's just been the historic way in which Apple has been trading. So I wasn't overly concerned, as hopefully you remember, throughout this year when we've had those pauses. Eventually, something's going to be the trigger. Something's going to be the catalyst that's going to push it to the upside. But I'll tell you, when I look each and every day, like, for instance, yesterday, they traded 3.2 million contracts in Apple alone, 70% of which were calls. So that just gives you a little bit of an idea. The next closest is 1.5 million with Ford and 1 million with Tesla. So that gives you an idea of just how active it is in Apple on a daily basis. It's unbelievable.
Yeah. Let's do some calls of the day now. And Steph, Goldman Sachs has named McDonald's among the restaurant stocks that it puts at its top 22 ideas. Everything's reiterated to buy: McDonald's, Starbucks, Shake Shack, Chipotle. McDonald's, though, to you first. There it is.
Yeah, I mean, it's been a good stock, up 22% till you get a 2% yield. It's not cheap, Scott. It's at 27 times forward, but it's steady. It's stable. It acts like a staple. So for me, you know, I have a lot of juice in my portfolio. I've got a lot of cyclicals. This kind of offsets it, but they've done a great job in terms of menu simplification, drive-through momentum, digital investing, and delivery options. And so they have $4.3 billion in cash. They actually reinstituted their buyback. They increased their dividend 4%, exactly what you want this stock to do and this company to do. So I'm going to continue to hold it for 2022.
Okay. Starbucks. Jim Lebenthal, you're up with that one.
Yeah. I think I've said this before as an equity portfolio manager holding about 25 stocks. There are 5 that are in the bottom quintile in terms of being my favorites. I don't love all my children equally, at least not in my business. They had a very bad quarter with bad guidance going forward. I need to see guidance, particularly in China, improve on the next quarterly report, or I will be gone from the stock. Now, what I'm looking for from the stock is some good guidance, and that in the next year it basically does just a little bit better than the S&P 500. I'm not looking for shoot the lights out here. They need to get their China operations on track.
Josh, give me a comment on this. This is Jim Lebenthal. This is the farmer getting mad. This is him mad, right there. He's like, it is, Starbucks is on thin ice, folks. And if it doesn't come through with better guidance, I'm out.
I don't have that concentrated of a portfolio, so I don't need performance from every one of my names. I don't have to backhand slap the holdings when they don't cooperate with me over short periods of time.
Let me put it this way. Do you agree with Goldman?
I own Starbucks.
Do you agree with? I know you do. Do you agree with the Goldman side saying, "Hey, this is one of our top picks," or are you leaning more towards Jim, who says, "Well, I don't think it should be a top pick, and it's kind of on thin ice"?
I don't know if it's. I agree with Jim. I don't know that it should be a top pick, but let me holler at you because this stock's up 83% in the last 3 years. And that includes the worst pandemic in a century. So, I feel like they're doing okay. Shake Shack's up 55% in the last 3 years. They sell burgers. They don't sell the cure for COVID. That stock's hung in there through probably the toughest environment it will ever have seen. Was 2021 a great year for these stocks? No, but that's okay. If you're an investor, if you own any business, every year can't be the best year. So I'm in Starbucks. No plans to do anything. I accept that there'll be a quarter or two each year that disappoints. If it gets out of hand and there's a real problem with the business, I'll change my mind. That hasn't happened with this name in 25 years.
The only business that I know of that can be the best year every year is the New England Patriots. Oh, but somehow.
Wow.
It's amazing.
All right, up next, Pete's latest trades and unusual activity. And later today, we have a CNBC exclusive. Wilfred Frost is at it again. Bank of America CEO Brian Moynihan, closing bell, 3 p.m. Eastern. Halftime's back right after this. All right, Pete, we got to be kind of quick today. Unusual activity. What do you have for us?
Sure. This is a Mike Wilson sort of a name where we're talking about reasonable valuation. We're looking at Kraft Heinz, 13 PE. They're rolling from December, buying January, buying the January 14th expiring 36 calls. Scott, 10,000 of those for 54 cents. Pretty interesting to see that. A lot of activity in this particular name. Also seeing some call activity in Uber. 4,200 of the December 37 calls. Stock was trading right around 37 at the time. So seeing those calls getting bought as well as the 38 strike calls December 23rd expiring. So a lot of activity in both these two names.
All right, good stuff, Pete. Thank you. Jim Cramer's Charitable Trust is active in the market, buying more of a specific stock. It's up almost 40% this year. We're going to tell you what it is. It's also trimming this stock, which is up almost 30% this year. Most of our committee members disagree on that move, which is why we're going to debate it next. All right, we mentioned ahead of the break that Jim Cramer's charitable trust is making some moves, trimming Walmart, adding Chevron. The more significant one for the terms of our conversation today, though, is the mystery chart. He's trimming Cisco. This happened yesterday. Still likes the stock, says he's pretty torn on Cisco because it's the type of stock that can work in this market. It's the opposite of a high-flying, unprofitable, quote-unquote, conceptual company, he says. As much as we like the characteristics, though, we believe it is still prudent to trim our position and lock in some gains. Jim Lebenthal, you own Cisco. What do you think about this move?
Well, first off, I'm chuckling at what he said because it's a value stock, right? And you don't generally get value stocks in technology. That kind of makes it special here. Look, from what you said, it sounds like he really doesn't want to trim it, and I don't think he should, but he's his own boss. The stock had a bad quarter, but it had a bad quarter because of supply chain issues, which so far every company in the last year that has had a bad quarter because of supply chain issues has seen the problem rectify in the next 1 or 2 quarters, which is likely to be the case with Cisco. And in the meantime, you've got great demand for its products, whether it's the hardware as CapEx keeps going on, or security, or the subscription software. So I think you're really supposed to own this stock and not trim it.
Yeah, I mean, remember, he said it's the opposite of all those kinds of stocks that he thinks could get slammed as what the Fed does. But all that said, it's maybe time to trim the position a bit. Pete, you disagree? You own the shares, too.
Yeah, I absolutely disagree. I understand why, though, that Jim is making this move, but I still think you need to hold on to this name. When you look at the fact that they've got double the cash versus the debt, you've got a great fundamental story here, and you've got the demand, as Jim was just pointing out, and you look at the free cash flow. Every box gets checked on this name, and so because of that, I think there were other names that I would probably have gone to first before I'd go and trim this name.
What about you, Steph? You own it, too.
Yeah, I own it because enterprise spend recovery is just starting to recover. We saw it last week with Broadcom. We saw it with HPE. We saw it with Dell. Cisco had a very good quarter, as the guys just mentioned. Good visibility, 33% product order growth, 200% order growth in cloud, 46% order growth in commercial, and 30% in enterprise. If that's not visibility, I don't know what is. And yeah, operating margins and gross margins were guided lower, but that is supply chain. They put price increases in place already, so they're in good shape for 2022.
Well, let's be clear, too. He took it down by about a 0.5% in terms of the weighting in his portfolio. Jim is listening to the other Jim, Farmer Jim. He says, you're right, Jim. This is on Twitter. He says, you're right, Jim. I really didn't want to sell it, and we still have a lot of Cisco, but we like Chevron, cheaper and a better yield. Cisco missed the last 2 quarters, so at least you have that, and that's a response from Jim Cramer to Farmer Jim Lebenthal. Final trades next.
Missed the show? Don't sweat it. The Halftime Report now has a podcast. Market-moving interviews, call of the day, unusual activity, and of course, Ask Halftime. Look for us on Apple Podcast or your favorite podcasting app. Follow the Halftime Podcast.
All right, the Linkster first. What's your final trade?
Darden, it's had a nice year, up 28%, but trades at 19 times and it gives you a 3% yield. Casual dining total addressable market is $195 billion, and they are taking market share. Expect a good quarter this Friday.
All right, we talked about those other restaurant calls. Darden wasn't on that list, but it's on yours, and that's what matters most. Steph, thanks. The Good Farmer, Farmer Jim.
Well, I'm planting an early seed here with Bristol Myers. To say that the stock has been difficult this year is an understatement. But I think yesterday's dividend increase and share repurchase, and it's a pretty big share repurchase, more than 10% of the market cap, is the potential catalyst that it is now going to break out and continue to break out as a result of. So Bristol Myers Squibb.
All right, Pete.
You know how I love those financials. I'm just looking at AIG, and I haven't seen this in a long time, Scott, but we just had a buyer of AIG. They're buying the December calls right where the stock is trading right now. I like what I'm seeing there. I haven't had a chance to buy it yet, but I will probably be in those calls before the end of the day, no doubt in my mind. I like what I'm seeing here.
Yeah, looking at the stock as we speak about that. Thanks, Pete. Josh Brown.
Yep.
I can't believe nobody's talking about this. It's the biggest breakout in the whole market. Berkshire Hathaway B shares printed a record high in late May, early June of this year, spent the rest of the year consolidating. We are about to close, if we go out here, at the highest closing price of all time in Berkshire B shares. What's in this? Industrials, financials, two of the best sectors right now. I would be long here.
All right. Thanks, everybody. The exchange begins right now.
Thank you, Scott. We have the flip side of what Josh was just talking about. Hi, everybody. I'm Kelly Evans. Ahead this hour, an ugly PPI report has stocks in the red today. The NASDAQ is slumping 2%. Let me look behind Dom. It's still down about 300 points, all as the Fed kicks off a big two-day meeting. Will they look at the inflation numbers and taper a lot faster? My next guest says markets could stay ugly for a while, and he has 4 names, count them, to ride it out. Plus, what the heck is going on with media stocks? They've been crushed lately, trying to stage a comeback today. We'll look at what's driving the losses and who's best positioned to turn things around, if anyone. And the big calls for 2022 in rapid fire today. Disney, Apple, Chipotle, and more. The story and the trades ahead this hour. But first, let's get those specifics. Dom Chu is here to do the honors.
The numbers are just as you pointed out, Kelly, because what you're seeing on a relative basis is, again, this kind of flip side trade. Is it a rotation? Is it not? The NASDAQ composite, 15,113. That's down 300 points. It's down 2%. You juxtapose that to the Dow Industrials, down about 200 points, which is only 0.5% downside. So real relative outperformance. If you look between these two particular indices, the S&P 500, by the way, 4608, down about 1.25%, 60 handles to the downside, to kind of put a little bit of context around the major indices here. One place you are also seeing some relative outperformance, believe it or not, is in the small cap stock market. Look at this as the iShares Russell 2000 ETF. The ticker is IWM. It's down about 1% today, so not nearly as much as the overall NASDAQ composite. But the reason why is it's been pretty much locked in this kind of range for a while now, for the better part of a year. It's now at the bottom end of that zone here. So as traders start to kind of wonder what the Russell 2000 small caps could be telling us about a broader market narrative, this could be an area of support that some are looking to dip their toes into. Maybe it explains some of the relative outperformance versus the NASDAQ overall. And if you're looking for the meme stocks, check them out today. Remember, both AMC and GameStop, the OGs, the originals of these particular meme stocks, are down big yesterday, about 14% or so. Well, GameStop shares right now are off their session highs, but they're still up about 3.5%, and AMC Entertainment up about 3.25% as well. But again, Kelly, 14% downside yesterday. They are both well off their highs from the meme frenzies earlier this year. We'll see whether that trade continues to play out, Kelly, to the downside, or whether they can hold a little bit here. Back over to you.
This is the big area to watch into year end, isn't it, Dom? Thank you very much. Well, it wasn't 10%. It wasn't 10%. Markets were braced for PPI to hit that reading on a yearly basis in today's report, but instead it came in at only 9.6%, only, still the highest on record. The response in bond yields, the 10-year edged higher, but the much bigger response, as Dom was just showing us, really in the NASDAQ today. down 2%. It's down about 7% already from its late November highs. And my next guest says, buckle up. Markets are going to be choppy for a while. Joining me is Jason Brady. He is CEO and co-portfolio manager at Thornburg Investment Management. Welcome, Jason. How choppy?
Well, look, we'll see tomorrow a little bit, right? The Fed tapers a little bit faster than the market currently expects, and you continue to get some flattening in the yield curve. A lot of the market leadership that we've seen over the course of the last year or so has much more shaky foundation. So I heard in the last hour a lot of commentary around dividends, valuations. I didn't think that was a 2021 conversation, but I think it is going to be a 2022 conversation.
All right, wait a second, because I think you're throwing some shade here. Tell me what you want to, what bone you want to pick about dividends.
Oh, no, the opposite. I think actually focus on cash flow and dividends has really been something that's been missing from the conversation. And as I heard some of the folks in the last hour talk about their names, you know, they weren't talking about GameStop going down 14 and up 4. They were talking about, you know, much more basic blocking and tackling cash flow businesses. And that is absolutely where I think, and we think, investors should focus given the coming volatility.
We teased that you have 4 specific plays. These look like specific names. Walk us through them. A couple, Visa, JP Morgan jump out to me, although, I mean, each one of these we could talk for a long time about. Tencent is on here. What's Total Energies?
So Total is a French-based international oil company.
Total, gotcha. Yes, go ahead.
It's an underappreciated ESG story, actually, given the transition that's going to have to happen through natural gas. They're a big natural gas producer. From a valuation perspective, obviously, good valuation, about 12 times today. 6% dividend yield, and obviously something that has some protection, at least in the medium term, from inflation. So good valuation, obviously good cash flow. The entire energy complex is focused much more on cash flow, and I think that shows up here in this name.
What about Visa and JPM? I mean, I'm lumping them together, but really Visa has a lot more particular headwinds it's been dealing with.
Sure. So you think about all of these names together. For us, a lot of what we're thinking about at Thornburg is portfolio construction and balance. If you go totally to one side, to the other side, you end up with an imbalanced portfolio. So some element of growth and paying for growth, that would be Visa. And now Visa is expensive on a PE basis, but obviously it's had a much tougher year. We think that the playbook for fintech is not so much to take over from Visa, but ultimately to be subsumed by Visa and their ilk. It's a really valuable network. So that's one side. Also financial, but totally different business model, obviously. JP Morgan, you're going to see slowing earnings in 2022 because of less reserve releases, but this is absolutely a benefit from higher Fed.
So Tencent now, I mean, the China names have so many problems. Tell me why you'd want to wade into these waters.
Sure. So first of all, like I said, it's a balanced portfolio, right? So if you said the U.S. did really well this year and China did really terribly this year, so let's keep betting on the U.S. and sell China. You know, I kind of like to buy low and sell high, even though sometimes that's a little harder to do. In the context of a balanced portfolio, it's easier. So Tencent's down 17%. We believe a lot of those regulatory headwinds are in the name. But you look at the PE and the growth, this is something that easily is growing in the high teens. And with a similar multiple, that kind of profile just doesn't exist in the U.S. market. So a good part of a portfolio.
So final question is, where do you think the NASDAQ is going from here? Significantly lower?
Look, it's a great question, and somebody smart once told me not to put a date and a number in the same sentence. But look, if I'm betting, I think the Fed really is going to address the CPI numbers. I really do think that for some of the names that are not quality, they're not cash flow producing, names that are the meme stocks, as an example, not the Microsofts and Googles of the world, those are going to be in much more trouble. So the NASDAQ is a big market. It's driven by large cap names. That will be a headwind, but not nearly as much as down the cap stack to the less profitable companies.
A lot of which are already down big from their highs. Jason, thanks for your time today. Jason Brady of Thornburg. Speaking of poor performers, take a look at the media and telecom names. Discovery and Comcast are at their lowest levels in over a year. AT&T is around its lowest level since 2009, and Disney on pace for its worst year since 2008. What in the world is going on here? Let's ask Julia Borston. Julia?
Well, Kelly, a combination of factors have been weighing on media stocks. Concerns about slowing streaming growth and ad spending under pressure from supply chain constraints. And then, of course, there's the uncertainty about the future of moviegoing, not to mention COVID's impact on theme parks. Now, some media stocks are bouncing off lows. Comcast is up over 2%. Discovery and AT&T both up fractionally today. But this comes after both Comcast and Discovery hit a 52-week low earlier this morning. Macquarie Research downgrading Comcast today, saying, quote, a moderation in broadband growth combined with potential delays in recovery at the parks, along with ongoing investments in content, creates an overhang on the stock for the time being. Macquarie saying that it's becoming more cautious on traditional media overall as streaming wars go global. It also lowered its price target on Disney, Fox, and Viacom CBS. Now, Morgan Stanley is also lowering its price target on Disney, though maintaining its overweight rating on the stock, saying shares have overreacted given that the media giant has iconic franchises that stand apart from the competition. But they say that a key point of concern is whether Disney's U.S. streaming business has stopped growing. So for all these companies, Kelly, there is huge pressure to shift to a direct-to-consumer model and to keep those subscriber numbers moving higher.
Yeah, I mean, they're all in slightly different parts of the media space, and yet they're all syncing together, which you said it, but always suggests that competition is a problem. You know, I even think about Starlink, you know, and we've talked to analysts about this and, you know, asking about a name like Comcast, obviously self-interested. They're like, you know, they've got wireless 5G pressures coming. Then there's regulatory concerns. Then by 2024, so we could be talking about competition from Starlink. Are they right?
Well, look, I think there is definitely this sense of convergence. I was emailing with Craig Moffett, and he was saying that he sees convergence as being an issue here. And that, you know, is a perfect example of the fact that Comcast is now selling mobile services as well. Of course, you have AT&T in both broadband and mobile, though they're getting out of the traditional media business. But I think there's a sense that all of these companies are going to want to connect direct with consumers. Yes, there is this broadband business that may not be growing at the same rate that it was earlier in the pandemic, but is still a valuable business. But when it comes to the actual media assets, those are best served by a direct-to-consumer relationship. And especially as you look, Kelly, at the challenges of targeting advertising with Apple changing its operating system and the challenges that's given to Facebook when it comes to these media giants, the fact that they're getting better and better at targeting, I think, will give them an advantage going forward.
All right. I'm going to hold you to that. Julia, thank you so much. It's good to see you today. Julia Borston. Tesla is about to snap a 6-month winning streak as it's already down nearly 20% just in December. Are investors shifting into some of their competitors? We'll explore that. Plus, the street's top picks for 2022. Get excited. We have them coming up in rapid fire. And a quick check on the Dow as we head to break. Travelers is leading. Don't see that often. Microsoft and Salesforce lagging as tech is under pressure today. We're back in a moment. Welcome back. It's been a tough month for Tesla investors, and we're only 8 trading days in. Tesla has dropped almost 20% during that time, giving up a third of the 62% gain it had for the year coming into this month. It's not even a $1 trillion stock anymore. Is it Elon's fault for selling a bunch of his shares? Is it just a healthy correction from a hot run? Or is competition from the likes of Rivian having a real effect? Garrett Nelson is an analyst at CFRA, and he joins me now. Garrett, what's your diagnosis?
Sure. Thanks for having me. So we really think it's a combination of the three. It's Elon Musk selling a lot of stock. Obviously, the company's largest shareholder, he owns about 20% of the company. So it's really hard to buy when he is just unloading as much stock as he has been over the last month or so. It's increasing competition from the likes of Rivian, Lucid, and traditional automakers who are dramatically increasing their investments in electric vehicles. And there's other factors such as these semiconductor issue, chip shortages and supply chain issues, which we see lingering well into 2022.
But the first one you mentioned, which are his sales, are nothing fundamental about the stock. You know, so if I were a buyer and I liked it for all the other reasons, his sales would be a gift. It gives me an entry point 20% lower than what I would have had a few weeks ago.
We think that's right. However, we think the stock was overextended to the upside. And it still is. The valuation, in our views, is still hard to justify. Still trading north of 100 times our 2023 earnings estimate. So that's still a multiple. We're still cautious. We have a hold on the stock. It's still slightly above our price target. However, we do think the valuation is becoming more interesting here following this sell-off.
We're at 940. Remind me what your price target is.
It's 875.
And 875 means, while we could have a little bit more downside, you're starting to see this valuation making sense to you. So then what do you think we should consider in terms of the legitimate competitive pressures from something like Rivian? On the one hand, Motor Trend's car of the year. On the other hand, they're a minnow compared to how big Tesla is.
Sure. We still think Tesla has major competitive advantages longer term. When you look at their goal being to grow their annual auto volumes by a factor of 40 over the 500,000 autos that they sold in 2020. So they want to grow that to about 20 million units a year in the year 2030. So we think they have a significant significant cost of capital advantage. However, what you are seeing from the Lucid Air, for example, is a product with specs that are on par or even superior to a Tesla product, which we haven't seen in the marketplace until recently.
Absolutely. And maybe it's a preview of what's to come. But then they did just announce, or maybe it was a Musk tweet where he said Cybertruck's now going to be a quad motor. Are they going to be able to just keep up with all of these new features competitors are offering?
It's going to be difficult. And you look at Tesla's market share of the US EV market, they have close to 80% market share of all electric vehicles sold in the US. It's hard to imagine that market share growing any further from here. And that's really where Tesla has excelled over the last 5 or 6 years, is growing that market share dramatically and becoming the major player. But you're going to have a lot more competition. You're seeing it now, and you're going to have a whole lot more competition showing up in 2022.
All right, Garrett Nelson, thanks for joining us today. It's good to see you. Garrett Nelson with CFRA. Still ahead, we've talked about Tesla, the NASDAQ, the media names, but there are still more underperformers to investigate, like FinTech. Huge losses in some of the biggest payment names this year. Oversold yet? We'll find out next. And the Senate just wrapping up its hearing on stablecoins. Capitol Hill's second crypto meeting in less than a week. The CEO of Circle joins us ahead to talk about the likely fallout and why Bitcoin is down nearly 20% this month. Stay with us. Welcome back. We're off the lows. Dow is down more than 200 points. It's down 150 right now. It's actually the outperformer. Look at the NASDAQ down 281. We're watching that closely. And three movers we're also keeping an eye on. We're starting with Uber and Lyft. Higher on those CEO comments last week that last week was Uber's best week ever for gross bookings. Think about that. Uber's best week ever. That has both of these stocks up. Lyft 2%, Uber nearly 5%. They're still down 40% from their highs. Next, Beyond Meat bouncing off its 52-week low after Piper Sandler upgraded the shares to neutral, saying a nationwide McDonald's launch of the McPlant burger is coming in about 3 months. These shares are still down more than 60% from their January high, up nearly 9% today. And third, Adagio Therapeutics continues the awful year for a lot of biotech stocks. Remember, these shares spiked a couple of weeks ago on hopes their COVID antibody drug would work against Omicron. Today, the company saying further testing revealed it won't. Shares are plunging more than 80%, and they just went public in August. Now to Rahel Solomon for a CNBC News update. Rahel?
Hi, Kelly, and here's what's happening at this hour. If you are heading to an Apple store, you want to make sure you've got a mask because Apple is bringing back mask requirements at its U.S. retail locations amid rising COVID infections. This just a month after Apple stores dropped their mask requirement. Apple will also limit capacity at some locations. The NFL is requiring coaches and staff to get COVID booster shots. The announcement coming a day after 36 players tested positive. That is the most ever in a day. Now, players are not affected by the mandate because changes in their COVID protocol must be negotiated with the NFL Players Association. And on the news tonight, encouraging results for a COVID pill and new Omicron warnings. That's tonight at 7 Eastern. And this year, 14 more billionaires have promised to donate more than half their wealth. They include the CEOs of DoorDash and Pinterest. The Giving Pledge says that there are now 231 philanthropists from 28 countries who have promised to give away half their fortunes. Kelly, I'll send it back to you.
All right, Rahel, thank you. Coming up, the big calls for 2022. Some have been winners this year. Some have been losers. Will Wall Street be right? More in Rapid Fire next.
CNBC Trend Tracker is sponsored by CME Group. CME Group, where risk meets opportunity.
Welcome back. All right, I've teased it enough. Let's get into the top calls for 2022 in this edition of Rapid Fire. Joining me now are CNBC's own Seema Modi, Delano Saporu of New Street Advisors, he's a CNBC contributor, and Chris Crisanti, who's the chief equity strategist for MAI Capital Management. Well, welcome aboard, everybody. We'll start perhaps with the most obvious consensus name here of this whole list, maybe of the whole market, and it's Apple. Evercore naming it a top pick for next year. Interesting, they call it the roaring 20s they see continuing for tech. They see sustained upside for the iPhone and Surfaces and wearables. It's still just below that $3 trillion threshold, up 30% this year. Chris, are you a buyer?
I'm not, Kelly, and thanks for having me back again. It's just such a consensus pick. I don't get this one compared to the alternatives in the FANG universe. I mean, Apple is supposed to grow earnings about 8% next year, and it's selling for 28 times those earnings. A stock like Google, for example, is going to grow twice that rate and is selling at 22 times. Or Facebook, again, twice the rate and selling at 21 times. So people forget that iPhones have good years and bad years. And if they have a bad year, as recently as early 2019, Apple sold at only 11 times earnings. So, there's a lot of potential downside, and there's more upside in other names.
All right. I can't believe you're willing to go on the record with that. Simo, what would you add?
Listen, I think, Kelly, the valuation argument will be valid given the outperformance in the stock this year. There is, though, an overwhelming number of analysts who are bullish on the stock. We're talking about 33 buys, 8 holds, and just 1 sell rating. I guess the question is, what takes this stock even higher? Is it the AR/VR headset? Does Apple's experience in the wearables category give it an edge over a company like Meta, or simply its sheer size with 150,000 employees and not to mention a lot of cash? Does that make its rate of success much higher than some of the other companies that are trying to tackle this metaverse space?
Chris, actually, I just wanted to circle back to you for a second. If Apple, and you mentioned some of its peers, who, if we were to say, okay, just within tech, what would your top pick be for 2022? What's yours?
I would mention those 2 names I did before, Google and Facebook. I'd also add, look, who's the marginal buyer for Apple? Isn't everybody already on board? So that's a much tougher game to play. Then there's lots of controversy around Facebook and some around Google, and that actually gives opportunity on the upside when those things are resolved.
All right, Delano, where are you on them?
Yeah, Kelly, I'm definitely a holder here, and I look for opportunities to buy when the stock dips, and I think the valuation point is valid. We're seeing stretch valuations as the stock pushes to that $3 trillion mark, but I do think, as Seema mentioned, they are making bets in other areas. You're talking about wearables, you're talking about their service businesses, their subscription revenue, which is growing to the upside. So I think that, holders here want to hold on and look out to 2022 because there are some opportunities. There may be some more opportunities for buying on any dips.
All righty, we'll leave it there and we'll move along to maybe the second most obvious name, which is Chipotle. Goldman naming it a top restaurant pick, liking its strong digital moats and free cash flow. Chipotle net sales grow 20%, I should say, in the third quarter, including an 8% jump in digital sales. And this company has added more than 24 million members to its loyalty program in just 2.5 years. The shares are down 15% from the 52-week high, but they're still up 20% this year. Seema, again, I'm joking a little bit about some of these being obvious because they're only obvious until they're not. Or to Chris's point, if they're too obvious, then there's no kind of room for performance left sometimes.
No, it's a great point. And last time, Kelly, that CEO Brian Niccol joined us on CNBC in mid-November. He talked about the threat of the labor shortage, but also pointed out how it's accelerated Chipotle's investment in digital, which we know was one of its key sort of success stories within the pandemic, how it allowed Chipotle to outperform. And also in this report from Morgan Stanley, the survey finds that this is a company within the quick service space that has a higher proportion of mid to high income consumers that can deal with higher prices if prices are continuing to rise in 2022. It's got that target consumer.
All right, Delano?
No, I definitely think there's still some more upside for Chipotle. And I think they're looking at the consumer. Everyone's talking about the bifurcation. I do still think we have to consider that there has been wage increases across the board, obviously. And there also is an area where consumers have the most they've had in savings. I think that spending will continue out into 2022. We've mentioned the labor and input cost pressures. That's still going to be a point of contention. But, Chipotle has a brand where they can pass that on to consumers. And the big thing that I like is a digital ecosystem where they're driving up that membership loyalty. The stock has taken a little bit of a dip, so there might be an opportunity for a buy here.
All right, Chris, are you swimming with the tide on this one or against it?
No, I'm swimming with the tide here. And then the only thing that the smart folks haven't mentioned is inflation. I mean, inflation is good for the restaurant business as long as they can control the input costs. And I think Chipotle can do that pretty well. So remember, earnings are nominal and inflation will push those earnings higher. And so I like Chipotle a lot.
All right, we've done, let's see, where did we start? Apple, that's right. We've done Chipotle. Let's do some media now. For the slightly less obvious, how about Disney? It's been a laggard this year. It's down more than 15%. Morgan Stanley just naming it a top idea with 20% upside from here. Delano, is Disney going to get its mojo back?
Yeah, I think the one area where we can see if they will get the mojo back is obviously we're looking at the themes and parks area side of the business. Disney Plus, we've obviously seen that side of the business grow, and direct-to-consumer content is going to grow. I think they have to bring more original content to the table. But as an investor and a holder of Disney that hasn't been buying as of late, I'm looking to see what happens with the themes and parks side of the business, which, as we mentioned, is going to be a big contingent on what happens with the variants and the different variants that are popping up. And so, I think there's still a little bit more to consider on the business side of there, but I'm still going to be a holder here for Disney.
All right, Chris, what about you?
Well, I got to tell you, Kelly, this is my rapid fire favorite today because Disney is going to win in two different ways. They've gotten slammed this year. I think it's a real opportunity. It's obviously a reopening stock. Don't forget, the last 10% of capacity at the parks is by far the most profitable. Those parks have enormous fixed costs. So once you totally fill them up, which I think will happen by the end of this year, that's amazingly profitable. Plus, on the second way they win is Disney Plus. It's having a kind of mediocre this year because the compares of last year with the pandemic are so difficult. But content will win out at the end. And I think Disney is second to none in content. So I think it's a real win and a real opportunity.
Chris, the one thing I wonder sometimes for both Netflix and Disney when people say, okay, it's been a good content year, it's been a bad one, but content is really expensive. Everybody wants the best content. So I think it more raises the question of how much does Disney have to spend in order to maintain that pipeline of premier content?
Well, I think Netflix is much worse off in that regard because so many of those things are out of Netflix control. They'll buy names to put on besides the things they create. But Disney is creating internally Star Wars and Pixar, and they have spent that money and now can reap the benefits of that. The other thing here is that Disney Plus is relatively inexpensive, and Disney, like they have at the parks for decades, can raise prices each year and still make a great return that way.
Yeah.
So I think there's a few levers they can pull.
Seema?
Kelly, this is a media and entertainment company, but it's also a company that really relies on travel. And I can tell you the latest traffic trends suggest that bookings are down because of the Omicron variant. So you got to wonder what that means for the theme park business. The expectation that it get back to 2019 levels, does that get pushed out even more? And also, we should point out, this is a stock that is not only down a lot from its 52-week high, we are looking at the worst performer on the Dow in 2021. But interestingly enough, Wall Street says this could be a good pick for next year.
Yeah, so unlike Apple and Chipotle, this one is an underperformer that people think will shine. We'll leave it there and move along to our final and least obvious pick for 2022. It's the consumer staples. Goldman says they're poised to rally after a quiet 2021. They say investors will grow to appreciate their predictable revenue stream. Staples are up just 11% this year. That's just half for the S&P's performance. Its top picks in the space, P&G, Constellation, Mondelez, Olaplex. I keep thinking about that for my hair. And Monster. Staples are already picking up steam. In fact, they're the best performer on the S&P this month. And Tootsie Roll, believe it or not, Tootsie Roll is the sector standout so far in December. Delano, what would you do with Staples?
I am thinking about Olaplex for my hair as well, Kelly. I think right now I'm looking at it from a standpoint of I want an area where there's more growth. And the others you mentioned are more incumbents, and Olaplex is kind of a disruptor in the space, in the health and beauty space. And I think that's a big part of actually looking at it from that standpoint as well. And if you look at their sales channel, they do a great job with the hairs and salons, which is important. They also drive social media engagement. Their sales growth on the top line for a newly IPO company is important to watch, and I've been watching, and that's obviously growing. And they're also spinning off cash. Their margins are pretty high as well, which is important for a growing business to be able to meet demand. So I like Olaplex here, Kelly.
I'll be curious, Seema, how this whole sector does with the Fed this week, if they're raising rates, where bond yields go. Is that a help or a hurt?
Yeah, and what that means for inflation as well. I just spoke to Kelly, the president of Pernod Ricard, which of course has a portfolio of different spirits and liquor sales. And they were saying that despite inflation going up, rates going up next year, they think demand for their premium brands will continue to remain high because that customer has gotten so comfortable, so appealed to these type of brands that they think that doesn't go away. Maybe that bodes well for the broader consumer staple space.
All right, Chris Grisanti, close things out for us with your favorites, if you have any favorites in consumer staples.
Sure, I do. I like the whole group, Kelly, first of all, because I think inflation, once again, this is a good place to be to offset those effects. For the first time in a generation, these stocks, which have been such dogs for 10 years or more, can really have some pricing power. Among them, we like the beverage stocks. I like the Mondelez. I like the Constellation brands. I think those have standout differentiated products that will be able to price even better. So I like the group and I like those stocks.
All right, I like this group. Thank you, everybody, for this edition of Rapid Fire. Chris Grisanti, Delano Sapporo, and our own Seema Modi. Still ahead, fintech has been drowning in recent months. We'll look at why and which stocks could be first to break out. And Cash App is embracing its parent company new moniker Block. We have the details next on a new offering. Stay with us. Welcome back. Have you seen Robinhood lately? Shares are trading below $19. This stock priced its IPO at 38 and at one point traded up to 85. And it's not just Hood. Coinbase down more than 40% since it peaked all the way back in April. Block down 40% from its August highs, including a 25% slide in the past month. We'll dig into it in just a moment. But first, we got some news out on Cash App's new gift offerings. For that, we turn to Kate Rooney. Hi, Kate.
Hey, Kelly. Block, formerly known as Square, will let users send stocks or Bitcoin through its payments app. It's rolling out the new feature a couple of weeks before Christmas, so playing up the gifting aspect and appealing to those of us who may still be looking for last-minute digital gifts. Cash App had already let users send Bitcoin to other people on the app, that is, if they already owned the cryptocurrency. With today's gifting feature, users can send Bitcoin from their dollar balances or fund it with a debit card. So the gift giver doesn't necessarily have to own Bitcoin or any of the stocks that they're going to send on the app. The recipient can also choose not to take the gift and take cash instead. And this is key, Kelly. U.S. users can only send these gifts to other Cash App users. This really is a classic fintech playbook for customer acquisition. It builds on what analysts would call network effects. It really relies on word of mouth. When you go to send somebody money or a gift, in this case, to a friend or a family member, it gets them to sign up for the app, and then they do the same to their friends and family. So really a snowball effect here. And fintechs like Robinhood, Square, PayPal through Venmo have really relied on things like gifting and referrals as well as giveaways to drive user growth. It's also a way for the Cash App to differentiate from a growing list of fintechs offering competing products. Companies from Affirm to PayPal have all talked about being the go-to finance app for users. Kelly.
Yeah, I was just going to say I'm going to go get it now so I can gift this unless the other apps start to offer the same thing. Kate, thank you, Kate Rooney. Despite fintech struggles this year that I was just laying out, my next guest is sticking with the space because she has to. Just kidding. She does have a buy rating on both the traditional and some of the newer payment stocks. I'm rejoined by Lisa Ellis, MoffettNathanson's analyst. Lisa, it's great to have you back. Just a word for those who are wondering, is this an interest rate? Like Kathy Wood was just out here saying that the reason why innovation stocks have been sliding is because of inflation. Would that apply to the fintech names?
That would definitely apply to Square and to a lesser extent PayPal. You know, Square, yeah, as a high growth fintech name, it has a lot of the valuation tied to the long-term value in the company, which as interest rates rise, just naturally compresses that. Companies though like Visa and MasterCard, which as you highlighted have also been weak, they're being actually primarily affected by the lack of by the variants, the virus variants, the lack of recovery in cross-border travel, which is a major part of their business. Pre-pandemic was over 20% of revenues, is still down at, you know, only about 60% of 2019 levels and continues to be a painful drag on those businesses. That's really the primary thing weighing on those ones.
Yeah, I mean, there's a lot of competition, and this reminds me a little bit of the Tesla discussion we were having, where if you blame Elon Musk for driving the price lower, then as an investor, you should love it as a buying opportunity. For any of these names, do you think they have created good buying opportunities?
Yeah, particularly for the networks, Visa and MasterCard, because what's gotten mixed into this now is a lot of nervousness around disruption or substitution. But I would say a lot of that's overdone. There's not a lot new there. And actually, these stocks should perform very well once we finally see this sort of lagging recovery in cross-border. Eventually, borders will reopen and people will travel. And so, for example, for both names, we expect revenue growth to be as high as 20% for the next couple of years as they're making up that recovery. The other one, is where I say there's a buying opportunity is Square or Block. Block, where a lot of the recent weakness that you highlighted, down 25% just in the last few months, is because the Cash App business, that app that you and Kate were just talking about, is lapping really high growth during the pandemic. But they've got the big catalyst from the Afterpay acquisition, the big Australian BNPL player that they bought earlier this summer, coming in 22, the first quarter of 2022, which should be a nice catalyst for Cash App.
Yeah, we were just showing for Visa and MasterCard, we were showing the stocks. You have a 460 price target for MasterCard, 300 for Visa, 340 for Square. So let's talk about that for a second. You know, why are they in the buy now, pay later space?
Square, yeah, what Afterpay really brings to Square is a couple of things. One, they bring consumer credit products into the Cash App. Currently, Cash App is only debit-based and and person-to-person payments. So they're adding nice credit capability to that user base. And then in addition, Afterpay very distinctively has really innovative digital marketing and shopping services in their app. So like in Australia, where Afterpay is really strong, 30% of the volume of the app initiates through the app. People actually are shopping through the app. And Square is really excited about the ability to bring some of that capability into Cash App to drive more, user growth and user engagement growth directly out of the app. Really exciting.
Absolutely, and that's big. Those are big numbers you're citing. Again, the rest of the more traditional kind of payment space, I know you're not as hot on. So again, buy rated on Visa, MasterCard, Square, and PayPal. Lisa, thanks for joining us again.
Thanks, Kelly.
Lisa Ellis with MoffettNathanson. Still ahead, lights out for this name, down nearly 40% over the past month. We'll reveal it next. It's been like every time we're talking about a stock, it's been such an underperformer. Anyway, if you like podcasts, follow CNBC The Exchange. You get our show, you get my new Conversations with Kelly, which are longer form interviews on things like crypto and energy. Again, follow CNBC The Exchange wherever you get your podcasts. We're back in a moment. Welcome back. It's a dark day for solar. California lawmakers could massively lower net metering payouts, and supply chain issues aren't helping the stocks either. Pippa Stevens is here with more for us. Pippa.
Hey, Kelly, that's right. Solar stocks are selling off. Sunrun, SunPower, Sonova, all down following regulatory headwinds and ongoing supply chain problems. On Friday, we talked about a coming update to California's residential solar incentive program. That proposed decision is now out. It's complex, but essentially it would slash those incentives that have made California the biggest solar state in the U.S. The credits solar customers receive for sending power back to the grid will drop by 80%, according to some estimates. Customers will also have to pay a monthly grid connection fee. For the average solar system, this would be between $40 and $50 per month. Utility companies are applauding the move, with PG&E saying it is a step in the right direction. They argue solar customers haven't been paying enough for the grid. Solar groups, though, are not happy. SEIA said it will tarnish the state's clean energy legacy. Important again to note that this is only a proposed decision. There's now a comment period, and we'll get the final decision no sooner than the end of January. But this isn't the only headwind for solar. Wood Mackenzie has slashed its 2022 growth forecasts for the U.S. solar industry. They said the market will grow 25% less than prior estimates. This is thanks to supply chain problems, rising costs, and policy uncertainty.
So this $30 to $40, is that what you said, per month to hook up to the grid?
40 to
40
50.
to $50 a month to hook up to the grid completely changes the calculus if you're trying to figure out whether to go solar or not. And it raises the issue of why are all these households paying for their own ability to use or go solar when the utilities themselves could go solar and save us all the trouble?
Yeah, there's a lot of different opinions on this topic about whether the future system is more distributed energy with resi solar or if it's larger scale, utility scale solar projects. And in between is probably what people say is the most logical conclusion. But that interconnection grid charge on a monthly basis is absolutely huge. And that really changes the payback period for a system. CPUC says the payback period is 10 years, but SEIA said it might not even work out to a payback period at that point if those fees are installed. So a lot of questions here. We're expecting some pushback from the solar industry. So that final decision will definitely be a contentious one.
Oh my gosh. Is there any good news if you're looking at this from the industry's point of view here?
I guess one element that is positive is that these new proposals would incentivize storage. So if people get rooftop panels plus storage, then they can better take advantage of the new net energy metering structure. And then that would also help the grid. So the utility companies say, because then they could tap into that. It wouldn't overwhelm the grid. They wouldn't have to fire up peaker plants. So the energy companies could benefit. But right now, these stocks are just down across the board. A lot of questions.
No, it's a great point, though, about incentivizing storage. Pippa, thanks for covering this. Pippa Stevens, we appreciate it. Crypto execs are back on Capitol Hill. Up next, we'll talk to one who testified in the first round last week about the future of regulation and the recent crypto crunch. We're back in a moment. crypto executives testifying before the Senate today, making the case for stablecoins as lawmakers wrestle with how to oversee a crypto industry with more than $2 trillion in assets, less than it was a month ago. Anyway, one of the companies in attendance is Circle. The company's CEO says we are at a pivotal moment for digital assets and that it's critical that the USD coin becomes the leading digital currency. Circle CEO Jeremy Allaire joins me now. Jeremy, this is a very clever argument. Explain it to me.
Well, I think the basics are we're working on collectively a new infrastructure layer for the internet. A lot of people call this Web3, but essentially an infrastructure layer that supports the exchange of value, supports the more efficient conduct of finance and commerce. And a critical building block of that is going to be representations of major currencies, dollars being a preeminent one. There's an opportunity for the United States to lead in blockchains, to lead in making sure that the dollar is the currency of the internet. And what's taking place today with stablecoins is really foundational to that. It is the protocols and the money formats and frankly, the evolving regulations that are going to allow the dollar to become a primary currency on this new infrastructure layer of the internet.
I totally see your point that as much as we all worry about what's going on with stablecoins, it would be if we say, okay, you can't do them in the US, then okay, China or someone else will just say, great, we'll be the oxygen of sort of the crypto financial industry, and then we will call the shots. So from that point of view, though, I know that regulators have at least thought about having the dollar itself be that digital currency. Why should your stablecoin serve that purpose?
Well, I think the first thing to remember is that, the dollar comes in a lot of form factors. There's the paper and coin version of the dollar. There's the ACH check form of the dollar. There's the credit card form of the dollar. There's the PayPal version of the dollar. And now there's digital currency forms of the dollar. And the technology of blockchains and digital currency are ushering in a model that looks and behaves a lot more like the way we experience the internet for communications and content and data. And so really it's an upgrading of the form factor of the dollar. Behind that, we of course need safety and soundness. We need to have rules around protecting against financial crimes. We need to have, frankly, federal statutes to define these kinds of large-scale dollar stablecoin issuers such as Circle. And so I think we're very open-minded about it. But I think for most people, it's just to understand that the open internet and private sector innovation is blazing a trail for a new set of technology for money and finance.
Yeah.
And there's an opportunity to connect that to the actual dollar system.
Yeah, no, it goes back to on and off ramps from crypto ecosystems and all that kind of thing. And certainly I would hate to see the US lose its advantage in building Web3 because it is too heavy-handed with regulation. But what do you think is the most likely outcome from this hearing? And what happens if there is a run on some kind of stable coin in the future and people are going to be furious?
Well, I think there's really two questions there. I think the first, just to kind of make it clear, dollar stablecoins like USDC are regulated today. They're regulated under the same framework that regulates your balance at PayPal or Stripe or Square or Apple Pay Cash, all these types of products. And we're required to hold 100% liquidity, 100% reserve against those dollar obligations. So that is the case today. Now, I think this is becoming such a big potential part of the payment system, of the financial system, that having some kind of special form of bank charter or federal supervision probably makes sense.
Yeah.
And so that's ultimately, I think, how consumers, households, firms are going to get comfortable that, yes, this is a cash equivalent instrument that I can use on the internet.
Right, and that it's regulated. And, we went through this with money market mutual funds, for example. While we, the time that we do still have you, are stablecoins playing any role in the recent crypto slump we're seeing?
Well, dollar stablecoins, as I like to say, they are valuable in any kind of market condition, whether a market's going up or down, sideways, but they also have general utility. And so they're useful as a way to settle transactions, whether it's a business, a person sending a remittance, et cetera. And so things like USDC definitely are connected to what's taking place in capital markets, but they're also increasingly very much being used as a general payment and settlement medium on the internet.
Yeah, and so your final prediction for Bitcoin, are we hitting 100K before December 31?
Yeah, it's hard to see.
Jeremy, thank you for your time today. We appreciate it. Jeremy Allaire of Circle. How do you answer the question anymore after that?
Very diplomatic answer right there.
That does it for the exchange, everybody. Power Lunch begins right now.
It sure does. Thank you, Kelly. I'll see you in just a sec. Welcome, everybody, to Power Lunch. And here is what's ahead. We got a busy hour. Buy this, sell that. From taper to tightening, the Fed expected to officially speed up its tapering timeline tomorrow. We'll be there for you all day in the afternoon to watch that story. Meantime, the stocks to own and the ones to ditch ahead of that big decision. What goes up is starting to come down. High-flying stocks faltering, the memes creating soft cracks in this market. Is it a sign that valuations now are beginning to matter once again to investors? And a regional banking player, the CEO of Valley National, will be with us to talk about rates and why he thinks, Kelly, some inflation is permanent. We got a big hour ahead.
All right, Tyler, thank you. Hi, everybody. Big diversion here. All the major averages are lower, but the Dow's only down 0.5%, while the NASDAQ is down 2%. In fact, the NASDAQ points-wise down almost double what the Dow is. Microsoft and Salesforce, the worst performers in the blue chip. Microsoft having its worst day since the pandemic. Since March 2020, it's down 4% today. Tesla, meanwhile, among the biggest laggards on the S&P. It's down almost 20% this month. Meantime, the bank stocks are higher. Let's take a look at those names with Goldman and JP Morgan, both up about 1.5%. Uber shares also higher on comments from its CEO that last week was the company's best ever in terms of gross bookings, both for rideshare and for delivery. Uber shares up nearly 4%, Ty.
All right, Kelly, we are just about 24 hours away from the Fed's policy decision. They're meeting down in Washington today. The decision tomorrow, the central bank expected to accelerate its tapering of asset purchases, which would allow officials to begin lifting interest rates a little bit earlier next year, if that's what they end up doing. So what do you do right now in terms of buying or selling in anticipation of this quickening Fed? Is it time to buy this? It is time now to buy this, sell that. Fed edition. Surat Sethi is a managing partner and portfolio manager at DCLA. He's also a CNBC contributor. Surat, you've got a couple of hypotheses here, or stock picks, and I guess my question is on the buys, is it a direct derivative of what you think the Fed is going to do? And are your sells because of what the Fed is likely to do?
So, Tyler, a combination of both, actually. So let's break it down. On the buys, these are companies that are cheap. JP Morgan trading at 14 times earnings, Chevron trading at 13 times earnings. Both have solid balance sheets. Let's take Chevron, for example, almost a 5% dividend yield. And when you get into an area when the Fed is going to taper and then potentially tighten, you want companies that have immediate cash flow. You have companies that have solid balance sheets, and you have companies that can actually grow their market share. So in the case of Chevron, if you do have some break in the market, they have enough capital. They're going to have $25 billion of free cash flow in the next 5 years to either buy back shares or buy competitors. In the case of JP Morgan, what the Fed is doing by taper is saying, look, our economy is pretty strong. We don't need to give free money out there. Well, JP Morgan makes money when the economy is strong, when lending comes back up, when M&A activity comes back up, and when asset management picks up, and potentially when interest rates move. So a combination of companies that are trading at 2/3 the market valuation with strong dividends that are growing. Take the other side of it. When the Fed is saying we're going to taper and the economy is strong, well, what they're saying is we want to be in companies that can really grow and where cash flows, again, are coming in now, not in the future. And the companies that I would sell at this point did very well when we had a lot of uncertainty, but the competition has actually come back to them. So take Teladoc, for example. It's a very good company, but it trades at a multiple of sales, and they're not cash flow positive. The acquisition that they made last year is worth more than the combined market value of the two companies. And more so, Tyler, their competition is there. United Healthcare is now competing directly with them. So what is the moat around their business, especially when investors are going to be looking for cash flows up front?
You could certainly say the same thing about your second sell, which is the much beleaguered Peloton. They've got they had a sort of first mover advantage here, but nobody's standing still. Right. Well, I guess that's sort of a funny way to put it, isn't it, for Peloton? But nobody's standing still.
Exactly. And if you look at, valuation matters. And what is Peloton saying? Our cash flows will be much greater in the future. Well, you get that discounted back in today's dollars, it's worth a lot less. more so, like you said, nobody is staying at the same place. The moat around their business is disappearing. Two things are happening. You've got some more competitors in that space, and you talk about the Apples of the world and Fitbits of the world and everybody else. And then the other part that I think people have to understand is that we are reopening. And this was a great story when we were all stuck at home. And in a hybrid world and a reopening world, this stock needs to really reflect earnings growth, not just revenue growth in a company that people are going to be focused on rejiggering their portfolio to, hey, I want companies in today's dollars.
So let's look, broaden out. We've covered these two stocks, or these four stocks actually. Let's broaden out just a bit. Is the economy ready for what you think the Fed is going to do? In other words, begin to withdraw capital or cash from the system?
So I think, the way we need to look at it is there are two steps, right? There's the tapering, and then there's the interest rate rising. So right now we're lucky because this test is going to happen with what the Fed's going to say is we're going to taper. Doesn't necessarily mean we're going to raise rates, but that is what we're thinking about. And if the overall global economy and the markets actually pull back, well, they don't have to go as fast, right? They're not committed to it, but they're saying that's the trajectory. And I think what you're seeing in the markets are strong companies are still doing well. I mean, today, JP Morgan, the financials are up, the energy stocks are up. Companies will do well in a rising rate or tapering environment. It's just that some of the speculative fervor might come off, and that's not necessarily going to stop central banks because they've been giving away the money. The other thing, Tyler, that people don't talk about is what is the clearing price on bonds? What is the clearing price in the credit markets? We don't really have a functioning credit market right now. And I think this is going to lead to markets going up and down. And look, it's not a panacea for everybody. We've had a great 18 months and now volatility's come back. But historically, that's what we would have to live with. So I think this is going to be, some uneven waters for the next few months. But these are some great opportunities if you're a long-term investor to say, hey, I want to look at my portfolio. I want to see what companies I want to own for the next, 3 to 5 years. And then also look at take some of the money off the winners and see where I want to be diversified. Key is diversification here, Tyler, not just I need to own all these stocks in one sector or all these stocks that are going to be reopening. It's a diversified barbell strategy.
Sarat, always so clear. I really appreciate it. We have you back. We're going to talk about that non-functioning credit market. I'd like to explore that more with you, Sarat Sethi. Thank you.
Absolutely. Thank you. Happy holidays.
You too.
You think crypto's down? Check out the meme stocks. GameStop, AMC, Bed Bath & Beyond all down around 30% or more over the past month. And Herb Greenberg is cheering this. He is going to feel the ire of these investors, and he joins us now. Herb, I'm just saying.
It's not that I'm cheering it. What I'm happy about is that it appears that valuation is starting to matter again. And maybe even even then you could argue that on many of these stocks, they're still way overvalued relative to what you might have said was overvalued back in 1999, 2000. When things crashed, they're still higher than that. But it's still something that you're starting to see and you're starting to feel. And as you go around and you talk to folks, you don't feel as silly just mentioning the word valuation. I mean, when I was doing short research, Kelly, you saw companies that were crazy. But I can tell you one thing people didn't want to talk about in 2019 and 2020 is they did not want to talk about valuation. Now I suspect it's becoming just a little more front and center in the conversation.
So the interesting thing is, yes, GameStop is down, Herb, but it's still way up, and it's been a year.
It's still up, and it can still be gamified, right? I can't sit here and tell you what's going to happen to these meme stocks. We know that a lot of people have had a sense, I'm sure, of their old vagal nerve suddenly getting a little nauseous a bit, and that's good because you need to feel the reality of this and that it's not just a game. But I think if you look at some of these companies, I mean, I'd written a thing the other day, and you look at something like a DocuSign, right? DocuSign's come totally unglued. But when I wrote about it a few days ago, it was still trading at like 14 times sales, down from 42 times sales. But that was still considered, back in the day when these kind of companies blew up, they sold for maybe a half times or 1 or 2 times sales, just to give you some perspective of where we are. Now, we may never go back there. Who knows what's going to happen? I don't know. But we do know that there's a sense here where people are kind of waking up. And I want to point out one very interesting statistic, Kelly. there is a company out there called Kalish Concepts, and they do a lot of interesting charts. It's a research firm. And there was a chart that they put out on the percentage of companies in the US that trade for over 10 times sales. In 1999, that number was like 20% at the peak. Right now in this cycle, at the peak, it was almost 40%. 40% were trading over 10 times sales, which would be considered very expensive for many of these companies. And so it gives you an idea of where we were and how valuation just didn't matter, which brings you back to this whole thing of, maybe now people are starting to pay attention.
Well, you anticipated my next question, Herb, which was directly to that chart, which I thought was so interesting because we remember what happened in 99, 2000, 01, when it was the height of the dot-com bubble, and now we're seeing price to sales, P.S. I love you, at 40%, roughly 40, a little under 40% of
40 times
of total, 4 times. Yeah.
I mean, 40%. Yeah, 40%. There was another interesting chart in this, and I had written this up in a story the other day and on Empire. And the other interesting chart that Kalish had was they were comparing those that were trading over 10 times with what they looked at as the cheapest stocks, the cheapest, the cheapest stocks in the market.
We're looking at the chart right now.
And that disconnect. Now look at the disconnect. They sort of track each other. And then in 99, boom, total disconnect. And then it came back down. And now look at that spike. That is quite a spike. And I think that, again, tells you that, look, the markets are the markets and things will come back. They always revert to the mean. It's just a question of how long, when. But I thought those charts were really good. And I think they gave you the perspective you needed here.
What do these charts tell you as an observer about the possible future? Does it tell you that all stocks are going to come down, or that those that are most highly valued by these metrics are likely to blow off steam and come down? What does it tell you? Real quick, if you could.
Look, Tyler, I know everybody wants someone to come here and say, this thing's going to blow up and it's going to blow to smithereens. There are so many changes in the marketplace. The Fed, everyone will sit here and tell you it depends on what the Fed does. I personally think that when things revert to the mean, if they revert to a mean of whatever that mean is, it's going to be something out of left field that you hadn't counted on. It may not, it'll be something.
Usually is.
And even then, it's going to be the question. We're still going to be asking the question, catch a falling knife, buy the dip. Catch a falling knife, buy the dip. At some point, it will be a catch a falling knife. But I have to tell you, even back in the 90s, I heard people saying catch a falling knife all the way up. Now, we are all the way up now. But, there are many cases that can be made that, if you have a situation with COVID just like sort of disappearing as a pandemic, becoming an endemic, that things will. So there are a lot of still uncertainties here. What will happen, Tyler? I think you need a washout to sort of make things kind of healthy. But I think we all sit here and say, boy, we all have 401ks and IRAs and everything else. And, so we look at that too.
Have a washout at the wrong time.
Yeah, I can't afford to have that happen, folks.
Really be in trouble.
Just saying. Herb. Just saying. Herbaceous. Thank you, my friend. Herb Greenberg.
Tyler, it's great being here.
Yep. Coming up, is a hawkish Fed actually good for banks? We will ask the CEO of Valley Bank about the move in rates and why inflation could throw his business a bit of a curveball. Plus, Disney shares cratering this year. Will the battleground stock turn itself around in 22? Our Trading Nation team is taking their positions and a working lunch with the CEO of freelancing firm Upwork and why she says the office will never be the same.
Welcome back to Power Lunch. I'm Dominic Chu. We want to bring your attention to what's happening with bank stocks, all outperforming today at this hour. You can see here regional names like Comerica, Regions Financial, also Huntington Bank shares among those outperformers. Also the larger Wall Street firms, including Bank of America and JP Morgan, higher as well. Now, these moves come as yields on U.S. Treasury notes tick slightly higher, and as, of course, we all await the Fed's highly anticipated interest rate decision tomorrow afternoon. And, of course, be sure to tune into Closing Bell this afternoon. In the next hour, we will hear from Bank of America Chairman and CEO Brian Moynihan. A must-watch interview there on the state of those banks. Tyler, back over to you.
All right, thank you very much, Dom. The Fed is meeting for the first time since Chair Jerome Powell signaled a policy shift. The decision due out tomorrow. We'll be there for it. A wind down of the stimulus program is in play, but inflation risks are still in focus, and our next guest is seeing that firsthand, saying some of the inflation impacts are permanent for his business, including for wages. Ira Robbins is the president and CEO of Valley Bank, a major player in New York, New Jersey, and elsewhere. Mr. Robbins, welcome. Nice to have you back.
Thank you. It's great to be here today.
Let's talk about what you expect the Federal Reserve to do beginning tomorrow and how that will change the playbook for banks like yours.
I think I would continue the Fed to continue to message that there is going to be a wind down of some of the monetary policies that they put in place and lead to a potential rise in interest rates going into 2022. Generally speaking, for bank stocks, rising interest rate environment is a real positive. It leads to an increase in the slope of the yield curve, which for spread banks like Valley would inure to the bottom line and be very accretive to the overall earnings. I think one additional factor that we have to consider this year that maybe we haven't had in past increase in rate environments is the amount of stimulus that's currently in the market today from a monetary and fiscal perspective, and what that does simply to deposit rates. And I don't think banks are going to be pressured to raise deposit rates in the manners in which they were in previous rising interest rate environments, which once again would be a benefit overall to traditional bank stocks.
Yes, good for the banks, maybe not for the savers, but that's what we've come to get used to. It's basically the difference between what you pay for deposits and what you're able to lend money for. Let's talk about inflation and how it is affecting you, because we led into this saying that you see inflation being less transitory and more permanent. I can see that, but once wages go, I think a lot of the wage inflation has been a kind of catch-up phenomenon and a labor shortage phenomenon. And that once this lump of catch-up is over, that the rate of wage inflation will slow markedly. That's not to say that those wage increases are going to be taken away and you're going to have deflation of wages. I think the higher wages are here to stay, but the rate of growth is probably more transitory than not. What do you say?
I would tend to agree with you 100%. I think what we've seen from a wage increase percentage is here. It's difficult for an employer to give back the wages that we've already provided. The pace is definitely going to slow down as we see more workers come back. We're still seeing millennials not at the same participation rate that we were pre-pandemic. So I do believe that the increase in wages are going to slow down. But I believe that there's a few other factors that are going to impact permanent permanent inflation increase across the entire country. I believe from an environmental perspective that we are finally, as a society, beginning to understand the true costs from an economic and environmental perspective of some of the cost processes and services that we put in place. And now these are finally beginning to push through to the overall consumer. I think this is still going to continue to push inflation up as we think about pricing moving forward.
What do you mean by that, Ira?
I think, I was with a customer the other day, and just for them to refit some of their manufacturing plants to be more consumer or to be more environmental friendly, 10 to 15% increase in what that manufacturing cost is. I think as a society, we've gotten away far too long without understanding the true environmental costs for some of the manufacturing that we've done across this country. And I think rightly so, some of these costs are now going to be embedded back into the cost of production. And as a result, there's still going to be continued pressure on inflation as we migrate towards understanding the true economic cost of some of the environmental policies that we put forth.
That's a really interesting point. We know a lot of times with these effects, it's not just one factor. It usually is half a dozen or a dozen different ones, and that could definitely be one. We spoke with a bank analyst yesterday, Jeff Hart, who said the time to buy the broader banks was when loan demand starts to rebound. What are you guys seeing in loan demand trends these days?
I mean, the business customers I speak to are really optimistic about what 2022 is going to look like. We saw strong loan demand going into the third quarter. We anticipate continue to see strong loan demand for the fourth quarter as well. The general businesses that I speak to are really optimistic and excited about what 2022 is going to transpire to be.
All right. He's saying, buy the stock. Buy. Ira Robbins, thank you very much for your time today. We appreciate it. Ira Robbins of Valley National. Still ahead, the PPI report wasn't 10%, but it was still the highest on record. These are historic inflation levels. Christina Partsinevelos is down in El Paso with a look at the fallout there. Christina?
Well, we've got many small businesses across America that are still faced with inflationary pressure. And that's why I came to this terminal in El Paso. Coming up after the break, I'll explain why businesses are still planning to increase prices into 2022.
Welcome back. I'm Rahel Solomon, and here is your CNBC News update at this hour. Senate leaders have scheduled a final vote on raising the nation's debt limit by $2.5 trillion. That's expected at 4 p.m. Eastern. Under a complicated arrangement with Republicans, it'll need just a simple majority to pass, and that is expected to happen. A top House Democrat says that they'll vote on the measure soon after it's approved by the Senate. The House also sets a vote later today on whether to pursue criminal contempt of Congress charges against Mark Meadows, President Trump's White House chief of staff. Today, the House Rules Committee voted along party lines to approve a referral to the Justice Department after Meadows ended his cooperation with the House panel investigating the January 6th Capitol attack. Andrew Cuomo has been ordered to surrender to New York over $5.1 million in proceeds from his 2020 pandemic memoir. Cuomo's lawyer says that the former New York State governor will fight the ruling from a state ethics board. And a report within the last hour says that Amtrak will temporarily suspend its vaccine requirement for workers. Those workers can instead be tested regularly. As a result, Amtrak says that it will not need to restrict service in January. as previously planned. Kelly, I'll send it back to you.
Rahel, aren't they under a federal mandate because they're federal workers? Didn't Biden order them to have this mandate in place?
It did seem that way, but perhaps they found some sort of loophole. And it's interesting because we'll see if other companies take suit as well. Absolutely. If Amtrak can successfully get away with this.
No historic labor shortage, I wonder. Rahel, thank you so much. Rahel Solomon. 10% inflation, almost. Wholesale prices are up almost that much in the past year. It's pretty much unprecedented in the U.S. So how are businesses dealing with it? Christina Partsenevelis is down in El Paso, Texas, with more. Christina?
Kelly, almost every single good and service we use is made possible by transportation networks like the semis right behind me. But many private businesses, like this terminal here in El Paso, just 15 minutes near the Mexican border, are faced with increasing inflationary pressures from fuel, wages, and employee benefits.
Throughout 21, we've been constantly increasing prices as fuel has gone up, equipment has gone up. With the shortage of steel and aluminum, I mean, truck and trailer prices are through the roof.
And take, for example, diesel prices that have gone up almost 46% in this past year. But if you compare it to 2019 pre-pandemic, they're up about 6%. Or what about private hourly wages? Those have climbed almost 5% just this year alone. And according to a new survey from the Conference Board, they're saying that corporations plan to hold roughly 3.9% of total payroll for wage increases next year. That's actually the biggest jump we've seen since the great financial crisis. So with fuel increases and wages increasing, a lot of corporations are in a predicament, a dilemma. Do they eat the cost and hurt their margins, or do they pass them on to consumers?
What they would ideally do is absorb the cost, but then reduce their costs by becoming more productive, by training their labor better, by increasing the efficiency of the machinery they use, investing in better machinery and so on. Alternatively, they can pass it on to their consumers.
Although many corporations like Missoula Valley Transportation here have had to pass on the cost to customers, you have many economists that believe inflation's actually going to taper off in the end of 2022, but consumer prices are expected to be higher than the Fed's target of 2%, which means you and I and these corporations are going to feel the pinch.
Absolutely.
Kelly, Tyler, back over to you.
Christina Partsenevelis in El Paso. Christina, thanks.
And ahead on Power Lunch, inflation remains top of mind as the Federal Reserve begins its crucial two-day meeting. But a new CNBC Fed survey says while many believe higher prices might not last forever, worker shortages will. More on that next.
90 minutes left in the trading day, last one before the Fed's big decision tomorrow. We'll have more on that in a moment. But first, let's get the latest on the sell-off in stocks. Bob Bassani at the NYSE. Bob?
And Kelly, just looking at the S&P or certainly the NASDAQ, you think there's something really wrong going on with the markets, but there isn't really. There's a problem with tech, and it's about valuations. Let me just show you the Dow, though, to show you that things aren't all that bad. Actually, there's a fairly broad move on the upside going on in some of the bank stocks like Goldman, materials like Dow, some of the consumer names like Walgreens, even energy stocks broadly are on the upside. Well, why are we down? What's the big problem? It's largely tech, but a very particular kind of tech. If you look at big cap tech, Microsoft in the software group is also notably on the weak side. We see some of the names like CRM in the Dow Jones Industrial Average weak, Cisco. Apple's finally cracked a little. Remember, topped at 182 yesterday, but it's really software issues. We had a very respected analyst over at JP Morgan downgrade shares of Adobe today on valuation. He did a downgrade of a whole bunch of analysts of software names saying they simply hit their price targets, and at this point, they're looking at 2022 and wondering whether they can continue to grow their cash flow sufficiently to justify their valuations. That's what I'm talking about. There are valuation concerns going on in software. There you see Adobe down, ServiceNow down, Intuit. If you look at some of the smaller, what you might call mid-cap software names, some of them software as a service, for example, Cloudflare, Zscaler, Datadog, PagerDuty, they're all down today rather notably. And in fact, they're down 20, 30, even 40% from their recent highs. If you look at the ETF part of this, IGV there, expanded software, ever since Powell turned around, said November 30th, Kelly, that he's concerned about what's going on with inflation. That's the Powell pivot. We've seen a problem with these tech valuations. Kelly, back to you.
We certainly have. Bob, thank you so much. Now to Rick Santelli for the latest on yields, kind of shrugging off that PPI report, Rick.
Definitely shrugging off the PPI report like they do many hot inflation reports. And you don't have to look much farther than the effect that it's having on equities. You know, what is the only real hedge for equities when all the central banks try to take their thumbs off the scale roughly at the same time? It's going to be a rough ride, maybe. And that's one of the reasons, maybe the biggest reason, why Treasury rates, especially long-dated Treasury rates, seem so unresponsive. Look at an intra of 2s and an intra of 10s. Yes, at 8:30 Eastern, we had hot producer price index. And the effects, well, we did see rates move up, but they moved right back down. We saw volatility, and mostly in the longer-dated Treasuries, and the amplitude of the volatility was large, but didn't last very long. Look at the year-to-date of the dollar index. It is close to the highest levels of the year. It's up over 7%. Why am I bringing it up? Because part of this is the same story. The European central banks dragging their feet on inflation. We learned the Bank of Canada is going to be dragging their feet a bit on inflation. So look at the dollar versus Canada. Dollar's at the strongest level in about a year. And if you look at the Canada versus the Chinese yuan, it's at the lowest level on the Canadian side in 21 months. It really has followed commodities, crude oil, for example. So we want to pay particularly close attention as all these central banks seem to be moving towards, or hoping they can move towards, removing stimulus. We're going to hear a lot more tomorrow from ours, and we might start to see more effects on inflation numbers when that occurs. Kelly, back to you.
And we know they all like to move together, Rick. Thank you very much. We appreciate it, Rick Santelli. All right, oil is moving lower for the second straight day, but the energy stocks are holding up a little better this time. Pippa Stevens has the commodity close. Pippa?
Hey, Kelly, that's right. Crude is down for the third time in the last 4 days, although closing well off the lows of the session. WTI is down 1% at $70.57. Earlier, it broke below $70, dipping to a low of $69.51. Brent crude also down 1% at $73.57. The dollar is higher, which makes oil more expensive for other currency holders. And the International Energy Agency cut its oil demand forecast for this year and next, although only by 100,000 barrels per day. They said the surge in cases will temporarily slow but not upend the demand recovery that's underway. On a down day for the broader market, some energy stocks are trading in the green, most notably the refiners, Marathon Petroleum, Phillips 66, and Valero Energy, all up more than 1%. Kelly,
all right, Pippa, thank you. The PPI showing almost 10% wholesale inflation in the U.S. over the past year. Where are all these high prices coming from? Steve Leisman went looking for answers in the latest edition of the CNBC Fed survey. Steve, what did you find?
Kelly, first, one bit of good inflation news from our survey. It's seen peaking as soon as February, but next year respondents forecast it'll remain high at 4%. That's double the Fed's 2% average target. Now, respondents finger supply chain problems as the number one source of inflation, which is a reason most still see the current levels as temporary. Fiscal and then monetary policy are given the rest of the blame for the inflation problem. Now, while supply bottlenecks may work themselves out, less certainty about the outlook for the other part of inflation, labor shortage. That's been driving up wages. 48% say the worker crunch is temporary, down from 72%. But look at that change. 41% say it's permanent, and we have to learn to live with it. That's up from 24% in the prior survey. A big change in the outlook for the labor crunch. Barry Knapp from Ironsides Macro writes, as core goods inflation eases in 2022, core services and energy inflation will accelerate. Now, what's behind that? A mismatch between available jobs and skills, seen as the top reason employers can't find workers, followed by health concerns and government benefits, which have run out so far, wages being too low, ranking towards the bottom. Maybe that's going to change. Well, continued and lingering inflation, those concerns lie behind the survey's projection that the Fed is going to double its taper to $30 billion and begin hiking rates as soon as June. Whether that's enough, well, that depends on how both the temporary and the potentially permanent parts of the inflation story play out. And Kelly, that producer price number didn't suggest that it was all that temporary.
Just for background, how much is the Fed putting into the asset purchase program now? How much have they been tapering? And you say they may double it to 30 billion a month, excuse me.
Yes, that's right. So, okay, here's the math. They were at 120. They went down 15. So they're at 105 for November and December. Mm-hmm. What is supposed to happen is they're going to go down by 30. That's the expectation of the market. So that'll bring them down to what would that be? About 75 billion would be the next month. And that'll run out pretty quickly, Tyler. They'll be done right about March.
Yeah, if you go at 30 billion a month, obviously it takes less than 3 months really to get you from 75 down to zero. So that will be interesting. All right, Steve, a very interesting day ahead. We'll see you tomorrow, I'm sure.
Yeah, sure.
Somewhere, somehow, by some device. I'm going to be outside the Federal Reserve tomorrow, folks, for our decision coverage. The statement at 2 p.m., the press conference, that starts at 2:30 tomorrow on Power Lunch. We're told the weather is going to be lovely.
You might not even need it. I was looking forward to like some earmuffs or some like leather gloves, like a Tyler in winter look.
Wear a scuba suit underneath like Tom Brady. All right. Disney down nearly 20% so far this year. Morgan Stanley coming out with a note defending the media giant, saying the selling is overdone. Overreaction. Should you believe in the stock? Our Trading Nation team will take it apart next.
Welcome back to Power Lunch. I'm Seema Modi. Disney is lower again for a fourth session in a row. The stock may be at the cross-section of the reopening and stay-at-home economy, but facing headwinds in both. New COVID variants pressuring its parks unit and weaker subscriber numbers hurting its streaming business. Shares are down about 18% in 2021. Morgan Stanley, though, keeping an overweight rating today, lowering its price target to $180 a share. How do you trade Disney? Let's bring in the Trading Nation team. Todd Gordon of Inside Edge Capital Management, Mark Tepper of Strategic Wealth Partners. Mark, welcome back. I know you've been a longtime shareholder in Netflix, but the analysts at Morgan Stanley pointing out that from a valuation perspective, Disney clearly looks more attractive. So I'm curious if you're ready to make the switch.
Not just yet. So if you actually go back to mid-April 2019 when Disney Plus was announced, I kind of shrugged it off. I said I preferred Netflix, which I still do. Disney went from $116 to over $130 in an instant. And man, oh man, Seema, did I take a beating in the Twitter sphere. But since then, Netflix has done very well relative to Disney. And if I look at all of Disney's business segments right now, like you mentioned, there's just a ton of challenges. You've got the Omicron response, not the virus, the response, the mandatory masks, the travel restrictions. That's a big headwind to parks and cruises, and that's what keeps the lights on. And on the other side of things, streaming subscriber estimates continue to come down. I do believe in the company long term. It's on our watch list if the price is right. So here's where I would buy it, because you make money when you're disciplined about your entry point. I'd buy it below $120. Why? Because that's pretty much where it broke out when Disney Plus was announced. So that would give me the ability to be patient on the reopening side if I'm getting all their streaming services for free. So under 120, it's a buy.
That's about $30 lower from where it's trading at right now. Todd, when you look at subscriber growth, it's becoming an increasingly competitive marketplace within streaming, right?
Oh, it sure is. And before we add to the portfolio, can we talk about the sector to start? Communications has fallen completely out of favor. So first, we got to stabilize on the sector level. Then we can go into the industry level. We'll break down to Netflix and Disney. Publishing and internet are showing some strength, but the entertainment and broadcast are falling out of favor, right? So I like Netflix over Disney by far. Like Mark, I've owned Netflix and been bullish on this since 2019. If you take a look at what Disney's done, the stock has been very flat from 2015 to 19 when they first entered streaming. Their financials got very shaky in 19. They spiked expenses, and a lot of people said that Disney was going to compete with Netflix, but that narrative has been rolled back significantly. Not a lot of companies are going to be able to spend what Netflix is spending on content, maybe even Apple. They're going to spend $17 billion this year. So it's going to be hard to compete, I think, with Netflix. I'm going to continue to stay with Netflix.
The rivalry continues. Todd and Mark, great to see you both. For more Trading Nation, head to our website. Follow us on Twitter. Tyler and Kelly, back to you.
Thank you very much, Seema. Coming up, another working lunch. Join us at the table to talk freelancing with John Fort. He's got the Upwork CEO next.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
A common mistake that some investors make is searching for stocks with the highest dividend yield. But this can be a dangerous strategy because a high dividend yield could mean that the stock price has come down sharply or that the dividend itself is at risk of being cut. So before you reach for yield, be sure that the stock is also fundamentally sound. I'm Joanna Payne, and Schwab is the better place for traders.
Welcome back, everybody. These are good times to be in the freelancing business. That's what Upwork does. They connect companies with workers who can help them fill unfilled roles. That said, the stock is down about 5% this year. Today, John Ford brings us up close with the company's CEO, Hayden Brown.
Yeah, Kelly, Hayden Brown took over as Upwork CEO in January 2020, right before the pandemic hit. Since then, the world has rediscovered remote work, and employees have demanded autonomy and flexibility, which are exactly what Upwork's model is about, connecting talent to projects. Now, Hayden literally grew up with flexibility as a core value. When she was 12, her parents packed the family up and moved from Massachusetts to Kathmandu, Nepal, which actually seemed kind of natural to Hayden.
Our summer vacations were always like camping in people's backyards through Germany or something. We didn't have any money. Like my parents, we never had money to do, expensive vacations. So we would always go on these shoestring budget trips to like far off places that we couldn't really afford to go to, but we'd make it work because we would camp or like do something, really kind of on a shoestring. But that was always really fun. And so I think it was less about it being hard, John, and more just I was so excited to be in this new place. My dad had been in the Peace Corps in Nepal in the 60s, the first Peace Corps group. So I'd always grown up hearing a lot about Nepal. My dad spoke Nepali, and I was just excited to go get to know this place that had been like on my radar as a kid, but to really immerse myself in it.
Lots of flexibility. So now as CEO of Upwork, Brown is working on the process of matching talent with work and making that process more flexible and efficient. Artificial intelligence is part of that, she says. Another part is tossing out both our old playbook for work and the new assumption that today's remote model is exactly what the future will look like.
Some of these models around the 5-day work week, the in-office cubicle model, that stuff is gone. We inherited those things early in the 20th century from Henry Ford and other paradigms that I think worked for us then. Now the new paradigms need to emerge around what work looks like, and that experimentation is also going to take the next couple of years. So we'll get to the new normal, I think, 2 to 3 years from now, but not right now. To your point around relationships, FaceTime is not going to go away, and in-person experiences are not going to go away, but they are going to take a different tenor.
Literal FaceTime, not the app on your iPhone. Now, I've been thinking about the work Hayden's doing at Upwork, and I wonder if this model might not have a key ingredient for where we're going. Nobody wants more paperwork, but what Upwork tries to do is create not just a resume, but a track record of how workers and companies have collaborated on projects, almost like Amazon reviews, but for companies and people. And there's a chance that better data will lead to more flexibility, I think, and faster progress, whether you're a contractor or a worker at a company.
When I mentioned the stock performance, it almost feels like it'd be a perfect plug-in for LinkedIn, right? Like, look at what projects people are already working on, and then why don't you ask them to do something for you? Yeah,
it does something that LinkedIn doesn't do, kind of at the micro level of what people are actually doing. The stock is still above its pre-pandemic levels. It had a big pop during the pandemic, and while the financial performance has been good, a lot of those stay-at-home stocks have lost investor favor. So now it's time to get back to the fundamentals and watch.
So for those people who don't know how it works, how does it work? In other words, if I'm looking for temporary work, do I sign up with them? Yep. If I'm a company and I'm looking to place people, I sign up with them and they make a match?
Exactly. And then there's a review afterward where both the company reviews the talent and the talent reviews the company. And reputation gets built that way. They even put a dollar value on the work that's done. And so that helps signal to the marketplace, here's the level and quality.
How do they make money? Do they make money on a commission if they put 1 and 1 together and it equals 2?
Exactly. It's a marketplace that way where they are putting the people together.
Would they have any obvious rivals here?
Well, there are a few. When you think about traditional companies that have helped freelancers to work, there are other platforms out there that do something similar, but Upwork's got a scale that's unlike those. And that micro detail and the data about projects certainly is interesting.
And by the way, how cool does Hayden Brown sound?
Let's go to Kathmandu.
My dad talks Nepali.
Most kids are worried about moving across town at 12 years old.
Right.
She was like, Nepal, sure, let's go.
Yeah, exactly.
John, thank you. Great to see you. Up next, this is one for the gram. Well, actually, 2 billion for the gram. Instagram hitting a major user milestone. We will discuss that next. All righty, welcome back, everybody. Instagram marking a new milestone, 2 billion active monthly users. The story first reported by CNBC.com, and it comes a week after the head of Instagram appeared before Congress to answer questions about controversial content on its app. Let's bring in the reporter behind the article, CNBC.com's Salvador Rodriguez. Sal, welcome. Good to have you with us. 2 billion users. They had 1 billion, what was it, 3 years ago?
That's right. Yeah, it took them 8 years to reach their first billion and only 3 years to double that amount. So this is a milestone that they hit back in October. According to my sources, it happened just before that name change from Facebook to Meta. And it's quite the feat, but at the same time, they did not make a big deal about it. And it's probably because of all the scrutiny that they've been coming under from lawmakers and parents through this really, difficult 2021 that it's been for Instagram.
Has Meta even conceded that they are above 2 billion or not?
No, even in our reporting, they declined to comment. They didn't want to, publicize this number really, but that is the figure according to employees at the company now who spoke with us. And yeah, it's quite sizable, and it really dwarfs many of the competitors that are out there.
But it doesn't
Instagram.
dwarf TikTok, does it? In terms of growth of new users and clicks and not necessarily the target demographic, but younger users, TikTok's beating them, right?
Well, TikTok is definitely becoming a headache for Instagram. So Instagram is growing, it's sizable, but when it comes to the user base that counts the most, teenagers, young adults, the ones that will age with you, that's where Instagram is struggling. And that's why, Facebook has really made an effort to better go after this demographic, especially with their product Reels, which is essentially a clone of TikTok.
Yeah. I wonder, though, Sal, the company has changed its name to Meta. Like, to Tyler's point, it's kind of caught in the middle here. Is Instagram going to have a real future in the metaverse?
Well, it is interesting that, when I reach out to employees or just talk to folks in the know, it doesn't seem like Instagram is being very proactive about, building out its efforts in the metaverse itself. It sounds like there's maybe a small effort, but for the most part, their focus seems to be on the product now, and that alone will be critical for the future of the company. Facebook is growing much slower. Metaverse is still quite a ways out. So in this, medium term, Instagram is essentially going to be what props up the rest of that Meta empire.
Yeah. It's like nat gas for the energy space. It's the bridge to the new future. Sal, thank you very much.
Exactly.
Great reporting. There's more on CNBC.com.
All righty. Well, big day tomorrow. We'll join you from Washington. I'll be down there. You'll be here. We'll have it all on the Fed.
Really, really looking forward to that. Thanks for watching Power Lunch, everybody.
Closing bell starts in just a few seconds.
Welcome to Closing Bell. I am Courtney Reagan in for Sarah Eisen today. Inflation jitters and Omicron headlines sending the major averages lower today.
And I'm Dominic Chu. Wilfred Frost will join us in just a moment here. Let's take a look, though, at what's driving the action in trading today. The Producer Price Index, PPI, jumping 9.6% in November. That's the fastest pace on record and above analyst expectations as well, fanning those inflation concerns as the Fed meeting gets underway today. The World Health Organization says the Omicron variant is spreading at a rate not seen with any previous variant. Those are their words. Meantime, Pfizer says its COVID treatment pill appears to be effective against that Omicron variant. And in trading, the tech trade is lagging again today, adding to sizable losses on the week. Names like Microsoft, Adobe, Tesla, among some of the biggest decliners. We've got just about 59 minutes left to go in this regular trading session. Courtney.
Yeah, Dom, it's a big show. Coming up in just a few minutes, another big exclusive interview you cannot afford to miss. Wilfred will join us with Bank of America CEO Brian Moynihan to talk inflation, the consumer, and much, much more.
All right, Courtney, let's get straight to that market action and another rough session for those tech shares. Our own Josh Lipton is at the NASDAQ market site with a closer look at those big movers. Josh.
So, Dom, you mentioned Tesla. Let's start there. Moving lower in today's trade. That's after CEO Elon Musk sold more stock on Monday. Tesla down nearly 20% this month for the year, up about 30% at this point. On the other hand, check out Beyond.
What's up, traders? I am back, just checking out the market. See if we have anything going on, guys. So let's just kind of dive into it. I do have to leave here momentarily, but I am curious to see if there is any opportunity over the next few moments. So how was everybody's lunch? I hope it was great. I hope you got fat like I did. No, not really. I just had a bunch of chicken. But we're all set, ready to rock and roll, guys. So what do we have coming on up in the day? So right now, guys, let's look at HLBZ. HLBZ is trying to curl on up. Nothing crazy. I mean, wow, what a short on ESSC. Coulda, shoulda, woulda. What if you would have held it from 26, Josh, all the way to 14? Would have made $10,000. Coulda, shoulda, woulda. It was a good trade, though. So that's crazy to see this thing gave absolutely everything back very, very quick as well. So that was pretty cool to see there on ESSC. GRTX, turd. So right now, not a lot with the watches that we did have. The SPY's bouncing up a little bit. The Q's bouncing up a little bit. Let's check out what we have with maybe NVIDIA. Anything there at this point in time? Really? AMC? Oh, yeah, AMC. What a bounce, guys. What a bounce. And, oh, man. That would have been a phenomenal trade right off $20. I quit. Shutting Alpha down. I'm shutting Alpha down. I'm just trading, guys. I'm joking. You said you got to go on a diet after Christmas? Yeah, so I did keto like 2 weeks ago. Then we had Thanksgiving, and I'm like, all right, I'm a keto again. And then we had all these Thanksgiving leftovers. I'm like, I can't let these go to waste. So I ate it. I said, F keto. F it. I'm going to start keto at the first of the year. I'm like, I don't even really need keto. It's not like I'm really trying to lose weight. I'm just trying to tone. So instead of trying to starve myself and lose weight, which I don't, I just need to go to the gym more often. So 2022, guys, got a couple weeks left. Might as well do it now and build up some momentum and consistency rolling into next year. Yeah, guys, I've been slipping up a lot too. Not with trading. Discipline, I mean, all my discipline is being forced into trading. It seems like. Discipline in other aspects, like I didn't go to the gym today. It's just little things like meetings with developers and trying to get this platform situated. Just a lot of little distractions that, it's taken up me really being able to focus on myself, right? Going to the gym, eating healthy, enjoying life, the little things. That's why I ran out of the house yesterday when I got a pedicure with my wife. But anyway, plenty of time for that, guys. We got the rest of this month to stay disciplined with trading, bleed that momentum and consistency into 2022, and start honing in on our personal development and personal discipline as well. I am too. I'm still in on GRTX. I didn't get stopped out. I had a hard stop at 240. GRTX just didn't really do anything, right? There was a couple different perspectives on GRTX. But from my experience, when you see a stock trading that kind of volume in pre-market, see a stock that has very good news, like it did, and you see the stock actually somewhat decent out of the gate, I wasn't really expecting this just to fade and fall all day. I was expecting GRTX being a low flow stock with great volume, and a really good press release, and just looking at all this upside potential on this stock. I mean, this huge gap that we've really never traded in. I was expecting, a little bit of possible profit taking from the bag holders, but with such a good press release and such good volume to the upside, a lot of green volume, I was really expecting the stock to really take on off, but, it sold on off, and buyers haven't really stepped back in, but the market's been light. I really say that I think a lot of this had to do with market conditions today, as, we didn't really see substantial movement across the board. So I think a lot of it had to do with, just the market conditions is why this stock really didn't get that big move to the upside that I was expecting. But, we'll see. There's still tonight. There is still, another 50 minutes to go. But I mean, guys, I highly doubt it. But again, I know, we were talking about this in chat over lunch, SCARB, paper trading this approach. That's exactly, what you should be doing. Like we say all the time. We're always talking about if you're going to trade a new strategy, whether that's a halt strategy, a bull flag, doesn't matter. A new approach, a new strategy, something different. You should never do that with a real account. And if you do it with a real account, what do? You take what we call sample sizing, right? You take maybe 10 shares, not 1,000, right? Or if you're like too tempted to jump in with a large position on a new strategy, just paper trade it, right? Paper trade it. I traded it with a real account because I realized the position I put myself in wasn't a big position. I said I would lose $500 at most, and that's probably what I'll end up losing if I get stopped out. And it was okay because I accepted that from the get-go, knowing that I could take this trade on my account to demonstrate this type of approach and still be okay with the $500 loss, knowing that I could easily make that back. And I coulda, shoulda, woulda. But, unfortunately, HLBZ got me on the halt strategy. Not really popping off that halt. I had to cut it. I had to walk away. But ESSC wasn't a bad trade to make that loss back. So I'm down about $200 on the day, you guys can see. My marked P&L is 235 on the day. So if I close this out right now, I'll be down 235, which, guess what, guys? We have 40 minutes to go. 40 minutes to lock in a couple $100. Easy peasy. Realtor Phil said, hey, my sample size is 2. That's perfect. That's sample size, baby. 2 shares, 10 shares, right? Sample size. You're new to the market and you want to trade. Do not trade with $5,000. Trade with like $50, right? Because you're going to make mistakes. You're going to learn. And why lose $1,000 when you could maybe $20, $30 to learn? You still have some skin in the game. So as Mark Douglas would say, paper trade, paper trade, paper trade, or to have some skin in the game and you're ready to apply that in a real account, you do what's called sample sizing just to really hone in and fine tune that edge before you scale up. And then you go to 20 shares and then 50 and 100 before you know it. You're trading 1,000 shares and it's like, wow, this is easy, right? But you have to start small. You can't expect to go from 0 to 100 real quick, real quick. Got to go slow and steady. Slow and steady wins the race, guys. So if I get stopped out at 240, that's my stop. I got a hard stop in the system right now here on CRTX. 750 shares at $2.40. If I get stopped out, that is my $500 loser on that trade. And I would be down about $300 on the day, which is not bad. And we still have, again, 40 minutes to go. 40 minutes to go to see if there's, sorry about that, guys, any opportunity in the market. Exactly. I like that Realtor Phil. If you do 2, right, 2 shares, sample size, and you take profit, you can let the other one ride. And the thing is you're going to get great data from that trade. Now, the trade could be $2 and cents, right? You're not paying commission fees, which is nice. So, I mean, you have some data, and that data is, what was your entry? Where did you take profit? Where were your stops? You can go back and review that and say, okay, if I would have used, say, 1,000 shares, this is what the outcome would have been. If I would have used 5,000 shares, this is what the outcome would have been. And you could see the potential behind trading, right? Look at the percentages and the gains and build that into a bigger position plan. You can see the potential. And then how do you get to that 1,000 share position? Well, you go from 2 shares to 20, 20 to 200, and you just slowly scale in the bigger positions, doing the same thing you've been doing day in, day out. You don't change anything. The only thing you change is slowly scaling into size until you get to that peak. Okay, this is where I'm comfortable. 1,000 shares, this is my comfort zone right here. And that's what you stick with, and you lock in those basic profits. So right now, I mean, again, it's pretty slow still in the market. I thought the Fed meeting was today, 2:30, but CNBC was talking about how it's tomorrow. Fed will be talking tomorrow, so sure. But VLON is getting a little bit of a pop to it. Slow and steady on VLON. Strength is possibly related to attention towards the stock on credits. 5 short squeeze candidates right here. Another short candidate from yesterday. It's being talked about here on Reddit's VLON. I'm showing it only has 2% of its float short. That's according to Trade Ideas, and they claim that that's a updated daily. So let's see, it's showing it only has a percent of the float short. That's a really good candidate. I mean, VLON is right at a really, really big level of resistance. It's not shortable either. I was going to take a short right there at 650 because we're right at very strong resistance, 650. Spiking high, a lot of support, a lot of resistance at 650. So break 650, this thing could absolutely take on off. Your next level of resistance here on VLON, 733. Not a bad, the upside. A lot of resistance between 733 and 770-ish, right through some of these spiking highs here on the daily chart. Then the next big resistance level would be that 850 on VLON if it were to break 650. It's not shortable on VLON, so I can't really. Just going through our gainers and losers right now. R, P, H, and just looking to see if anything stands out. H. Really not a lot happening right now, guys, especially in penny stock land. So what is leading the board? We got Goldman Sachs is leading the board here today, up $7. BYND, nice little double bottom bounce on D. Derna, slight little green day, and we're starting to get into. My TD freeze again? Yep. Here we go. Now we're back at it. Point up 3. So, I mean, overall, it's not the hottest day. LCID here, guys. Lucid. Very, very steep uptrend on LCID. Very steep uptrend. We can connect the highs and see that we're inside of a slight rising wedge formation on Lucid. So, I mean, this could be maybe a decent short coming on up on LCID. As again, the stock is inside of this very nice big rising wedge. Just hit the top end of that wedge here, right up against a light level of resistance. Nothing crazy. So, curious to see if LCID can crack to the downside out of this wedge. I would consider shorting this at a crack of this downtrend here. What time does everyone get on? So I'm here every single morning, 7 a.m. Streams up until 7 p.m. So I'm in the office at like 6. Live stream is up at 7, and we're getting prepared. 7 o'clock, we're working, guys. I'm scanning the market, putting together our watch list, reviewing stocks, reviewing your stocks. If I have time, answering questions in the morning as well. But I'm here from 7, 9. We go live on the mic until about noon. And then periodically we come back in the afternoon for power hour. But that is rare. I like you guys to enjoy freedom. As a new trader, I would be in here from 7 a.m., 7 p.m., Monday through Friday. What's the point of trading when you're going to sit in your office for 12 hours a day staring at stocks, forcing trades? There's more to trading than money. It's freedom. So I really try to structure our day and our schedule around you guys actually being able to enjoy the freedom that trading gives you. That's why we do commentary in the afternoons, typically 2 days a week. But today I'm still here, guys, with the Fed meeting and all that good stuff. Normally we wouldn't be here. I tell you guys to get out of here. Go enjoy life. Go walk around the block or something. Go do something that you really, really want to do. Get out of the market. You already made your money, guys. Go home. So right now I am considering a short on Lucid is a little bit of a day trade. Just looking to see how this is going to continue to form inside this slight rising channel here. Maybe we run it off the bodies. The bodies. And trend lines are very subjective. So, I mean, again, we could run it off the wicks or the bodies. We're still inside of this very constricted wedge here, getting tighter and tighter and tighter. I got some $5 puts this morning at its high. What do you think? Jakey Lakey, what stock? What stock did you grab some puts on, my man? GRTX? I mean, yeah, I'm not sure exactly what stock you're talking about. If you're talking about GRTX, I don't know. I typically don't trade options on like penny stocks. It's rare that I trade options on penny stocks. If it was GRTX, we could check it out. I mean, it really depends on what you were buying them at. You were buying a $5 put. Was it GRTX? Okay, and you were going 3 days out. So let's go look at the bid. Let's send that to Blue. And let's see what this has done throughout the day. So this morning, I don't know when you got it, but, this is the option itself. It hit a low of 180. It's up around 250. So I don't know what your cost is on GRTX, but honestly, like, penny stocks and options are pretty risky, right? Because typically the spreads are large. Typically the IV is large. And when the stock calms down, you get crushed on an IV crush. Let's go ahead and add the implied volatility in here. I don't know why it's not in there. Let's add the volume. Let's add the open interest. Why these are not. And we can remove Vega, Gamma. There we go. That looks much better. So yeah, the IV, look at that, is 700%. So literally, the stock could sit sideways. The implied volatility could drop, which is going to bring the value of these down, just because the IV is so dang high. The volume count is not great, and the open interest isn't great. So what I would do is, I don't know where you were buying this at, but if you're green, I would just get out, man. Personally, unless it's a really small position and you want to hold it maybe for a gap down tomorrow. But here's the thing. It has such a high implied volatility that literally the stock could open where it closes, lose action, and the implied volatility could drop substantially, which would bring the value of your contracts down substantially. The only reason these contracts, right now, you could sell one for $235. The only reason why it is that price is because implied volatility is ridiculously high. You have 3 days until expiration. Only the theta, right, is pretty high, right, in comparison to the value. The theta right now on that $5 put 3 days out is 10. And the price is $235. So you can clearly see that the price is being artificially inflated by that implied volatility. And the great thing is you want to be a buyer, the IV's low. And you want to be a seller when the implied volatility is high. So if you're green, I would personally lock it up, right? Because you do not want to hold this and get stuck in what we call an IV crush, where the implied volatility drops, really brings the value of these contracts down. You're very, very fortunate right now to have a inflated price on these contracts to be able to sell those for a decent penny. So again, where did you get in at? Just curious. I see at the low of day it was 180. When we send this over to our chart and actually look at the options chart, we can see at the low of the day it was at a 180 at a low. Here around the open, it was right around 240. So it may be up, $10, $15. I would say on this particular stock, I would probably just lock it up, man. Yeah, and we go by market hours. Yep, so market hours, Eastern time. Absolutely. I mean, that's what I would do, man. Just because the IV, is so substantially high. And then looking at that theta, usually if you look at a contract, like for instance, go look at the SPY. Look at the SPY going 3 days out, right? Look at the theta, right? The theta is almost the same price as the value of the contract. Okay, that's a 1 day out. My bad. 3 day out. Theta is still fairly high, right? The theta is a 50 and the price like $2. That's a 25% difference, right? That means that you're going to lose 25% of this option value, right? Just by holding this a day closer to expiration. And when you go look at GRTX, typically, that you apply that even 50%, that would make this with a theta of 10, 3 days out. You would think this is a $20 to $30 contract. Looking at the theta, looking at the expiration, all that good stuff, right? You would think this is a $30 to $40 contract at most, being this close to expiration with a $10 theta. So we can clearly see that implied volatility is what's causing these options to be jacked up in price, right? So look at the calls, for instance. Right, look at your calls. That's a $10 call. the $6 theta, right? You're going to lose $6 for every day you hold this close to expiration. So those make sense. That doesn't make sense. Green is green, green is good. Green is green, green is good. So on a stock like this, especially a penny stock on that options play, I would definitely VLON is still pumping up. VLON hit the breakout scanner again. No, you're not trolling. Dude, 40 bucks is 40 bucks. Come on, man. $40 is 40 bucks. Like, as someone that may be newer to the stock market, still learning, 40 bucks isn't bad at all. Like, that's $800 a month. What's your account size? 1,000? Means you just made 80% on your account if you did that consistently every single day. So we have to really change our mindset. You know, 40 bucks is only 40 bucks, right? But when you add that up over the course of a month and compare that to your account size, there's potential, right? If you have a $1,000 account and you're able to make $40 a day trading options, it's $800 a month. That's 80% return a month. Now all you do is you start scaling into position sizing a little bit more aggressively on larger sums of money with a larger account, and you start seeing bigger profits. You take that 400, that 40 to 400, that 400 to 4,000. If you can tolerate that kind of risk that comes on with scaling up your position size. So green is green, man. I love it. Right now, I'm really want to short VLON, but shorts. Unfortunate. How'd Walmart do today? Walmart still just chopping around that trend line here. Still just kind of intraday chopping around that trend line. Not really a clean move today out of Walmart. We'll have to see. I mean, it's definitely overextended. It definitely needs to pull back a little bit, but I like Walmart coming on up. I do like Walmart coming on up. So yeah, there's really not a lot going on in the day, guys. I just came back to pop on. I thought the Fed meeting was today. I guess we'll hear more tomorrow. Again, right now, guys, I mean, very, very slow market. You know, STRN hit a new all-time high barely today at 640. Since then, hasn't really done too much. It's up 40 cents. PPSI had a pretty decent bounce there off that 9 EMA there on PPSI. I mean, that's not a bad little bounce for a possible continuation coming up tomorrow in the week. Here on PPSI. Let's look at some of these other prior day movers. NES. No, we can take NES off that list. BLU. We'll keep BLU on watch for the rest of the week. ROG. We never take Prog off. Prog seems like it always stays on that list. SGMA, nothing. SNDX, we can take that off. ISIG with the big pop and then just gave everything back. Where was the one that was possibly setting up for a mid-candle tomorrow? Stop. Was that SEAC? That was SEAC for a possible mid-candle tomorrow. Not the best. No. Yeah, it already popped over yesterday's highs. That wouldn't be the ideal mid-candle breakout. So really not the best mid-candle breakout here on SEAC, but still worth watching for tomorrow. CFVI, we can finally take that off that back burner list. I think we can do the same thing with LGN. Definitely IINN. Definitely AVCT. Still watch BFRI. ETPI, we can definitely take it off that back burner list. EFOY, we can definitely take it off. And DWAC back below the 20. Yeah, we can take GSTX. Oh, it's a 2-day meeting. Results tomorrow. Gotcha. Thank you, Corey. Thank you. GS. Yeah, you mean GRTX? Because GSTX, it's an OTC stock. I don't trade OTCs. If you talk about GRTX, I mean, the only hope that this thing has is to break the downtrend. This downtrend can be ran from pre-market. So that is like the only thing that we could see here on GRTX is a break of this downtrend above that 245 level, which was a little bit lower than we wanted to see. I mean, it didn't technically close at 245. It held 249, and that is that level of prior resistance. I mean, it came down just a little bit lower than we anticipated. But technically, it's still trying to hold in that level. And we can see that it's trying to bounce. But again, it just doesn't have volume, which was odd for this low float stock. Very, very low float stock to not really get any kind of action. And we had a good amount of buying too. Definitely saw, great volume to the upside, but overall just it didn't hold up. So right now, GRTX, guys, it doesn't look good at all. I mean, the only hope we have is if we see the stock miraculously break the downtrend and we see volume move in. But right now, there's just no opportunity here on GRTX. We haven't really had a lot of stocks hitting our high today momentum scanner today, so we can tell there's definitely a lack of momentum. We've had a decent amount of stocks hitting that breakout scanner, but not not a lot. Last one was ESSC. Other than that, we had VLON, and we can see this stock is trying, but it's still struggling at 650. HLBZ looks terrible. ESSC, I mean, looks terrible. And honestly, GRTX looks terrible. So right now, end of the day, guys, there's definitely not a lot. So I'll probably end my day down to 20-ish. Unless something happens over the next 30 minutes, it's like, wow. But I'm not seeing anything that's really screaming, wow, to me. You guys see anything that you want me to check out, guys? Obviously, we're trading lightly in the market, especially with swing trades. Obviously, I was saying Monday, Tuesday, Wednesday this week, spread very, very lightly with your swings as the markets could react abruptly to anything that's said, Fed meeting. So we definitely want to make sure that we are not putting ourselves in unnecessary risky positions. Okay, so as far as any swing trades, I'm personally not going to be taking any swing trades into tomorrow. The last thing that we want to see is something negative for night, tomorrow morning, and we start to see a lot of these stocks, back, even if they look like they're good setups. So definitely not, personally not considering any swing trades at this time, but I do want to go look at Bitcoin. There's a lot of people talking about Bitcoin, kind of like freaking out. I'm like, I'm still not really freaking out, guys. I'm really not. I'm still in it for the long term, the long run. Obviously, I was really buying somewhat aggressively for the anticipated bull run. I've been buying aggressively since like 40K on Bitcoin. I was accumulating. I'm here in like August, September. We had this nice rip. I was buying a little bit more around 51, which did bring my cost basis up. So I did take a little bit of heat on that really nasty pullback, but I'm still technically up on Bitcoin. I'm up on Ethereum. Now, yeah, a lot of my altcoins are currently down, but again, I'm holding pretty solid projects in my opinion to where, I don't have millions in these positions where it's like, man, I can't afford to hold. No, I can definitely afford to continue to buy these. I think they're great long-term solid projects. Yes, I was very eager, I guess, about the anticipated bull run. And we're probably not going to see it. You know, it's already middle of December. We are just completely selling off. I would be surprised if we see Bitcoin or anything really get, you know, action into the year, January. So now I'm just kind of like, you know what? I may like re-diversify a little bit. You know, I'm up in Ethereum, I'm up on Bitcoin. I may take some of those gains and allocate those to some of my worst performing altcoins right now. It's kind of like what I do with, you know, investments. You know, if I'm up on an investment and I'm doing really bad on another one and I still believe in that investment, I'll take some of those proceeds and I'll roll them in to my other low performing investments just to get a better cost basis and have more of a position, I guess, because I still believe in those companies and I still believe in these altcoins. So, I mean, what I could do is rotate some of these profits, basically reducing my position on Bitcoin and Ethereum, and roll them into like Solana and Quant, some of the other ones that aren't really doing all that great right now. But I'm still in it for the long term, guys. I'm still in this for the long term, you know. The way I look at it is, you know, we're adopting the crap out of it. You know, you have, you know, countries buying it. You have billionaires and millionaires buying it. They're accumulating it. We see that accumulation. In my opinion, 5 years, you don't really care if you're buying at 40K, 60K, 80K. You don't really care. Bitcoin is going to be much higher, in my opinion, where it is right now. So, you know, I'm okay with buying it at 60K because I still believe Bitcoin has a long life ahead of it. So I'm just going to keep buying and buying and buying and buying, and try and position myself for another pump to be able to trim some profits and reallocate that into some my other investments as well. So, you know, right now, the only thing that I see on Bitcoin that still kind of, I guess, maybe like is the trend line, right? The trend line that goes back all the way to the beginning of the year. So we see that massive uptrend from our first initial run up from around what, 20K, 10K up to 60. Came back down here in July, hit the trend line, bounced up to 64, 70K. Came back down here about a week or so ago and hit the trend line again. So we still have this long-term trend line holding up here on Bitcoin. I think I need a magnifying glass for the mobile version, or my eyes are going. The mobile version, you know, it has some new features built in. We're still working on the mobile version of the new platform, but you know, you'll be able to do the PIP. You'll be able to rotate the phone, put it in a full screen mode, right? Rotate the phone back, be able to chat. So we're integrating some useful features. So think of it like YouTube, where you can turn your phone sideways and see it, pinch and zoom, right? Picture in picture, whatever you want. And then when you rotate it back, it defaults beautifully. It's going to be a much better setup and integration with the new platform. So I don't think it's your eyes. I think it's just a little hard to see. That's why I recommend, you know, desktop. If you can load up chat on a computer, that's the best way to go, guys. Definitely. Just like trading. I don't recommend trading on your phone. It's challenging, right? Trade on a computer. Would I hold GRTX overnight? Maybe a pump first thing in the morning. That Clarissa, that's it's risky, right? That's super risky. I mean, because it's not performing well today, right? If it was actually looking decent into the day, I would say sure, hold a little bit, right? Right now, it depends on how we look. You know, if we do not break this downtrend and we're slipping below the low a day, I would have to get out, and my stop's at 240. I would be walking away. You know, if we can break this downtrend and see some end-of-day action, what I would try to do if I were you, just because of the way it moved and performed today, is I would try and like get half your position off the table at break even. And if you still want to hold maybe like say half your position, 500 shares overnight, you can. It's risky, but at least it's not as much risk as holding 1,000 shares overnight. I just, you know, we see the gap up, and right now it's a red day. If we close just like this, I would say it's really, really risky to try and hold this overnight. You might want to hold it into post-market to see if you get some action, but you would need to manage your position in after hours. I wouldn't say just set it and forget it. Like, okay, I'm in, I'm walking away, come back tomorrow. I would still sit here and just monitor this stock. You know, if it looks like it's doing great and it's pumping, start taking profit in post-market, right? If it's starting to crack and it's not looking good, I would go ahead and cut it because I would not want to wake up tomorrow and see the stock at $1.60, $1.70, $1.80, $2. I don't think it's worth the risk, again, especially the way it moved today. Oh, you got kicked out of your office. No! Josh, could you add the list of website requests equal when opening live broadcast that defaults to low resolution of high def? Oh, the new platform does default to HD. Do you want it to default to low? Because right now, I think by default, it defaults to low. If you're speaking of like it defaulting to a high resolution, the new platform, from my testing and from my experience with testing the new platform, it automatically defaults you to HD. But there's nothing that we can do to maintain that. It all depends on your internet connection and how YouTube's doing, right? We use YouTube because, believe it or not, YouTube is, they're free for streaming, and they're the best, right? It's a 2 to 3 second delay, and it doesn't really have tons of issues. There's some like $1,000 solutions a month out there. They're like 15-second delay. I'm like, that's not real-time streaming, and you're charging $1,000 a month. It's insane. But again, with YouTube, it really depends on their servers, right, and how they're delivering the content to you based on your internet connectivity and where you're located at. So I pushed in high definition, 1080p, and I push a very high stream on my end, the highest I can push it, just to make sure there's no issues on your end. But if there's still any kind of buffering or downtime with your internet provider, YouTube will automatically kick you from an HD like a 720p, or they'll uncheck you from live, right, and put you maybe an extra 2 seconds delayed just to remove the buffering aspect. So until we have a better solution with live streaming, something that doesn't cost, $1,000 a month at a 15-second delay, I'm all about switching and finding a better solution to give us these functions that we would like to have. And that was, again, Jake Owen. That was another reason for the new platform is, the mobile aspect. My goal is to have an app as soon as possible, an app. With that being said, temporarily, we are configuring the new platform to be very, very responsive and to work 10 times better than what it does now. And that's going to be a great, temporary solution for mobile devices until we roll the app out. But you guys ever looked up app development? It's expensive and it's a long process. It's not an overnight thing. It's an extensive process, and it can be very, very expensive. So, what we're doing is we're re-optimizing the mobile version for the new platform now, and we're just going to simply get feedback. So for every 100 traders in chat, how many of you guys are tuning in on your mobile device? If it's more than 20-30%, we'll build the app. If it's like maybe 2 or 3 people, it's kind of hard to spend 6 figures when it's not being utilized, so it's just something that we have to make sure it makes sense. And I definitely want a mobile app, but again, it's an expensive process. And if we can master this with our current platform, with just optimization and the responsiveness for mobile, and that solves all the problems, we're all set, ready to rock and roll. EFE's moving. PFE, it's been moving a good amount today. Not as much as yesterday. Yesterday was the trade on PFE. Today, I was like, I don't really know if it's going to break over that high. I would expect to kind of see it just sit there and tag it and just kind of sit sideways. There was some volatility out of the gate, but for the most part, it's been chilling right around that 55.70, 55.80 level, just really having a hard time breaking up over that level. So, I still think we're due for a little bit of a pullback short term here on PF. I definitely think we need to see a little. So we just had a decent little 20-cent bounce there on GRTX. We really don't still have the volume. It was an okay break of the downtrend. You may get, I would say, lucky the stock to rip back up the VWAP into the day, and at least you can put yourself in a position to walk away with break even or get out of the hole a little bit. But I would definitely not want to hold a big position overnight, especially walking away from the position. If I was going to hold anything overnight, I would be here actively watching it, right? And if it's like, man, it's not looking good, I'd be cutting it. Like, all right, not bad, not bad. I would manage it and make sure you're locking in profits because it's pretty risky to hold this overnight. But we can see it's trying. We can see it's trying. Right? I'm just watching the level 2. And it's really trying here, guys. So you may be able to get some money out of this trade, Clarissa. Look at that. GRTX end of the day, guys. Got a big old pop there. This thing's starting to move here a little bit. That's up about 30 cents now from that break. That was a big little 15-cent spike there over 270 up to 285. So let's see. We do have volume moving in. I mean, $3 is going to be tough, Clarissa. $3 is tough. I would definitely put yourself in position to maybe reduce your size at break even if it goes back to 3, and you could like sell maybe a little bit of your position, reduce your size to break even on half and still hold a little bit just to see if it continues to go. I think that's a good approach, especially if you see the stock struggling at 3. But now, I mean, you've just made back $400. You've just made back $400, $350. You're definitely putting yourself back in the green little by little. Just make sure you're treating this correctly, trading it right, and you're putting yourself in a position to recover some of that loss, But right now, that volume looked really good. Price action doesn't look bad. That time in sales is printing green. You can see that there's some interest here on GRTX. You can see there's some interest here coming into the end of the day. So I'm curious to see if we get a nice end-of-day run on GRTX. If we get a nice end-of-day run and we break over 3 in that VWAP, I think we could see some action here tonight. I really do. But again, we have 15 minutes to go until the end of the day. Anything could happen. But if we're breaking over VWAP and we're breaking over 3 right before the end of the day, I think we could see a little bit of action here, guys. I think we could. But be mindful that our 50-day moving average is at 294, so you may want to run into a little bit of issues and some resistance at 294 here. I mean, you're only down 14 cents a share, right? 14 cents a share. You might be like, you know what? Let me take 250 off the table. Let me go ahead and reduce my position to 250, just in case it comes back down, right? I'm not holding 1,000 shares. I'm holding 750, right? Just make sure you're working this trade correctly to put yourself in the best possible position. To reduce your loss and to put yourself back in the green. But right now, it's moving up. There's a lot of big orders coming through, guys. A lot of big orders. 16K, 30K. She's getting some action, baby. I would run a mental stop on this, I would run a mental stop now. The closer you get to 3, the more I would be, reducing my position. I think you may get $3 here. I think you may be able to get out here close at break even. I mean, you're down 10 cents now. You're down 9 cents. I mean, that's not a bad recovery here in today. I mean, such a strong move too that, definitely worth seeing about holding maybe half that position into after hours, like we were discussing. If we get a nice run up into the day, maybe reduce your position to half and hold half, as it's less risky to still see if you can make a couple bucks on the trade, but not take on that much risk if it doesn't work out. But you just had a nice 40-cent bounce off the break of that downtrend. That's not a bad little move here on GRTX. Again, $3 and VWAP is going to be tough. And 294 is going to be tough as well because 294 is your 50-day. And we still have to be mindful that that is a level of resistance that could be, holding this stock down. So I still have my 750 share position. I'm still working this myself. I may be looking to close this out because I'm now truly break even on the day. I may just go ahead and close this out and call it a day here. Let's run a tight stop on this. Let's go stop at like 275. Let's modify the stop. Let's run it up to 275. And let's be smart here. Go stop loss and 275. Oh, that's VLO. That is the wrong. That is not. There we go. That's the right stuff. Stop loss, and I got 750 shares. I'll risk another 10 cents. That would put me down like $100 on the day. I'm okay with that. I'd put a stop at 275 just because we were fortunate enough to see a nice little 25-cent bounce there. Cover some of that red. RTX 750. Stop in 70. Actually, 270. 74. Let's flip this to a 1 minute. We got about 12 minutes left to go. A lot of great volume on this pullback, decreasing volume pullback here. Still looking at the 1 minute. You know, the 1 minute suggests that we still have more buyers than sellers. And it looks like we're trying to get back up to 3 into the day. Good job, Clarissa. Hey, that's smart. That's smart. I like that. You know, from, hey, what do I do? Do I hold it? You know, building out the plan, figuring out what to do, and seeing this stock actually break that downtrend and go on a run, taking you, recovering a nice 40 cents a share there. 40, 45 cents a share recovery. That was smart. You know, not being greedy and saying, you know what? I'm going to hold it. All right, you know what? I was down, but now it's moving, so I'm going to hold it a little bit longer. Not being greedy, going ahead and just closing that position out. I like it. And I just got stopped out of my position at 275. That's how it's done. So I could be greedy right now and say, you know what? Screw it. I'm going to hold it. And it could come all the way back down to 240, and I could still take, you know, that bigger loss. I would rather say, you know what? I'm fortunate enough for the stock to run up an additional 40, 45 cents, get me out of the red a little bit. I'll go ahead and take that little paper cut and move on to the next day. So one thing that I think everybody should learn from today, okay, is we were testing a new approach. We were testing a new strategy. A lot of you guys this was a test. A lot of you have never, you know, scaled in and scaled out of a position and held a stock all day, right? We don't do that, right? Primarily, I scalp. A lot of us are in and out very quick. The one thing that you learned today was do not test new approaches and new strategies on big positions, right? If this was new to you, you should have been maybe like 20 shares, 30 shares, 40 shares, right? Not a huge position where it could have wiped out your account. No, I'm not sure what you guys' accounts are, but, you know, I look at it as, you know, I can tolerate $500 risks. I can tolerate $500 losses. But I also have a larger account. I don't know if everybody has that large account where they can tolerate a $500 loss. So moving forward, if you ever test any new approach or new strategy in the market, you cannot take big size. It's test. You're testing. Take test size. We call that sample size. Reduce your position, test the waters, right? Get your feet wet. Don't put yourself in a position to take on too much risk. Yeah, I'm scalping from now on, too much work to hold. You're telling me, Clarissa. You're telling me. That's why, you know, after 2 years of the buy and hold approach, after 2 years, I'm like, nope, there's got to be a better way. What's this scalping thing I've heard about? And I'm like, ooh, I like it. I like it. Scalperoo, baby. I like being scalper. In and out quick. Fast executions. Call that being a stock sniper. One shot wonder. Ooh, that smells good. I'm cooking food in the crock pot. That smells good. I'm like, who's cooking? That smells good. Oh, wait, that's me. Ooh, buddy. So I'm down $92 on the day. That is not bad. I will take that. I will take that. I didn't even trade big size today. I only traded 6,000 shares, so my commissions will be like $40. So I'm down. Let's just call it 150 on the day. 150 on the day. Yesterday, I was able to lock in about $1,200. So that sets me back a little bit. Just a little. We got Mexoids in chat locking in some good profits. Nice Mexoids. Nice profits there. I'm going to go ahead and throw my my red day up again. I like to be transparent, guys. So I will throw that $92 loss up. Profits, chat. You know what I did, Corey? right? You know what I did is I was kind of in the same position, right? I wanted to be a scalper. I didn't have a $100,000 account 6 years ago, right? I had like a couple grand. And I thought that, okay, my account size is small and I need to be a buy and holder to make those bigger gains. That's not what helped. You know, I continued to take losses and really lose a lot of money with that approach. And I was like, you know what? I have to do this, the scalping. Like, I have to be in and out quick. And I know my profits are huge. But what I can do, instead of losing my account and refunding it and losing it and refunding it, instead of losing the account and refunding it, what I'll do is I'll just continue to lock in these really small trades and get good at scalping. And all that money that normally would be used to fund my account after I blew it up, I can continue to add to my account. And that's what I did, right? I had a $5,000 account. I was making maybe $50 a day, $100 a day, right? But instead of blowing that account up and having to come up with another 5-10 grand, I was able to stack cash, save it, and put more money in the account. And I did that for like a year. I kept trading small base hits, not exciting, but it was profit. I was getting that consistency under my belt. And what I was doing is all the extra cash I had, I was stacking it, putting it in the account, stacking it, adding it to the account. Before you know it, boom, got a PDT account, you're scalping, unlimited trades, versus, you know, trying to be a buyer and holder and giving a lot of profits back and not seeing that consistency. I would just continue to add to my account. It took time, but I was able to still scalp in, you know, my approach in the market and at least see some type of profit. So, I mean, that's what worked for me. Maybe that works for you. You know, do what you want. Do what works for you in the market. You know, lock in those small little base hits, right? Green is green. Green is good, right? And then just, you got an extra, a couple $1,000, add it. Another couple extra $1,000, add it. And before you know it, you'll be far past that PDT roll. You'll be doing what you've done consistently for 6 months to a year, and you'll start to see those bigger returns. I love it. I love it. That and get off Webull. Yeah. I hear you. I still have a couple bucks in Webull. You know, GRTX real quick. GRTX. You know, that was a nice pullback on the 5-minute, decreasing volume pullback on the 5-minute chart into the 9 EMA. Right now, technically, we could see this 5-minute candle pop to $3 in the day. If we see that, if we see a strong close on GRTX, I would think we could see some movement here in after hours. Now, if we go red and it's a nasty close back down at like 260, 250, and it's like, man, what a nasty little sell-off into the day. I would say the stocks get a gap down. But right now, seeing that volume moving back in into the day, seeing that nice 5-minute pullback on decreased volume into the 9 EMA, showing some strength, showing a little bit of momentum, get a nice solid green close, a nice solid close here by the end of the day. I do think we could see a little bit of action here in pre-market, and you may be able to salvage a couple extra bucks on GRTX. And it really depends on how the close is. Nasty close, then I highly doubt traders are going to be interested. Decent close, I think we're all set. About 3 minutes left. 3 minutes left. What is GRTX going to do in the next 3 minutes? I would say if it puts in a lower low here, below 266, I would think it's done for. I don't think it's going to. If we can see a nice little pop over the next 3 minutes, back up to 3, I think we could see some traders move on into this stock here in after hours. Less liquidity, right? Bigger size is not going to be moving in and out of the market as much in pre-market, post-market, right? Less liquidity. Easier to move these stocks to the upside and the downside. But that would make me feel confident that we could potentially see RTX see some action in post-market. And again, you got to get over the VWAP, but then it's 340. Would have some room back up to 340. and then still the pre-market high of 91. All right, we got 2 minutes to go. Let's see what traders are going to do here with GRTX here today. Got 2 minutes to go. Let's see if buyers are here. If you see this stock getting bought up right at the end of the day, that's telling me that people are entering into the stock for, you see it getting bought up pretty abruptly, pretty fast into the day. If you see it selling off right at the close, that's telling me that traders are closing their positions because they don't want to swing trade it. So that's what I look at is the last probably minute to 2 minutes of the day, looking at the volume, looking at the price action. And you could pretty much get a great idea if traders are entering the position for a possible swing trade, or if traders are closing their positions because they not want to hold it overnight. And that'll give you an idea. You hold it overnight, right? Or should you go ahead and close it out? About a minute left to go. Exactly a minute now. Final 60, baby. Final 60 seconds. What you gonna do, GRTX? What you gonna do when I come for you? I don't know. $30 seconds left. So that last 30 seconds where you get a good idea if traders are moving in or moving out. See that, there's more selling than buying. Traders are moving out of the stock right now. So it's 50-50. It's a gamble overnight. It's a gamble. If anybody is holding this for some reason, which, again, I wasn't suggesting that as I was talking to Clarissa, when she asked about the swing trade and we were breaking that down. I don't recommend anybody swing trade it, but if you are, you need to manage it, right? You need to be managing it right now. You shouldn't be walking away like, oh, it's a swing trade. I'll see you tomorrow at 9:30. You should be actively managing this trade, especially the first 30 minutes of post-market. And you could close out your position in post-market if you need to. You need to change your time in force from day to extended, and you could place a limit order below the bid to get a fill, at least exit that position in post-market. All right, let's go ahead and load up after hours Scanus. Live stream is up until 7 p.m. You guys are all set, ready to rock and roll. If there's any opportunity, you guys will know about it. Right now, guys, it was a great day. It was an awesome day. Josh, we need to clone you. Why is that Steve? Hopefully it's Steve. For some reason, I feel like you're a Steve. S. Carby. Are you a Steve? Did I mess it up? We're going to go find out. SC? I'm going to look you up in our list over here. Let's see. It is Steve. I nailed it. Yeah, so why do you want to clone me? Why do you want to clone me? Why? I don't know why. I need to clone you. What are you going to do with the clone version of me? I'm scared. I'm worried. What are you going to do with me when you clone me? You gonna put me on the corner? Make you $10 a night? Oh, no. Oh, no. Okay, that's fine. I was gonna say if you're gonna rip me out, put me on the corner at night, like listen here, all right, you can clone my wife. She's gonna do much better than me. Okay, if you want to clone me for trading, that's understandable. I get it. But if it was something else, we'll make a clone of my wife, and she'll generate you more revenue. That's for sure. All right, and she's more than happy to help out. Probably hear me. Like the boat, yes. I like the boat. Turn a liability into an asset. And I said that like last week or the week before. I was like, you know what? I need to take my wife, that liability, and turn her into an asset. What can I do here? No, I'm kidding. That's our sense of humor with each other. That we have a really, really weird way of communicating and our sense of humor with one another. And her parents will look at us like, wow, you guys talk to each other like that? And it's just, that's how we've always been. And it's fun. It's light. It's fun. Laugh about it. Yep. But yeah, you know, you are cloning me, Steve. Every day that I'm here, every day that I'm talking and educating and dropping those value bombs, you're getting a little bit of a clone of me. I'm transferring some DNA to you. You know, you guys got this. You guys are crushing it. You guys are doing absolutely amazing. This month's been an awesome month, guys. Testing new approaches, testing new strategies, really honing in on our discipline, and we're seeing those results from the profits inside the chat, and not seeing a lot of negative in profits chat, not a lot of red. So I really like seeing what I've been seeing so far. We really need to stay focused on the theme of the month, discipline, and roll this in the next year, guys. Yeah, get off that mobile device. Before you know it, we'll be on the new platform, Steve. You'll be all set, ready to rock, ready to roll. Have a wonderful night, traders. Once again, the live stream is up until 7 o'clock p.m. Eastern Standard Time. You guys have my scanners here for post-market. If anything starts moving, you guys will know about it. Have a great night, team. Have a blessed evening. And I will see you guys back here bright and early tomorrow morning as we start Hump Day! Money Wednesday, baby. Have a good night, team. And I will see you bright and early tomorrow morning.